basis. And for all of the long-term investors who are tuning in, the challenge is, what do I do in this situation? And I think number one is days like yesterday and today should highlight to investors, this is why you can't completely pivot to cash. You have to think about diversification in portfolios, not just across fixed income and equities, but also across the type of equities that you own in your portfolio. And so, like we've talked about before, I've raised a significant amount of cash across my portfolios. I have started to slowly dip my feet and redeploy because there has been a disconnect with respect to valuations and where fundamental stand from companies that aren't that connected to what's happening from a geopolitical perspective. And I think now is the time you can do that, just knowing that the market can continue to go lower and that you should have some dry powder to continue to add, because at some point this too shall pass. And I do think that knowing that some of those worst left tail scenarios are off the table, we can at least have a little bit more comfort at thinking about where earnings go, which ultimately are going to drive the market. But there's still just a lot of uncertainty, and we should still really be focused on P&L protection as opposed to new idea generation at this point.
Good morning, Matt. Hiral on this side. That's an interesting point. New idea generation should be on the sidelines, but protecting your P&L is the key. Matt, currently, with the way things are moving, spaces where you think it's time to actually book profits and move on, or would you say protect your P&L in the form of staying invested?
Yeah, that's a really good question. And I think number one is you have to stay invested. And really what I've looked at doing even prior to this conflict is we had this significant rotation across a number of global equity markets this year, moving more into cyclicality, more economically sensitive type names. I use that as an opportunity to take some profit on some higher beta names in the portfolio that I've been very successful in, and I think that's what you have to do as an investor, and be willing that if you get a much better entry point in some of those names where you might still have conviction or just a smaller position, that you can start to add to them a little bit later. But I think what you want to make sure as an investor is that you have that proper diversification from a sector, industry, geographic perspective, and that you're mindful not to panic when things can flip, because day-to-day, close-to-close volatility is masking just how sharp the volatility is intraday. We have multiple percent swings within single trading days as a tweet or a true social post comes out. And so as investors, I think you have to keep building a shopping list and have an entry point at which you think those valuations look compelling. Just as I've seen some opportunities that have gotten to be so compelling, you just have to start to build a stake. But you've been thoughtful about it and you've been watching it for a long time to get to a level where you are comfortable adding for the long term.
That's a good point. James, I want to get your opinion on the statement that was made. And I'm kind of reiterating my question, but asking another perspective on that, right? Which is part of what Donald Trump said was that the strait will open up on its own. The fact that Iran only has oil to sell. Whereas the statements that have been made by Iran and the strategy that they have employed is one of destabilization of global markets, because they know that that puts the most pressure on allies of the United States, and that gets them what they want. This is why military strategists are talking about how Iran is in a strong position. They claim that they can keep this going for the next 6 months. Do you think that there's a possibility that the strait just opens up?
From what I've been able to see, I am not 100% sure that it's just going to open up by default. The United States is continuing to carry out a very effective military program and striking sites all along the coastline and deep into Iranian territory, where they've been able to eliminate the majority of the ballistic missile program and reduce the drones that are coming across and threatening. But there is still a lot more work to be done. And here's the thing, that program, those programs of building the ballistic missiles and building the drones was not built in a day, and it's not going to be eliminated in a day or even several weeks. I mean, they have had years to develop this. And I think that what we are going to have to see is two things really develop. Number one, I really do believe we're going to have to seize all of those islands, all the way from the Tubbs, all the way up to Karg and Larik Islands, in order to protect shipping, because we have seen Iran strike as far north as Kuwait. And so that's going to have to be put in place. And then the United States will be in a position to intercept missiles and drones in order for shipping to get through. And I think that there's going to have to be a strategy adopted where the United States decides that it may need to impose long-term sanctions or even an inspection regime on Iran in order to search out more missiles, more drone sites, and steadily decrease this. I think that, yes, the United States can get their Navy degraded and their military degraded and these programs degraded to a point where there is I think a point where the insurance companies become a lot more confident in their investment in funding these ships going through and those prices coming down. But with how jittery they have gotten recently, I think it's going to take a lot more than a good speech and a few more missiles sent over. It's going to take a lot more time. And so in a lot of ways, I am glad that the president has outlined a vision for 2 to 3 more weeks, because as I've said, there really needs to be a longer term and a much more in-depth attack pattern here before we can say that we've reached that point.
Got it. James, very quickly, just quick 30 seconds. As things stand with Iran also saying that they are not in any mood to negotiate, for now, the conflict rages on. Would that be the simplest assumption to make?
Yes, I mean, I don't see any real negotiating stance for Iran. I mean, they are continuing. Just today, as Trump has announced that they wanted a ceasefire, they sent over 8 drones to attack 2 different targets in Iraq. So very contradictory messaging here. And Iran seems to be just as much in the long haul as the United States does. So again, Iran is exercising its vote on when this war ends, and right now they're voting no.
Okay, thanks so much, James, Matt. Really appreciate both of you joining in this early for our morning, of course. Maybe not as early for you, but really, really appreciate your time and your expertise. All right, now let's take it across to Mr. Ajay Bagga. He looks at politics and markets with equal aplomb when he joins us right now on the show. Mr. Bagga, thanks for joining in. And much ado about nothing, isn't it?
Yeah, what was the point? He created a lot of expectation that maybe there is a ceasefire announcement, maybe there is an announcement of increasing the intensity by bringing boots on the ground. Neither of that outcomes came. So I would have thought the market should have been relieved. But what the markets are really thinking, Neeraj, is that over this weekend, there could be some action on the ground in trying to take some of the islands. That's the worst case scenario. That has not got ruled out. I think that's why we are seeing some disappointment. And second, there was nothing new. So it's the same thing of 2 to 3 more weeks. Threats to Iran, which we have seen have not really worked. And also on the Strait of Hormuz, a complete dereliction of responsibility. February 27th, the strait was open. And now the reopening of the strait is really left to people who were not involved in the war at all, but who have become the victims of this war.
Ajay, good morning. Hiral here. That's an interesting point that you make as well when you talk about the Strait of Hormuz. But, one of the expectations that you're talking about is on either side that the market was expecting something. I think the way markets were in overnight trade from the US markets, or if you see in terms of Gift Nifty as well, the indication was that there would be something de-escalatory that could be coming in as well. But now that Trump is coming out and saying that he will continue to war till late April, that is an indication that this is not ending, number one. And you're talking about striking Iranian power plants and sending Iran back to Stone Age. I know he's repeated it many times, but is this telling you that whatever happens, he is not going to let Iran do anything till the time he destroys their nuclear plants, even if they are coming back, because there are going to be trust issues there. And what is that actually going to mean then for the Indian markets? Because he's left it saying that the Strait of Hormuz will automatically open up when Iran is destroyed.
Indian markets don't matter for Trump, so that we should not have any issues with. Neither the Indian economy nor the Indian markets matter for Trump. We have an issue with FIs continuing to sell. Even yesterday, we had an 8,000 crore outflow. I think the government has been quite blind to this, that the FI taxation issue has caused a big problem, apart from our valuations and lack of earnings growth. What happens now? I think the biggest issue is that the strait stays closed at least for the next 3 weeks. The strait is mined to a large extent. Whatever tankers have come, the Indian tanker captains have said that they came hugging the Iranian coast because the main waterway has got mined. So they're coming between the two small islands. And super tankers might not be able to do that. There might not be enough draft in that to go through. So we have to watch out for that. Overall, I think there was no need for this speech if this is all that he had to really deliver, because this is a president who over communicates. So this was more a summary of all his social media posts and his daily press briefings that he does. If he was addressing the American public, he just reiterated whatever he has been saying. There was no off-ramp and there was no pumping today, unlike 2 days back where he really pumped the markets by saying that maybe I'm through, maybe we don't need to do anymore. And definitely we are not waiting for the strait to be reopened. Let China and the other importers of oil and gas through the strait, let them reopen it. So all this had been established. What everybody is really wondering about is, was there some other speech intended today and something happened overnight that this was not taken off? And otherwise, today, the market should have continued if the markets were believing. So the big thing is you don't believe what Trump says. We have seen that on February 27th and the action on 28th. So the market is worried that is there some escalation coming by? The second thing is what he has threatened Europe with. So is there an off-ramp coming on Europe instead of on Iran?
Yeah. Ajay, morning, Alex here. And it seems like we're being served taco for breakfast, lunch and dinner at this point, and even if it is not palatable. But the question is, from an Indian perspective, and I understand that it does not matter to Trump, but then we've got to identify what the best strategy for our investors are. And what do you think that is? Because you have 1 day of tremendous gains and then even a pre-open suggestion of an uptick today has been turned on its head dramatically. So at one point the indicative open was 65 points in the green. Now we're trading, or we're looking at a gap down of 450 points on the Nifty 50. So how do you respond in this kind of an environment, and what according to you is the definition of dust settling here?
Yeah, March 2nd, when I was on your show on the Monday, the first Monday after the Saturday action, I said, don't be in a rush. There were a lot of analysts saying that the time to pick up is when there is blood on the street. Maybe not, because the Indian markets are not inspiring confidence right now. And with such a big, global energy disruption happening, and we being 89% importers, we have not taken action enough over the last few years to safeguard our economy from a disruption like that. The government has done very well over the last 4 weeks in safeguarding the common consumer. But if you look at industry is suffering. And moment there is a pass-through post the state elections, if there is a pass-through of pricing, we have an inflation issue. So we can't wish that away. This oil disruption is not going away in the next 1 month, 2 months. that you have to start looking at picking stocks in India in a rush. I think we can take our time. SIPs, normal investments, monthly investments, those can continue. But in terms of allocating large chunks, I think we have to wait out. The December Brent future is still at $88, $90. So clearly, the market is not believing that oil will come back to that $65, $70 in a rush. Gas, we know 17% of the Qatari capacity has been taken out for the next 5 years. Gas is going to be a problem, especially as the European winter comes in. So we have some issues on the oil side, and as an oil-dependent economy, we do face that issue. It won't go away. I would say no rush for the Indian markets. Second big issue for us is the FII selling, which really exacerbated in March. We saw such record numbers of sales, and there is nobody addressing that at all, either from the government side or trying to change the taxation, which is a big problem for FIs. I think there is no addressal.
Ajay, just to follow up to that, and you've said it, a lot of people have talked about buying the dip and buying when there's blood in the street. There have been some that have cautioned, though, that just make sure that the blood is not yours. But having said that, in this kind of a scenario, in your opinion, and let me be very clear, I'm simply asking your opinion, how much cash is appropriate to take advantage of opportunities down the line?
Well, I would say 15 to 20% cash should be held at such times, because you will get good opportunities. We don't know, frankly, on the exact bottom, but markets have reached 2 years back now. We are back to March 2024 Nifty levels. So clearly, Indian market has been an underperformer. Just by mean reversion, we should catch up. But where is the catalyst is the big thing, because we were expecting a Goldilocks economy. We thought inflation has been curbed, RBI has cut rates. Now we take off. This year is the year of takeoff. I think now we have to look at, maybe we lose 6 months to a year more because of the oil prices. Somewhere it will come through. Either the government will pay for it, either the OMCs will pay for it, or the Indian consumer will pay for it. We saw the drama yesterday where aviation fuel was hiked, and then we had this bifurcation between domestic and international and stuff like that. So those are still band-aids. We need to move on energy security. We are sitting on 400 billion tons of coal. We are talking of gasification and liquefaction of 100 million tons a year by 2030. China is already doing 350 million since years. Hitler did it in 1930s and 40s. He ran his tanks on oil from coal. So it's not that the technology is old. We have the coal. We've just not woken up. So that is coming home to roost, and that can't be wished away. Either the government fiscal will go, deficit will go up, or consumer will have to pay, in which case inflation goes up, or the OMCs pay, which again, they'll go bankrupt. They have only the limit of their net worth. So we have to figure out where this problem gets addressed. Without that, there is no bottoming. I would not rush into the market.
Yeah, it's a good message to give out. Mr. Bhagat, as always, thanks so much for taking the time. Pleasure speaking with you. Have a great day. All right, it's time for a very quick break. Remember, we've already started India Market Open, so we're actually half an hour through. We'll be back on the other side to talk about the setup as well as stocks that you should keep on your radar. Bracing at this moment for a sharp downtick for the benchmark Nifty 50. Stay tuned.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed.
so should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your
Welcome back to India Market Open on NDTV Profit. Let's quickly look at implied open because that's giving you an indication of what's happening. 450 points downtick is what Gift Nifty is indicating so far. But let's quickly take you through what happened in trade yesterday. We've ended in the green with gains of nearly 1.5%, but that's what is going to be given up in today's session. That's what it seems like. We snapped that two-day losing streak in terms of markets, and we ended over 22,650 in trade. Names like Trent and Indigo, these were the top gainers on Nifty 50, seeing gains of over 5%. And you had actually the broader markets outperform benchmark indices as well. Their small cap 250 saw gains of nearly 3%, and that also snapped the two-day losing streak. Garden Reach Shipbuilders, Engineers India, Ola Electric, these were the top gainers. Ola was very interesting to see that double-digit gain that came in terms of the stock price on the back of the auto sales numbers that were reported. If you talk about the shipbuilding companies from a Cochin Shipyard, Garden Reach, all of them had a good run up in trade yesterday. These were the top three gainers on the defense index as well. Moving from there on, if you see the mid-cap 150, that also saw some smart moves. All your Nifty sectors ended in the positive terrain, barring Nifty Pharma. That's where that little bit of pressure that built in. The PSU Bank Index and Media, these were the top performing sectors, seeing gains, I beg your pardon, of over 3.5% in trade. Majority banking names saw some smart moves as well. So clearly, if you have to talk about yesterday's session, across the board, it was a sea of green. A lot of sectors did see that kind of gains that did come in. It was only Pharma which was losing out. And the reason I'm pointing this out is also, Neeraj, that in terms of Pharma, yesterday we had this conversation. A lot of bullish commentary that has been coming in with regards to Pharma as a sector. And now, yesterday was the day when you saw that profit booking come in as well.
Yeah, I mean, again, just so difficult, Hiral, right, these days to kind of call it as to what's gonna happen the very next day. But as we said all along, watch out for oil prices, and oil is the deep insider, right? So oil fell, the markets are okay. Oil prices have gone to 106 again today, and the global markets and Indian markets are also down. Now, you know, this move, this morning's move now effectively shows you how risky it is to carry leverage overnight. It's become that kind of a market. Previously, people were scared about carrying positions over the weekend or carrying positions for 3-4 days because you never know when news flow will change. Current market setup is, it's very difficult to even carry positions overnight, especially if you are leveraged. Because look at what's happened. If you were even remotely long on the markets yesterday, as a trade this morning, your stop losses will get hit. Now remember, quant indicators are actually showing markets are close to bottoming out. But when would that happen remains to be seen. Does it happen within the time frame of next month? Does it happen within a point frame of 500 to 600 points? I think it's very, very difficult to say right now. Cement may be emerging as a dark horse. A lot of people are actually talking about sectors as well. But per se, the market is not quite giving you the opportunity to do sustained long positions. 500, 600 points, at best, and then a corrective move comes in. In fact, thinking of, effectively, I was talking about quant indicators looking at bottoming out as well. You heard multiple notes talking about this. Jefferies India equity strategy kind of amplifies this point as well, that the Nifty valuation, according to Mahesh Nandurkar and team, is now about 17 times 12-month forward PE, which is attractive. They believe that large cuts in earnings estimates for March 28 earnings is very, very unlikely. The base case, I have not given the bull case here because you do not know when will the bull case come about, but according to them, the base case for the Nifty is at 25,000, which is a 10% upside. The bear case for the Nifty is at 22,400, which means that Jefferies believes that this is the bear case and the markets over a period of time will not be below this. Sure, they could drift lower a bit and then bounce back, but their bear case is 22,400. So maybe investors can take some heart from that. If you believe in their strategy note, of course, they've increased the overweight on banks and raised Pharma, something that Hill was talking, but has cut auto, cement, and some of the oil marketing companies. They are overweight on banks, which is SBI, HDFC, and Axis. And Sai Life is being added, bringing the pharma weight to neutral. So those are some individual pockets as well. But effectively, if Nandurkar and team's levels are to be believed, we are at the bottom.
Yeah, we are at the bottom. I think this is the third note where we are talking about we are at the bottom in the last couple of days. But I think, that's what we've been indicating. But I think even for them, it's very difficult to figure out as to what Trump is going to do, how markets are going to react in terms of Trump, right? So that's where the concerns are.
But guys, it's not just about Trump, right? How many people have been able to predict the bottom in the last several decades of markets, right?
But currently the situation is they're trying to predict a bottom because of Trump.
Sure.
So,
about predicting a bottom as well, if it's an economic cycle led bottom, it's a relatively straightforward math and your variables could shift, which might take it different. But this is unpredictability to two sides, both of whom are unpredictable, right?
Yeah.
What Iran will say and do, what Trump will say and do, more importantly, how we predict it.
Yeah.
It's the temperament of the two people. That's what I can call it right now. But let's quickly look at the factors. The short-term trend is still on the weaker side. However, the market is volatile and there is no particular direction that we can watch out for. If you see in terms of GIFT Nifty as well, as we've been indicating, a negative start to trade is what you're looking at. Your FIs have remained sellers in the cash market for a 22nd day, wherein the shorts are at 84% versus 85%. That sell on rise market, that is what has continued, and the risk of sentiment is something that can persist as well. In terms of levels, you're seeing an immediate support at 22,500 and resistance at 22,800 to 22,850. The major hurdle being 23,000. In terms of Bank Nifty as well, support is coming in at 51,100 to 51,000, resistance at 51,900 to 52,000, and the major hurdle at 52,200. But I don't know how much of these levels will actually hold water from here on, but you have some interesting notes as well, Alex.
Absolutely, and Bernstein is one of them. They're not necessarily talking about a bottom, but they're talking about good opportunities. They say that it's never been a better time than now to assess long-term growth. The Nifty 50 index now prices in a long-term free cash compounded annual growth rate of 10.5% today, which might appear as reasonable. It's the third lowest in the past decade. They say that the markets have corrected 15% year to date, and yet stocks aren't as inexpensive as they were 2 years back. The implied growth of 94 stocks under their study is at an average of 15.7%. IT, consumer discretionary as well as staples and energy appear to be less expensive compared to March last year, whereas all others are costlier. But even then, staples remain expensive as things stand right now. IT and energy are the only sectors which have both gone down in valuations and have a near-term EBITDA growth that is lined up as well. IT fears are AI-driven, while energy is led by the ongoing risks with fuel supply and pricing. The best way, in Bernstein's opinion, to play this is to invest at this stage by identifying stock-specific dislocations across sectors. The portfolio should have some risk from the impacted sectors and have some tilt towards sectors such as financials, telecom, and a bit of power and IT. So this is kind of like what several people have told you already. These are the places that you do your research and identify the list of stocks that you would like to add and use opportunities that will surely emerge in the coming days and weeks. Let's now get a check on the derivatives market, because today, of course, is Sensex expiry, and it's certainly going to be an interesting one to look at. Sharad joining in to tell you more about that. Sharad, morning.
Good morning. If you look at the overall markets, there was a total change. Asian markets, the global futures, all have turned red, and that's why the GIFT Nifty, that's down more than 400 points, and this is continuing. We had done a last check at around 745. That time also it was down, so there's no increase happening or any kind of recovery, and of course the global yields have also perked up. Looking at how the markets are shaping up, the FI's participation is still relatively low. We could say for the 22nd straight session, we are seeing sell-off in the cash market, and that's not stopping. And if you look at the FI shorts also, nothing much has changed. Yesterday, of course, there was a good move in the technicals, which we saw in the markets, but still the FI shorts are around that 84-85% mark. They have been largely unchanged for the last 3 trading sessions. The PCR numbers, which you talk about it, that's largely, we can say, is decent. It's at around 1 odd levels, if you could just show that level as well. And the overall call and put options, which we are seeing in the markets, the way it is moving around, just look at it, 22,500, both sellers and buyers are there in this options market, and at 22,000 levels also we see the contracts going up. But remember, a lot of positions which were made in the last trading session, they might reverse at least in the initial hour of trading session. If you could just show the open interest gainers and the open interest losers amongst the stocks, where we see there is a movement happening. Especially keep an eye on the metals, the PSU bank and the capital market theme stocks. There might be volatility in these counters going ahead as well. But net, if you have positions in the market, especially remember it's a truncated week, it's avoidable to have lower positions or no positions going ahead, because we don't know what happens on Friday.
Avoidable as in, no, it's preferable, right?
Right.
It's preferable to have. All right. Thanks so much, Sharad, for getting us those details. The reason why there is so much of volatility as things stand right now is the anticipation of what Trump would say this morning. And this is part of what he said. We've cut the operative portions for you from what is a pretty long speech. Listen in.
It made clear from the beginning of Operation Epic Fury that we will continue until our objectives are fully achieved. Thanks to the progress we've made, I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death. They're all dead. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the Strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing, and the gas prices will rapidly come back down. Stock prices will rapidly go back up. They haven't come down very much, frankly. They came down a little bit, but they've had some very good days over the last couple of days.
All right, so let's see how that pans out. Let's talk about the stocks that you should watch out for and trade today. And on my list, I've got NMDC. The total production numbers have come through for the last month, and they're up as much as 51% on a year-on-year basis. And total sales are up as much as 40%. This is good news, and the stock could react. However, the sentiment is negative. By the way, we moved to 375 points now, down from the earlier indicative opening of 450 points lower. The second stock, 400 points. All right. The second stock is Hero MotoCorp, and this is a company that has seen its total sales grow as much as 9% in the month gone by. 5.98 lakh units has come through. Sales in line with expectation, but the scooter segment has actually seen a pretty strong growth of 53%. Motorcycle sales up as much as 5%. And ultimately it does account for close to 89% of the total. I'm talking about motorcycles. Domestic sales were pretty okay at about 8% or thereabouts. Sales were stronger for TVS Motor. They've also come in line with expectations, but the sales in March growing as much as 25%, domestic growth as much as 25% as well. Motorcycle sales coming in at 18% higher, and scooters rising as much as 31%. EV sales up as much as 44%, and this is something of a theme where EV sales are seeing a fillip on account of worries of availability of oil or the expectations that prices of petrol and diesel will go up. Three-wheeler sales, which is key for TVS as well, is up as much as 46%. Hiral, interesting stocks on your list as well.
Yeah, I mean, I've mainly looked at banks, and this is on the mid-sized banks, smaller ones where the business updates have come in. Now, what's interesting is steady business growth is what they've seen in the month of March. Advances and deposits have expanded actually in double digits, and the CASA trend, that is what has remained overall mixed, where most of the banks have seen a sequential improvement. There is an indication that the credit momentum has continued entering the new financial year. Very quickly, Indian Bank, your CASA ratio is at around 39.86, so an improvement coming in there on a sequential basis, but year on year, you've seen a decline. Your total business is up around 13%, advances a 13% growth, deposits a 12% growth. Simultaneously, if you see for a South Indian bank as well, the CASA ratio has improved on a sequential basis and on a year-on-year basis, and your advances are up around 15 to 16%, and likewise your deposits are also up around 14 to 15%. And very lastly, I have a Tamil Nadu Mercantile Bank where the CASA has seen a growth of around 22%. In terms of total business, it's a growth of around 17% on a year-on-year basis and 7% on a sequential basis. Advances are 20% growth, which is pretty strong, and deposits have seen a 14 to 15% growth coming in there. In fact, you have Citi, which has come out with a report on Indian banks where they've said that Q4 has historically delivered strong year-end surge in credit and deposits for banks, and early quarter weakness meaningfully has been altered. The FY26 setup has altered the FY26 setup, I beg your pardon. Now, last fortnight data shows that the system deposit outflows of 1.79 lakh crores is what you should be watching out for. The Q4 numbers in terms of deposit growth comes at around 0.6% versus a 1.7% to 2.3%. So that is seeming to be slightly lower as compared to what was recorded. And the weaker mid-March base is what you're looking out for amid tight liquidity conditions. If you're talking about the deposit growth, that will be the key swing factor that you should look at. And the credit growth may stay relatively resilient. That's what Citi is indicating so far, Neeraj.
Two stocks at my end. First one is V-Mart, the Q4 business update, and that is pretty strong. So Q4 revenue grew about 24% to 970 crores, which is circa 5% beat. I think we're missing that part about it being a 5% beat, but it's a 5% beat, and which is the important thing. 16% store additions and same-store sales growth recovery seen at about 12%. The company added 29 new stores in the quarter. Seems every retail chain is doing one thing, which is adding stores. And it closed FY26 with 577 stores and 80 net additions versus estimates of 70. So clearly they have done things right when it comes to store addition. Could help. And you know, guys, autos could be very, very interesting. So I'm highlighting Ola Electric because the March month-on-month numbers, registration jumped about 150% to 10,117 units versus 3,973 units. Is India thinking of going electric instead of trying to rely on costly fuel even for two-wheelers? And are Ola's numbers a sign of that? I think remains to be seen, but certainly something that you want to keep an eye out for. By the way, guys, the auto sales numbers for most companies that I saw, I mean, maybe we spoke about it briefly, but if we haven't, just that one point that I'd like to make on auto sales, that when you think of what has happened in this last month gone by, for most auto sales numbers, things are either in line or below estimates. YOY prints masking sequential softness. I think that's the trend. So you look at the inline monthly sales numbers are from Maruti, Royal Enfield, Volvo Eicher commercial vehicles, so both are in line, Mahindra and Hyundai. What is below estimate? Tata Motors passenger vehicles, I think they've done only 5.7%. Tata Motors CV is about 11%. TVS, interestingly, is down 1.9% month on month. And Escort's about 17% and Ashok Leyland 14.6%. So, nothing's better versus Ola.
Exactly, and that's the reason why Ola saw that 14-15% jump yesterday. But I want to point out Hyundai as well. That's the only one in the passenger vehicle segment, Neeraj, which has seen a degrowth this time around. From what you're mentioning as well, if you look at Maruti, Tata Motors, M&M PV, the growth is 8% to 20%.
You're talking about YOY numbers,
yes,
right?
YOY numbers. And no, I'm talking about FY26 numbers.
Yeah, so I'm talking about the month.
Correct.
The month gone by. Hyundai
just adding to what you're saying, and Hyundai, if you think about the stock price as well, that's gone below the IPO price already. And that was one of the biggest and the largest IPOs that everyone was watching out for. So I think that is something that we need to take into consideration as to what's going wrong there.
Yeah, we're going to have a conversation today about that.
Yeah, just keep in mind though, Hyundai is a stock, while it's below IPO price right now, and it listed just on the IPO price, it went up all the way to 25, 2600.
Yeah, it did.
So it's actually a good move and then it's come off quite a bit. So keep that in mind. Yeah. So let's get in our guests to talk about all of this and more, guys.
Yeah, absolutely. We've got sitting with us at the table, of course, and Neeraj could have done that, but I'm just
I love Alex's voice.
Stealing the opportunity. Kush as well as Parag Bhai joining us this morning. Gentlemen, thanks so much for taking the time. Did you wake up earlier than usual, or do you normally wake up that early?
Normally I wake up at the same.
But then you did something different at 6:30, right?
Yeah, definitely.
Yeah. But what do you think?
No, so basically it is like, he has said that he's going to attack for 2 to 3 weeks more and hit them hard. And the thing that Strait of Hormuz is left to us, people like us who are the users and who are, he said that we don't import anything from Strait of Hormuz. So Strait of Hormuz is now world's problem, unfortunately. And so that is why we are seeing Brent at above 105. And that's a problem. That is why GIFT Nifty is down 300 or 350 points, whatever. So I would say that, it's a problem which market will have to tackle with for next 2 to 3 weeks. Let's see.
Kush, how do you trade today? Good morning.
First of all, very good morning. This seems like a rather crude and unpleasant April Fool's theme.
Crude and unpleasant? Okay.
That's a wordplay. I didn't even realize it.
I get it. Okay.
But I think this is more of a knee-jerk reaction to what perhaps the market was not expecting, right? I mean, we were expecting some sort of de-escalation. That didn't come about. If this cap down does come about, there's a good possibility that we might breach Monday's lows. But like I said, this could well be a knee-jerk reaction to what the markets were anticipating and what the actual news flow is. But like I've maintained in the last couple of sessions, look at the internals a little more closely than the Nifty level alone. There will be high volatility on the index. So look at the internals like the RSI, like the market breadth, like we've been discussing how many stocks are down, below the 200 and the 50 and the 20-day moving average on NSE 500. If those things get worse, that is actually a bigger sign of worry rather than the Nifty level alone. So for now, that view continues that you don't trade the index, keep eyes glued on the internals and stay stock specific.
Okay, so if you have to stay stock specific, Kush, in this momentum today, which is on the downside, what would your stock picks be? Because they'll have to be the reverse.
So just as a caution, after I saw what the GIFT Nifty did at 6:30, 6:45, you have to add a short call. There is no two ways about it. But you still look for opportunities. You could, like I've been saying, go on adding stocks more to your watch list rather than your portfolio. But there are these ideas, to add to your portfolio as well. And in this case, 2 long calls, 1 short. So Granules and KSB are on the long side. Cholafin, weak structure on the short side. So just to give you those levels. Granules, this stock has been doing rather well consolidation in the last couple of days, but that's on the back of very good moves, in the days prior. So 642, 657, these are your levels on the upside. 615 is where you keep that stop loss. KSB, on the contrary to rest of the market, has done very well. Even if you look at some of the weekly setups, it's doing rather well. So 850, 872 are your targets. 805 is where you keep that stop loss. And like I said, Cholafin has had a weak structure for a while. Rebound and any kind of bounces should be taken as an opportunity to go short. So on the downside, your targets are 1360, 1345 with a stop loss at the 1390 mark.
Okay, so Chola Finance is one stock that I'm taking away from what Kush is indicating so far. But one sector that we should be talking about is defense as a pack. Just look at yesterday's move, the kind of gains that did come in for defense as a sector, second largest gainer in terms of gains yesterday. And if you see the performance as well, from in the month of March, it has been negative. So that's the interesting point over here. You've seen cuts in that range of almost 7 to 20% across the companies, and from their all-time highs as well, the stocks are down in that range of almost 11% to 55%. So again, it's a short-term bounce back that we've seen in terms of defense as a sector. And recently, we've seen the FY26 capital outlay, which was at 1.86 lakh crores. That has been the overall utilization there has been around 99%. And moving on, the additional outlay also, which has been announced. Let's get in Amit Anwani, Vice President Research at PL Capital. Amit, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question to you is, firstly, the Ministry of Defence have actually achieved their full capital budget utilization in terms of FY26. If you talk about the additional outlay that has been announced as well, you are seeing a lot of beneficiaries that do come in. The question over here is, execution becomes a key because orders are flowing in. How would you actually look at the entire setup for the sector at this current point in time?
Right. Thank you and good morning to all. So I think, as you rightly said, even when we see the provisional numbers which were announced for 2-3 companies, including HL, where the full year growth target was 8%, but because of the supply and geopolitics, they missed out to 4% final number for full year. We saw that also for GRSE, the Q4 implied is negative 7% in terms of revenue, but full year they were able to display a good performance. So I think I would say it's a mix. So the companies who are highly dependent on supplies definitely have seen a challenge, especially HL. We saw LCA, HTD 40 getting delayed. And I think there's been immense focus from past few years, as we all hear, in terms of localization. We saw it starting with the negative import list, and then we saw the schemes like IDEX promoting the private participation so that the vendor base evolves for the large OEM players to have a sustainable supplies and execution. So I think the government is aware of it, and there's a lot of focus in terms of transfer of technologies, as we have been hearing from a few years now. So I think structurally everything is indicating very strong. We saw defense budget getting a very strong jump for F27 at 2,20,000 odd. And as we speak, we are seeing AUM for this year at least more than 6.7 lakh. And when I see the numbers for past 2-3 years, the averages are much above in terms of AUM approval, which clearly indicates a very strong ordering ahead. So in terms of structural direction, this is really positive, but definitely supplies is something which is currently a near-term challenge. Yeah.
So, Amit, and thanks for that gist. Now I wonder, so if there are supply challenges, but decent order books, it would depend, one, on companies which have got the supply chain reasonably sorted, and two, which have shown historical prowess of execution. I would presume that's the simplest way to go about choosing. Where is it that you find a combination of both with the added vector of decent valuations thrown in?
Right. So one way, as you rightly said, to dissect between companies with supply issues and companies who have kind of sorted it out. So I think the electronics, especially the defense electronics space, Bharat Electronics has done a lot of localization in terms of systems, subsystems, and probably they'll be moving to component level wherever there's a dependency to at least localize the vendor. So I think defense electronics companies have progressed well, but we have seen a sustained kind of challenge, at least for past 2 years. We have seen HL engine supplies have been a major issue, and again this year they have not delivered any LCA. We have seen BDL, the numbers are coming on and off because of the supply issues. So I think these are few companies where there's supply issues, but we are seeing consistent performance on shipbuilders, especially GRSE. There's a very strong, consistent performance. Bharat Electronics and other private companies are delivering strongly. Now, in terms of valuation, so I think if you see valuations kind of attractive for HAL at the moment at probably 22, 23x 2 year forward. But I think in terms of if we take a longer call and if these things are resolved, HAL is something which can really deliver the value from here, even if they deliver 8 to 10 aircraft in F27, that itself will be a very good deliveries and performance which they can display. And I think in terms of valuation, shipbuilders, at least GRSE seems a bit attractive to me at 15, 16x EV EBITDA and about 24, 25x price to earning.
Okay. I just want to confirm, Amit, you've mentioned, and good morning to you, you've mentioned HAL and you've mentioned GRSE. The reason I ask is that all of these companies have dropped quite substantially from their all-time highs. In fact, the only one that has been relatively unscathed with a drop of as much as 11.5 from all-time high is BEL. So how much is currently in the price of what you've just described? And beyond HAL and GRSE, are there any other opportunities as you see it right now?
Right. So BEL, I think on my numbers is at about 36, 37x. So definitely a bit attractive versus the price of 460. There has been a correction. And in terms of performance, I think the provisional number indicates 3.5-4% implied Q4 growth. The kind of provisional numbers they have given for full year, which is about 15% kind of growth for full year. And in terms of intake also, they have achieved their target in terms of 27,000 order inflow target, which they provided at the beginning of the year. They have more than 30,000 announced order for the full year. So definitely quite stable and healthy in terms of performance. I think valuations is something which is still at 36x on F28. So there's a limited upside, I would say, in that space. But structurally, obviously, the company has been guiding that they'll be targeting at least 27,000 plus order intake even for the next couple of financial years. And there would be one large order, QRSAM, which is upward of 30 plus thousand crore, which is on the anvil, which was expected to be cleared by March. But we have to see what is the status there. So I think there are large opportunities, but largely in the price. But the space where the valuations are corrected, they're facing near-term challenges, but that is making the valuations attractive at the moment. That is there. And in a nutshell, as I said, I think versus the OEMs, we are positive on the whole defense electronics space, including the private players there, which are currently not in my coverage, including Astra Microwave, Data Pattern, Solar Industries. They have been beneficiary, we have seen in the past 12-24 months in terms of order intake they have achieved. So definitely this is the space to look at.
All right. Amit, thanks so much for taking the time. Pleasure speaking with you as always.
Same. Thank you so much.
All right. We have to slip into a very quick break. We've got several other stocks that we will discuss before the start of trade, and that includes Hyundai. Stay tuned.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist,
Back with India Market Open right here on NDTV Profit. Now, some bad news for chemical sectors. Now, this is not a done deal as yet, but what we are learning from brokerage notes is that the government is planning to exempt custom duties temporarily from 2nd April to 30th June on some chemicals. Now, this is obviously being done in order to facilitate the availability of those chemicals back home in India. China may have oversupply issues, and therefore those exports or cheaper imports will now technically come into the country. It is arguably the right move to do so that the industries which depend on these chemicals, their input costs and the availability is sorted, but it does hurt in the chemical sector. So various names out there. I'm not getting into individual names because this is something that the government is planning. We do not have first-hand confirmation of the same, but if you see moves and sharp moves on some of the chemical stocks today, you should know why that is happening. This is the reason. And guys, we'll probably see multiple such things happening over the course of the next few days because frankly, Alex, Edel, Parag, Kush, the government is left with no choice but to do some of these things in order to increase the availability of stock for end-use industries.
Absolutely. So these are unprecedented times. So government will do unprecedented things to counter that, right? So, for example, that increase in excise duty, reduction in excise duty on petrol and diesel was one. Export in excise duty on ATF and petrol was another. Or diesel. So I would say that this kind of steps will keep coming till his oil prices and gas prices, availability and prices both normalize.
Yeah, helium is also another factor, right? Yeah. With Qatar having shut down. So several things. But in the meanwhile, business continues at banks?
I mean, business continues with banks, and it seems to be pretty okay in terms of what's happened with regards to the growth in the month of March. Indian Bank, South Indian Bank, Tamil Nadu Mercantile, as well as Karnataka Bank. These are the four ones which have reported numbers as I already took you through. Parag bhai, any views when it comes to any of these? Because the CASA ratio on a sequential basis is improved. Your deposits and advances both have seen a double-digit growth for all of these banks, except a Karnataka Bank, right? And Citi has come out with a note as well. What they are saying is that the credit growth may stay relatively resilient from here on, and the deposit growth will be the key swing factor for all of these banks. What would your view be?
So basically, March quarter, I am also expecting even from large banks like Axis, ICICI, to some extent HDFC Bank also, SBI also. I am expecting decent growth YOY and QOQ in terms of loans and deposits both. And margins, of course, will be somewhat under pressure for some banks, but that is the last leg of it. Because you had a 25 bips rate cut, and most of the banks, 60% of the loan book is floating. So you'll have to pass on. But I think banks like ICICI and few others will hold on to their margins also. And asset quality for this quarter has been excellent. The only worry which will come to think about is in next 45 days, if this entire thing about oil availability and majorly gas availability and the prices, if that doesn't come down, then you will start worrying about asset quality issues in SMEs, MSMEs, and government might have to come out with some kind of moratorium. Again, unprecedented steps like they did in COVID to protect MSMEs on one side and to protect banks on one side.
Okay, all right. So, but these are the smaller banks that you're talking about. The larger banks are relatively insulated.
Yeah. So basically, their filters are very tight. So you will see if this continues for very long, then only they will see some impact. Otherwise, I would say that larger banks like HDFC, ICICI, SBI, Axis, will be more or less insulated if this entire worry around availability, mainly availability, doesn't go beyond 30 days.
Okay, let's talk about the technicals for the banking space.
Let's start from the top, right? I mean, yesterday we did see the Bank Nifty, in fact, the Nifty also, but Bank Nifty in particular come off the highs rather significantly, and the rally was primarily driven by the PSU pack. The private banks will continue to face an issue as long as the FII selling remains in hangover. It's a given thing, and we've been seeing that, the recovery on HDFC, on ICICI that was sold into, and the heavy net outflow number on the cash segment on FII just confirms that. So so there's a good possibility that the PSU packs might perhaps have that less of a technical negative working for them. But very interestingly, among the stocks that Hiral mentioned, Indian Bank looking like a good setup, support zones being respected and the stock on the rise. But the star of that entire pack is KTK Bank, Karnataka Bank. Absolutely against the market trend. This has a very strong ascending channel. Any move towards the lower band is being bought into and it's seeing a rise. So yes, if you want to invest or trade in some of these names, in a market like these, you should stick to where the strength is, and Karnataka Bank right now provides that.
Okay, strength coming in terms of Karnataka Bank as we speak. But moving on, cement stocks will be in focus as well, because reports are indicating that the prices are set to move higher in early April, but distributors indicating a zone-wise increase across markets. Let me head across to my colleague Ridhima Bhatnagar, who's getting us all the details of what she's picked up with her dealer checks. Ridhima, over to you. What is the kind of price hike that could be anticipated, the markets that you're looking at, and the kind of impact that we're going to see?
So cement prices could rise by rupees 20 to rupees 50 per bag in the first week of April as per the cement distributors. This is mainly due to the rising input prices due to the Middle East war. Now zone wise, if we were to see, North zone could see a price rise of rupees 20 to rupees 30, South by about rupees 30 to rupees 50, East by around rupees 20 to 30 and West by rupees 30. This is as per the distributors. Now stocks in focus include your Ultratech Cement, Ambuja Cement, JK Cement to name a few. The main reason behind this cement price rise is the shortage of propylene, which is used to package your cement. And not just this, freight costs have also risen by 8 to 18%, and they form around 20 to 25% of the total cement costs. Not just this, industry sources have also told us that there is a rising demand, which could ultimately lead to price hikes as well. And cement is also allied to many industries. Firstly, a real estate sector, around 18 to 22% of cement is used there. Major dependence in the infra sector, around 80 to 90% of usage of the cement is there to build your roads, bridges and dams. Analysts view that this price increase could be enough to offset the rising input prices, but a lot will depend on the market conditions and how long the conflict lasts.
It's a good point. Thanks so much, Ridhima, for getting us those details. Now, 20 to 50 rupees in various places. So, in South, there's expected to be more of an increase. So, Parag bhai, this was warranted and it was meant to happen. It hasn't yet happened in all geographies. This is what we picked up, or Ridhima has picked up. But how do you take this? Is it relatively positive for earnings?
Yeah, it is relatively positive. Because, see, I'll tell you, one is that there is a lot of new capacity which was supposed to come. So there was a view that in cement we'll not see price hikes. But this is a forced discipline for the cement companies, because their costs are only going up. Petcoke, coal, as she said, packaging cost, everything is going up. So 15 rupees to 20 rupees price hike was required. And whatever, as you rightly said, in South the prices were already depressed. Yeah. So the prices are going up by higher 30 to 50 rupees in South. And I think in Central region the price hike is very limited. And I have been very constructive on the sector in last 15-20 days, and I have been adding to cement names like Ultratech and Grasim and Remco in my portfolio. Apart from Bharti Airtel, of course, which remains insulated from all these problems which we are seeing. So I would say that I remain very constructive, and Ultratech, in my view, based on my numbers, should do a bit of 5,000 crores in Q4, which is a phenomenal number. Market cap is 3,15,000 crores. And Grasim owns 56% of it. And if you see, Grasim's market cap today is 1,76,000 crore. So if you just do maths, 56% of 3,15,000 crore is 1,76,000 crore. So actually, if you don't give holdco discount to Grasim, entire standalone business of Birla Opus, The caustic soda, where they are market leaders in India, I mean the largest player in India, and caustic soda spreads have also gone up, by the way, because Europe is facing a lot of gas shortage. And in making caustic soda, the main thing is power.
Right.
So I think there also Grasim will benefit. VSF is there. They are again largest player, 90% market share of VSF in India. So I would say that plus, Birla Opus is now 5,000 crore brand and now heading towards 10,000 crore by FY 28-29. And as they achieve scale, their also margins will improve. So I would say that plus they have 52% stake in AB Capital, which is valued at 40,000.
Very attractive. Right
Grasim offers deep value, I would say.
And does that also indicate on the charts?
I'm afraid not. There is a recovery, and by the way, this recovery came about a little early. I'm talking about the cement pack as a whole. A lot of these names saw this recovery a little prior to what markets and a lot of the other sectors did. But is it still meaningful enough to have a momentum play? Afraid not. But then within that also, there are a couple of stocks which actually do stand out, and they are Dalmia Bharat and Ramco Cements. The recovery on these is fairly encouraging. Some of the key resistance levels being taken out. So if I were to bet on something in the cement pack, it'll be Dalmia Bharat and Ramco Cements. The recent lows or maybe just above that should be your stop losses if you do enter into a positional trade in these names.
So just to add from my view on because oil is up today, these stocks might go down today in spite of the price hike news. But I think these are good opportunities to buy if you have a slightly longer term view.
Got it. Okay.
And whatever offers in Parag Bhai's tone deep value will never have momentum on the charts because it offers deep value only because it's gotten punished.
That's a good point.
So bear that in mind.
That is a good point.
What for the tonality? Deep. Okay. Is there deep value in Hyundai? I think that's the other key question, right? So, the stock remains under pressure as domestic performance continues to lag peers. Sales growth trails the broader passenger vehicle market too. Even as the rivals are gaining, keep that in mind though, that for month-on-month numbers, Hyundai was amongst those which probably delivered in line. But we are not talking really about a month's time frame, are we, Sharad? We're really talking about what's happening over a period of time.
Exactly, that's right. And this is a long term we have taken. Remember, the stock is down 25% on a year-to-date basis when it comes to Hyundai. And the domestic sales, that's down for the second consecutive year in FY26. So there are some issues in this counter. Remember, there has been GST rate cuts which have been beneficial for the other peers in the auto sector, but the momentum in the passenger vehicles, that is where it's lacking. It's down, it's negative, it's almost minus 4%. If I look at M&M's numbers, Tata Motors number, even Maruti Suzuki's, all of them ranging between 8 to 19% plus. Now there are some concerns coming in, especially on the heightened competition. The domestic market share is under the pressure. The competition is heating up in Creta segment as well, especially for the 5-seater SUV we talk about. There are certain brands such as Maruti Victoris, Tata Sierra, Renault Duster. That's a relaunch which is happening. And that's where the 5-seater SUV is seeing increased competition and overall, of course, on the capacity and the new models as well. But let's look at the capacity addition also of Hyundai, how things are panning out. They're expecting 2.5 lakh capacity additions in Pune plant by 2028 and almost a total of 1.1 million vehicles production capacity by FY28. And now they're expecting to invest almost 45,000 crore rupees over the next 4 years, and 60% will be there in the product and the R&D, while the 40% will be there for the capacity upgradation. Now the FY30 targets, they are lofty. Importantly, they are focusing on 26 new launches in the next 4 years, 7 new nameplates and 7 facelifts would be also there. That's like a kind of an addition, and the model lineup includes 13 ICE, which is your internal combustion engine, EV, HEV and CNG vehicles by FY30. That means it's a proper product, we could say, across the segments. We can see launches happening, and the revenue target is the most important to track, 1 lakh crore by FY30, and they continue to maintain the double-digit EBITDA margins of 11 to 14% in FY26 to FY30. So these are the important targets for Hyundai, but definitely there are a lot of factors which is going against the company right now.
Yeah, I mean, absolutely. Thank you for that. In fact, after a very long time, you've seen a Hyundai slip from its long-held second position to the fourth position in the domestic passenger vehicle segment for FY26 as well, if you have to look at the entire year. Parag Bhai, a view in terms of Maruti, because overall, they've continued their dominance in the mass market position. M&M, it's your SUV portfolio which is strong. Tata Motors, SUV sales is what they're looking at, but they have leadership right now in terms of the electric vehicle segment. And now we're talking about a Hyundai, which has slipped to the 4th position.
So basically, I am right now underweight on auto since long actually, because my view has been that steel prices have gone up significantly. 15 to 18% steel, and further it will move up. So there will be a margin pressure. Plus, you will have some sort of because of course, government has reduced excise duty on petrol and diesel, so customer is not affected right now. But if this situation continues for long, I think again there can be some problem over that side also. So I would say that I am little bit going underweight on auto right now. But the prices, of course, as you rightly highlighted, Hyundai price is below IPO price, and so prices are becoming interesting. But right now, I'm more focused on, as I said, Bharti Airtel, Cement, and banks kind of names.
Okay, but remember, viewers, that maybe for the first set of the bounce, whenever it were to happen, the safety might be in the large caps. FIs, if they were to come back, would come to the large cap space, would come to banks. So maybe that's a cohort of stocks that you want to definitely keep in mind. Some of the more stocks which bounced yesterday and might see a bit of a corrective move today, I think you can place Interglobe Aviation right at the top of that list, right? A big crude sensitive, went 8% higher in trade yesterday. On balance at the end, ended about 6% as well. Kushbora, today it might start off lower. Yesterday, rightfully so, there were some long calls given. For somebody who maybe even bought it at the fag end of trade, and therefore will see some losses on open, good to stay long on Interglobe, good to cut the position, or is it difficult to say because it's so sensitive to crude?
No, staying long with a stop loss is not a bad strategy. I wouldn't suggest a fresh long initiation because it's still respecting those resistance levels around the 42, 40 to 50 mark. And as you rightly said, yesterday also it came off the highs of the day. But if you see, there is the support zone at the 39.30 mark, which has been tested multiple times, and the stock is attempting a rebound. So yes, I mean, if you have a long position, you should continue to hold with a stop loss at the 39.30 mark. Fresh initiation is a little difficult because fundamental headwinds aside, technically also there are these resistances at the 40 to 50, maybe push it to 4300. Once those supply zones are taken out, do you get fresh momentum in the stock? So don't initiate a fresh, but if you did buy it at lower levels, kudos, 39.30, that should be your stop loss.
Okay, so that's with regards to what Interglobe Aviation goes. Let's see what comes out of it in today's trade as well. Let's put some spotlight on other stocks that we should be watching out for. Jasmeet joins us with the list. Jasmeet, what do you have for us?
Well, Hiral, thank you for that. As we come into the fourth quarter, we have a lot of stocks that come out and give the business update. Now, the stocks that remain in focus on the business update is something like Karnataka Bank with the Q4 update. Now, what they see is they see the overall deposit rising at 3.8% in this particular quarter, reaching 1.1 lakh crore mark. So it crosses the 1 lakh crore mark in this particular quarter. In terms of the other details, we do see that the advances have grown at 7% and we see a steady credit growth for the company. Now, in terms of the CASA, it jumped 10%, which is boosting the margins for the company as well. The second stock that is in focus on the back of the update is Indian Oil Corporation for FY26 business update. Now, in this particular year, company has added 900 plus overall retail outlets and expanded fuel network. Further, if you look at the overall throughput value of the oil, it stands at 75 million metric tons in this particular year, while the pipeline stands at 105 metric tons. Now, in terms of the other key details, and we also have next stock that is focused on the back of the brokerage at City on Endurance Tech, while the company, the brokerage maintains the buy on this particular stock, but they cut the target price to 2,900 from 3,350. Now, what they say is the overall demand is something that's weakening for the company, which remains the focus and the reason why they're cutting the overall target price, while they also make a note that the rising commodity cost would create pressure on the margins going ahead, which will be in focus, while the piece for FY27 stands at 37 odd times as of now.
Okay. One more brokerage note, one more idea. The only question is, can these ideas fructify returns right now, or will people have to be patient? I think the idea is that people might have to be patient. Though, Endurance Tech, Kushbora, is it showing endurance on the charts?
No, it's not. Maybe it's trying to depict some sort of resilience, just a synonym, but not really. I mean, as against what a lot of other auto anchors are doing, this one's not. So I would say wait and watch. Not as excited. Let me just reiterate that call on KTK. That one's doing well, so perhaps that should be on your radar. Not Endurance Tech.
Not Endurance Tech. Okay. Interesting. Yeah, मुझे लग रहा है वैसे कि IPL is not going fine. Kush has not mentioned even one match in the last 4 days. So clearly the interest levels are a bit low there too. Matches अच्छी नहीं हो रही हैं.
Have you heard about those two young chaps in the opening games? These two boys, some Virat Kohli and Rohit Sharma. Oh man, what a fantastic career they have ahead of themselves.
What are you talking about?
Did you see the kind of batting that they did? One, they're looking younger than they ever have, and two, they've batted like they're just starting their career and not ending. So I was going to start with all of that, but it seemed a little inappropriate with whatever was happening in the market.
I made a mistake. You know what was my thought when he said this? The Rohit Sharma's watch collection came to my mind with his fantastic career ahead.
No, yaar, they are batting so beautifully. Look at how the other matches have gone versus how these matches have. One-sided dominance by these, experienced players. They should have a spot back in the T20 side in India, in the India team.
Now the relevance to the markets about this is that if there are tried and tested companies which have withstood the test of time,
good one.
then that's what you got to bank on, right? And which is why I think Parag comes back to HDFC Bank, ICICI Bank all the time. And whether it performs or no remains to be seen, simply because the other big problem for Indian markets is this incessant FII selling. Yesterday too about 8,300 crores, and when that is on, it's very, very difficult to make a bull case right now, even if things were to stabilize. Sure, we'll have some bounces, but will it sustain? Remains to be seen. I wonder if hospital stocks therefore become a good port of call. The only caveat out there, Parag Thakkar, is that for a Fortis or a lot of others which depended heavily on medical tourism, the GCC medical tourism spends will come off quite materially.
Yeah, absolutely. So basically, I am not a very big bull on this sector.
Why not?
Apart from a company like Narayan Rizulaya or something,
Why
where
not?
basically I feel that of course Apollo Hospitals has done beautifully. But I would say that, and it is also a recession-proof sector. But within that, I feel Bharti Airtel is my not within hospitals. No, because Bharti Airtel is also not affected by whatever either COVID or war.
So Parag, I want to get this straight for a lot of our viewers. Apollo Hospitals has given 152% returns over the last 5 years, and you don't like it. HUL has stagnated over the last 5 years, but you like it.
I don't.
ऐसा क्यों है?
No, Apollo Hospital, I am not saying it's a great company. It has done beautifully well. I like something which has not done well. I want to buy those names.
Because you're a value investor.
Yeah, because I'm a value investor.
Isn't there value in growth?
No, I'm saying, see, Apollo Hospitals has done very well. I'm not saying against that kind of stocks which have done well and which are good, right?
You want margin of safety.
But I want margin of safety. I want to buy when others have given.
Asking very philosophical questions.
I want to buy.
Is there value in growth? Is there growth in value?
No, there is value. So a lot of growth investors find value at 25 PE
I
also.
agree with you.
Whereas some people find it at, let's say, argument say 10 PE.
Yeah.
And both sides could
So
be
I
right.
have been very bullish on, say, for example, Bharti since my IPO days of 500. I have been very bullish on Ultratech itself starting from say 3,000, 5,000 rupees. That I have maintained continuously. But it's of course it's everybody individuals.
Exactly. Kush, you want to come in?
Neeraj is in that zone where he wants to, as you rightly pointed out, bring out all those philosophical debates and, hit that nerve. He hit that IPL nerve so bad, I forgot to link it with markets at all. I left it.
There you go. I was wondering whether we changed the show from India Market Open to
He
IPL
just hit that
Watch.
nerve so hard, and I was waiting, but like I said, markets and Trump doing what they are became difficult. But just to round that conversation off, among the hospital names, some of them are doing well, but one that clearly stands out and could have easily turned into a call for me today was Aster DM. It's just that it's already run up quite a bit, and in markets like these, when you've got these sharp run-ups, becomes a little difficult to give that call on a unfavorable risk-reward ratio. So hence it did not. But the setup on Aster DM is very strong, stands out very clearly.
Okay, so Aster DM, that stands out very clearly is what you're watching out for so far. And just one thing, Kush, I don't know, with talking about IPL, I'm not sure how you've missed Mr. Vaibhav Suryavanshi. 15-year-old, I mean, fearless and so much room for growth. So I think that's where the growth and the value will come in as well, Neeraj, if you have to look at IPL. But moving on, very quickly, let's just address names like GIC, LIC, Mazgon Doc, where reports are indicating where the government may sell stake in all of these companies in FY26. including a IRFC. They're looking to sell stake in 4 PSUs to meet their FY27 budget target. Interesting names there. Mazgondog, some smart run-up over there. LIC is another one. Parag bhai, any views on this?
No, so basically, you are asking me about LIC and all?
Yeah, I mean, government is saying GIC, LIC, Mazgondog and IRFC.
LIC anyways, they have to sell, right? So LIC...
They don't have to, no? They have
so 1.5 to 2 years to reduce the stake. And But I would say that LIC...
No, sir, I just want to clarify. Based on my understanding, LIC is the one exception to that rule, where they've gotten parliamentary approval for them to sell at any point in the next decade.
So basically, if that is true, I will have to check. But if that is true, then they should not sell at this price. LIC is right now at a crazily bottom levels. I would say they should not sell. But anyway, defense names, or as I always keep saying, metal names are some of those things which I think they can sell. Of course, they'll sell what they want to sell. But I'm saying that something which is going up continuously is where they should look to sell, in my view, and which was in
metals.
Some time ago. Hindustan Zinc, Hindustan Copper, I have highlighted many times that now Hindustan Copper is down significantly from that level.
Just want to confirm, LIC must achieve 25% shareholding by May 2032 rather than the initial 2027 deadline. So there's ample room for them to achieve that. All right, we're joined by Mumuksh Mandlesha, who's a research analyst at Anand Rathi Institutional Equities. And thanks so much, Mumuksh, for taking the time. We're going to be speaking about Hyundai what are we speaking?
The entire auto sales numbers.
Hyundai and all automotive companies. So we've seen several companies come through with their numbers, and broadly it looks like a good picture, Mumuksh. What are your first takeaways?
Yeah. Hi, good morning, everyone. So a good March month, double-digit mid-teen growth across two-wheelers, PVs, CVs, and more than 20% growth in tractors. So good, healthy, strong demand in the auto side. In CVs, there was little moderation than what we expected. We were expecting more than 20% growth in the month of March. So there was some moderation there. And commentary by Tata in the press release mentioned about some moderation in the demand in some sectors of the economy, which were impacted by this West Asia war. So maybe around the port demand, etc., that could have impacted the CV demand, though it's still a strong, healthy 15% kind of a growth. Now, going ahead also, the way the momentum is there, even Vahan data is very robust in month of March. At least for next 6 months, it seems a very good double-digit growth for the autos sectors, for auto segments to continue. And maybe around mid-single-digit growth from the second half for the most of the segments we expect.
Okay, so from that perspective, just quickly ask you, because we've already seen the start of trade, at least the pre-open session, and we're seeing the downtick as expected, and we'll bring you the rupee as soon as we possibly can. But Mumuksh, just to conclude, based on what you've seen in the numbers so far, and specifically on relative underperformers like Hyundai, what is the call right now? What looks good?
Yeah, so the biggest challenge, the biggest head.
Okay, I think we've lost Mumuksh's audio. All right. Okay, no, can you hear us, Mumuksh? Okay. What were you saying? Yeah, go ahead.
So the biggest headwind for the auto sector next 6 months or 9 months is the commodity inflation. We have seen across the metals and the crude and going up. And there the margins for all the OEMs can get impacted. Now, so that's why among all the OEMs, we prefer two-wheeler segment, and particularly companies like Bajaj Auto and TVS Motor, which has some natural hedge against this inflation, led by the benefit of INR depreciation. So for a Bajaj, 30% plus, TVS 25% plus of the revenue is exposed to the INR depreciation. So they can actually offset a large part of that commodity inflation with gains from the INR. So in this period of uncertainty where there could be some production challenges, there is a margin pressure. price hikes will take some time to happen. In this scenario, we believe that OEM names like Bajaj and TVS are better placed to take this impact.
Absolutely. And we want to speak about the INR right now. Navneet, Mumuksh, thanks so much for taking the time. We're joined by Navneet Damani because the rupee has opened as anticipated far stronger against the dollar, and this is on the back of several measures that the Reserve Bank of India has taken, specifically with regard to the rules that it introduced overnight with regard to the non-deliverable forwards contracts, and it has restricted Indian banks from selling these contracts to residents and non-residents, and that should dramatically reduce the play that has been underway in the non-deliverable forward space. Navneet Damani joining us right now. Navneet, what are the initial reactions that you're seeing? Do you see this moving even further on the upside for the Indian rupee? And can you explain to our viewers very simply what is taking place right now?
Well, good morning, Alex. And over the last 3 days, we've had a couple of circulars from RBI where they've been trying to protect the Forex reserves and trying to have a hold on the rupee as well, because we've seen a massive 4.5% depreciation in the last few days. So what has happened is dollar index has rebounded from 96, 97 levels to 100 as we speak, and rupee has also fallen to a similar extent because of the rebound in crude oil prices and so on and so forth. Now what RBI has done is they've earlier they released a circular of 100 million cap for derivatives contract from banks globally, from domestically, but now they've revised the circular from unwinding the positions from 10th of April to another 3 month leeway, which gives the bank a lot of cushion and a lot of leeway to unwind their position over the next 90 to 100 days. Having said that, it is going to be interesting to see how they will manage it, because as of now, bankers have mentioned that they have open position of roughly to the tune of $7.5-8 billion. But if they have to unwind it and bring it to $100 million each, then the total position will be in the range of about 1.5 to $2 billion at max. So this kind of unwinding will lead to a natural depreciation in the rupee, and that is what we are seeing having upper hand, and we are seeing an appreciation at this point in time.
Okay. So, Navneet, the question is, moves will be interesting, but everyone wants to know at what levels will it settle. And we were just picking up where, in terms of the near-term impact on the dollar long unwinding, there should be support that could come in, easing volatility. And everyone is looking at testing levels of 92.5 to 93. Is that something which could be a near-term possibility according to you? And if not, what are the levels you're watching out for?
Well, in my sense, 95.5 is a peak for this run-up, and RBI will come what may it takes to defend this level, maybe through their forex reserves or bringing some kind of norms and measures that we've seen in the last 3-4 days. So, in a sense, this rally would have peaked for the time being, and importers and exporters shouldn't rush to build a position at this point in time. On the lower side, maybe 92 is a level that I will watch out for closely. If the dollar index has to be watched out very closely, because if it doesn't move beyond 100.50, then we might see a retracement or a correction in dollar index also, which could bring down the INR to a very large extent. So my sense is that large part of the depreciation is already built into the prices, and now that there is a time that if crude oil starts to taper out or top out, we will see some kind of retracement or correction in the rupee towards 91.5, 92 levels also.
Got it. Okay. We'll leave it at that, Navneet. Thanks so much for taking the time out and being with us. Really appreciate your time. 9:06, about a couple of minutes left for the pre-open rates to settle. I suspect about 300, 350 points or 400 points lower is where we might start off, and then we chart our course during the rest of the day. I'd be really surprised if we see a dramatic pull back today, considering that there is a long weekend. I doubt people will be willing to take very large positions, either side, by the way, ahead of 3 days of a holiday, which will have multiple geopolitical developments. So bear that in mind. Trading might be light. Shrikant Chauhan is with us as well. Shrikant, we're starting over with 300, 350 points lower. Are you inclined to take a trade on the indices at that point?
Yeah, good morning, Neeraj. Good morning, everyone.
So what you're saying is right, that it's not that easy to take any particular trade on index because it is completely under the news flow and it is following to the direction to the news flow. And that's the reason it is something which is very difficult to decide on the stop loss as well as targets for the market. So for the day specifically, it is better to stay away from taking any trade on index. If there is any rebound, then in fact we should look for reducing some positions because the market is still in the range. Yesterday also it failed to cross the level of 10 days exponential moving average, despite there was positive news flow and crude was around $100. So one thing is very clear that there is like a lot of fear in the market, and long traders, they are reducing their positions whenever they are seeing any pullback in the market. So for the day, if we see the market is trading below 22,500, then we can expect next levels 22,250 to approach in today's date.
Shrikant, individual stocks that you're looking at?
So we saw unexpected sell-off in almost all the pharma stocks yesterday. It was not at all expected that the stocks can fall like this. Dr. Reddy, Sun Pharma, Cipla, all these stocks have broken their important support levels. So I think we can expect some more weakness in the near term because it's a broad-based sell-off that we witnessed in the market. Sun Pharma, which is around 1728, 1730, there we can expect further more weakness. It has broken important level at 1740. So the next level to watch out for would be 1680, 1670. We should look for creating some short positions because it's a broad-based sell-off. I'm to say for the pharma sector, and we can keep a stop loss around 1750 for the same. On the defense side, we can expect some recovery after opening lower, and in that we like Bharat Electronics, which is currently around 419. There again we can expect 430, 435, where it has next leg of resistance. There at that levels it's a buy with a stop loss close to 410.
On to the big brokerage call for the day today. HSBC has initiated a buy on Tenneco. Mahima Johnson with more details of the rationale. Mahima, why have you chosen this one today?
Right, so Neeraj, yesterday we saw an initiating coverage by Citi on this counter, and today HSBC has given a target price of 700 for this one with an upside potential of 35%. What they're saying is that the strong exposure to premiumization as well as a suspension system and plus export growth is something that will augur growth for the company going forward. Stricter emission norms will increase content per vehicle in the CAPS division. Overall, what they're saying is that India is positioned as a low-cost global exporter hub for this, the parent company. Export revenue CAGR is forecasted at 33% during FY26 to up till FY30 is what they're estimating, and overall domestic revenue growth CAGR is estimated at 12% over the same period. What they're saying is that strong export order book is something that will that kind of supports the growth visibility for this particular counter, and overall they're expecting a revenue growth of 14% over FY30 and EBITDA and PAT CAGR at 15% respectively over FY26 to FY30. Lastly, margins, they're expecting it to be in that range of 18 to 19% in the medium term. So this is the overall view as to what makes HSBC bullish on Tenneco.
Okay, so that's with regards to Tenneco Clean Air as we speak. But Shrikant, any views in terms of Tenneco? I know it's a recent listing, but anything that you see on that one?
No, I have not seen this stock. Yes.
Okay, so that's with regards to Tenneco. But very quickly, let's just quickly look at the markets as well right now. OMCs, if we can just pull up that one on the screens with the way crude has been panning out. HPCL, BPCL, IOC, you have ONGC as well. That will be in focus in today's session. So these are a few of the names that should be on our radar. ONGC, a mild uptick is what is indicated. Oil India as well. Kush, anything that you like in terms of the OMC pack right now?
Haven't really in a while, still don't. So I'd still stay away from the OMC pack. I mean, the stock volatility aside, the crude volatility itself is affecting a lot. So for now, I'd stay away from these.
Okay, stay away with regards to where any of these names go. But apart from this, Pharma as a pack already seeing some bit of pressure in today's session. I think that is something that could continue. Sun Pharma 3.5% downtick. Oro trading under pressure. Lupin has completed an acquisition as well. Let's see what a Lupin is doing in trade, whether they're seeing any green shoots. I think still pre-open is indicating mild cuts there. Apart from that, Prestige. Let's pull up Prestige. Anantraj. Your real estate pack was the one which was buzzing in trade yesterday. Prestige again. No major moves. Anantraj showing a downtick of around a little over 4%. Parag bhai, quick view when it comes to real estate, specifically MMR region, because the ready reckoner rates have remained unchanged. Are you seeing any benefits?
So basically, see, market right now in short term will shift pendulum from on one day when you have a oil downtick, people will feel that okay, interest rates are not going to rise, and so real estate will do well, which happened yesterday. And today, when you are seeing a Brent oil going up, again there is there'll be a verdict that interest rates might go up, and so real estate will suffer. But ultimately, demand and supply doesn't move so swiftly. Of course, in Bombay it might do, but I would say that the stocks have corrected meaningfully. So one can start looking at this space, especially companies like Oberoi Realty, where you have a fantastic balance sheet, very good projects, and so those kind of companies are looking interesting after such a significant sell-off. But of course, these are all impacted. I would say that I have bucketed into two things. One are impacted stocks, and other are not impacted stocks. Within non-impacted stocks, it is like Bharti Airtels of the world. And the impacted stocks are like banks and real estate and auto and all those stocks. So real estate is definitely in the impacted bucket, but I would say that stocks have also corrected meaningfully. So there might be some interesting opportunities.
Less than a minute now for trade, and I'm going to go across, Kush, very quickly to you for any last comment you have. Stock that you'd like to pick?
Yeah, I'd go with a long trade on KSB if it does not open very close to the stop loss or the target. Just to reiterate the levels, 850, 872, are the targets, and 805 is your stop loss. So if it doesn't open very close to either of these levels, it's a good long trade.
I'm interested in seeing that at 9:25, do either Shrikant or Kush give us a short trade today? Let's see if that were to happen. We'll start off low, viewers. Unfortunately, the fireworks of yesterday are gonna get doused today. The question only is, how much of a downtick can we see getting extended? Wouldn't be surprised if that were to happen too, but let's wait and watch. A lot of longs yesterday might not get a chance to square on open. Do they square during the course of the day? Remains to be seen. 1.3% lower. Advanced decline ratio terrible. Banks are down 1.9%. Mid caps 1.6%, small caps I'm sure are down as well, 2% lower. Not a pretty picture. IT index, just bring that one up and see what that is doing. About 1%. Let's get the heat map up on the screen. IT is actually giving helping hand, but banks are getting clobbered, literally clobbered. It's an all red, by the way. It's an all red. We didn't see this for a number of days. There are always one or two stocks in the green. It's an all red this morning. What is falling the most? Interglobe Aviation, no surprise there. Big crude sensitive. Unfortunately, a lot of people would have gotten caught on the wrong foot because there were long positions initiated yesterday, I'm sure. Sun Pharma, Shriram Finance again. Indigo kind of eclipses it. Otherwise, this is the biggest beta stock. Markets rise, they rise. Markets fall, they fall. It falls. L&T, Adani Ports, yesterday's winners down today. Asian Paints down today. Again, a crude sensitive. Mahindra and Mahindra down today. Adani Enterprises, Trent, big winner of yesterday, down about 3% as well. I wonder if Avenue Supermarts is seeing the same thing. We'll get to that in a bit. SBI, Tata Steel, Axis Bank. Effectively, banks are really putting pressure, and Interglobe is now down 5%. What is maybe faring a little bit better? HCL Tech, ONGC, not in the green incidentally. Coal India, Bharti Airtel, Infosys, very, very defensive bent, Alex. But you can't blame it. 429 points now down in the red, 22,244.
So yesterday the joke was that the Bulls were playing an April Fool's joke on the Bears. Guess who has the last laugh today? It's the Bears that are in control, and it's a mauling that you're currently seeing on the screen. Let's take a look at the sectoral indices right now, just to drive home that picture. And I wouldn't be surprised if there's a fair bit of red. In fact, there's only red on the screen. The index that is falling the least is IT, and it's still down close to 1%. You have the CPSE basket that's down close to 1.4%. The Nifty and Sensex now trading with cuts of close to 2%, and that's quite something right now. You have the consumption pack that's down 2%. Defense is losing about 2% or thereabouts. Metals is a pack down over 2%, and you have the 500 index also losing that much. The Nifty Bank is where a considerable amount of pressure on the downside is. It's now trading with cuts of 2.5%. The worst hit is the PSU banking pack. So quite a few of the stocks that I've actually got lined up for you with regard to the business updates are all here. Let's just very quickly also take a look at the volatility index, because the fear gauge should be spiking as things stand right now. Yeah, absolutely, that is the case. Now trading very close to 26.3. I'm pretty sure that Kush will be able to tell us what the peak was. I won't be surprised if we're very close to the peak right now in trade today. But let's talk about individual stocks, and there are several that are in the news. They may be not reacting the way that you had anticipated them, because there are actually quite a few positive developments. So pull up Tamil Nadu Mercantile Bank as well as Indian Bank, South Indian Bank. These are stocks that should or would ordinarily have been in the green on the back of a pretty decent set of numbers for the Q4 business updates, but it's actually moved the other way, and this is on account of sentiment. More business updates: V2 Retail, Bansal Wires. These are strong updates that have come through. Both are being sold into particularly V2 Retail, despite the fact that they've shown robust growth and added to their list of branches. They are still losing quite a bit of ground. In the cement pack, we told you this morning that there's a price increase that is building in the first week of April, 20 to 50 rupees per bag, but the entire basket is losing ground. Ultratech as much as 2.5%. Ambuja ACC also losing ground right now. Ola Electric, very strong business update, or rather volumes. It's still losing about 0.9%. TVS Motor shared an update where it had volumes growing as much as 25%, not doing too much for the stock right now. NMDC uptick of 40% in sales, over 50% in production in the month of March. The stock is down 0.75%, and you have Prestige that has gotten a piece of land, and that has a gross development value of close to 4,000 crore, more than that actually, and the stock is down as much as 3% or thereabouts. DCM Shriram has announced a capacity expansion in Gujarat. The stock is down 2.5%, and Oil India and ONGC, this was the one group of stocks that I thought would be gaining with Brent crude trading higher, but even this is losing ground. So I'm hard pressed, Hiral, to find any spot of green on the screen. I wonder if you're finding more luck.
So what's interesting is we wouldn't blame you for picking up the stocks and the stocks not reacting, Alex, but if you have to look at NSE 500 right now, you just have 4 stocks on NSE 500 which are trading in the positive. So that's exactly telling you what's happening, from a ZF Commercial, Page Industries, Carborundum, as well as a HCL Tech, which is pretty much on the borderline. So just 4 counters which are trading in the positive. So telling you the entire story. But Capri Global, SRF, that's your, chemical names, Deepak Nitrite, these are few of the names which have been slightly under pressure as well as we speak. Very quickly, I would just want to take a quick call from Kush. From the way markets have opened up, any further short calls that you would have, or a long call with the value that you're seeing?
Okay, so let me start with India Wix. Alex mentioned that, right? So the recent high for India Wix was close to 30, 28.9 to be precise. And historically, every time we've touched 30 or maybe gone a little above that, in the subsequent days, if not weeks, we've seen a sharp fall on the Wix and hence a rise in the market. So we're, again, very close to those levels. That is one. 2, yes, we've breached the lows that we made on Monday. We've slipped further from where we opened, pretty much where the GIFT Nifty was suggesting. But I won't be surprised if we maybe end a little off or above the lows, that we are looking at currently, or maybe the lows that get formed in the first half an hour, 30 minutes. Because like I said before markets open, look at the internals. The internals yet are not as bad. Yes, the screen's all red. Nifty is below Monday's lows. But right now, the internals aren't as bad. So if they don't get damaged, you could perhaps see an intraday rebound. Not calling for a positional trade yet, but you could perhaps see an intraday rebound.
That's an interesting take there. And intraday
Ummeed
rebound.
pe dunya kayam.
Data back to me. This is data back to me that I'm pointing
agreed,
towards.
but I think you need that little positivity in the markets as well. And everyone has been supportive that probably the bottom has been made and there will be a bounce back. That's the view coming in from a lot of global brokerages as well. So hopefully that's what we see, Kush. But thank you, Kush. Thank you, Parag Bhai, for joining in. Always a pleasure to have both of you in the studio. It's time for a market chat from here on and understand as to what the macro setup is also looking like in terms of markets. Saurabh Mukherjee, founder and chief investment officer at Marcellus, joins in. Saurabh, good morning and welcome to the show. Always a pleasure to speak to you. Hiral on this side. My first question to you is, what have you actually made from the Trump commentary that happened this morning? Because a couple of takeaways is the war is going to continue for the next 2 to 3 weeks. We are not going to let Iran actually be a nuclear power till we finish them on that aspect. And the Strait of Hormuz is now left to everyone to get it opened up because no one is going to take responsibility, neither Iran nor the US. What do you make of this?
I think I would take all of this with a pinch of salt, Hiral. This conflict has been fundamentally about control of oil and the Strait of Hormuz. Trump wants both. He'll want control of the Strait of Hormuz and he'll want some say on Iran's oil deposits. But as we've discovered in the last month or so, this has turned out to be far harder than Trump anticipated. And my reading is China will now move in. China will ally with Iran and make sure that between China and Iran, they control the Strait of Hormuz and thus the oil supplies of much of the world, which will be a terrific coup for China. So I don't think I would take with a lot of pinch of salt this whole proclamations of ceasefire and so on. This is a tussle for oil and Hormuz. This is a tussle for strategic power. And unfortunately, this is not going to end very quickly. Even if the fighting ends, the tussle for control of Hormuz, I think, will persist for many months.
Okay. So is that your base case in morning, Saurabh? You're saying many months, but have you thought of your base case, your optimistic scenario and your worst case scenario, and what pans out from India's perspective in those three scenarios?
I think even before the conflict, Alex, as we've been discussing through 2025, the Indian economy was in trouble. Earnings growth had been weak for many years. Last 8 or 9 quarters, Nifty 50 earnings growth was in single digits. So as it is, it was a soft economy going into the conflict. Obviously, the conflict is taking its toll on the country, on the rupee as well. Our base case scenario is that we'll have to work with expensive oil. I won't be able to put a number on whether is it $90 or $110, but we have to work with expensive oil, a weak rupee, and rising interest rates. That's the base case that we are working with. In that context, we're doing 3 things. Firstly, we are focusing on investing in sectors like pharma, the pharma supply chain. It wins both on the rupee depreciation front. It also has export prospects. It's a naturally defensive sector. We've also had IT investments for many years. We didn't pull back in the AI panic. We have reasonable exposure to the IT services companies, both large and small. And then the third piece we are doing is within the domestic portfolio, we're loading up on manufactured goods exporters. The rupee at 100 plus the FTAs plus the West versus China hostility, we think bode well for Indian manufactured goods exporters. Many of them are now available at the tastiest valuations I've seen in the last 5-6 years, and we are trying to buy more of those here. Alongside that, I'm encouraging our clients, I'm encouraging whoever is willing to listen, that for Christ's sakes, diversify globally. Don't have all your money in the Indian stock market. There's plenty of value to be had in East Asia, in Europe, in America, in small and mid caps. They're available at half the valuations prevalent in our country. And earnings growth is far more robust, far more resilient in the context of the Middle Eastern conflict that's impacting all of us.
Well, diversification never hurt. And maybe this is a good time to consider it as well. Saurabh, but for people who let's say are doing that through mutual funds is one thing, but for people who are contemplating, who are lucky enough to maybe exit at the right price and are contemplating putting some money to work out of the cash that they would have, right? I heard you mention an interesting thing about Indian manufactured good exporters. It's a very wide bucket of, as in the space is very wide with two, three companies in each sector kind of doing that. Which themes within this manufactured good exporters stand out as the best placed?
Sure. So we published a book on this last week, actually. The book is called Breakpoint. We published a book called Breakpoint explaining that the Indian economy will have to go through Sagar Manthan. Effectively, the old era of us exporting IT services and having a best part of $400 billion of IT services plus remittances to drive a strong currency off and to fuel consumption. That era, I think, is behind us for the most part. On the back of a weak rupee, and the EU and UK FTAs, hopefully the US FTA soon as well, we should be able to build a manufacturing sector. Looking at the FTAs, Neeraj, there are broadly 6 sectors which we think are looking very interesting in the context of what the FTAs have in store for India. The first is a sector that Alex and I visited together 2 months ago in Coimbatore. So the plenty of our friends in Coimbatore, Tirupuri Road are saying that they're now competitive against Bangladesh. They're more than competitive against China and a parity with Bangladesh. We've got tariff parity. The currency is swinging in our favor. The EU FTA is a blessing for that whole belt. So textile plays, second auto ancillaries, third precision engineering, fourth the pharma supply chain and pharma ancillaries, and fifth is some of the auto OEMs as well. So roughly in each of these sectors, I would say we can find 4 to 5 investable names, and you could thus look at across India between Tamil Nadu, Gujarat, the NCR region. You're looking at around say 20 to 30 high quality industrial manufacturing export plays who will benefit from much of what is playing out in India. And as the valuations get pounded in this correction, I think we are trying our best to buy some more of that.
Saurabh, is the thesis of burgeoning consumption in certain pockets getting challenged in a big way right now? And what does that mean for certain apparel companies, for automotive companies which were doing reasonably well and where the expectations had built up for an up move?
Yeah, so I think as we've discussed on your channel for several years now, I think the consumption story started getting challenged 2 to 3 years ago as white collar job creation slowed to a crawl 2 to 3 years ago. That naturally had an impact on the consumption story. To the extent people were borrowing a lot of money and fueling their consumption in sectors where you can borrow money and buy stuff, e.g. cars, you were able to fuel the up move for a while. And the tax cuts last year, both the income tax cut and the GST cut, gave a bit of a sugar rush to consumption. But that was always bound to be a challenging story unless job creation came back. And as of now, neither in the IT sector nor in the broader economy am I seeing any sign of white collar job creation, right? There's plenty of credible data from private sector companies on white collar job creation, and that story ain't moving up. And given everything that we are seeing playing out every day in the markets, it's unlikely we're going to see a job creation up move. So the consumption story, I think, started getting challenged a few years ago. Markets hadn't taken cognizance until recently, but you're right now. As we realize that interest rate hikes are all but inevitable, and given the mountain of debt middle class India carries, it is but inevitable we will see EPS cuts on consumption plays, and the valuations 40, 50, 60 times will start getting increasingly questioned, not just by foreign investors, but even by Indian investors as well. So time to diversify, time to go global, both from a investing in exporters perspective and from explicit investments through Gift City in the Western Hemisphere and in East Asian markets.
Okay. Saurabh, one last point. People like companies with cash flows, dependable cash flows, lower debt, because you don't want that. And I know an Indian corporate balance sheet at least, is probably in the most pristine form that it has been, right, in multiple years. So I wonder if the AI-led disruption is not very steep, do IT service stocks come back in favor? Because they're not wanting on corporate governance. It's very clean there. They have great cash flows. They are dividend paying. All of those factors work in their favor, don't they?
So yes, I would say yes and no. So let me put it in this context. Generally in India, Neeraj, last 5 years have been horrific for quality, right? And I know better than most how hard quality is going Right? So usually in any country, you need three factors for quality to have a sustained up move, right? First, you need fear. You need people to be scared of loading up on cyclical plays, right? Just to keep it very simple. The second, you need sensible valuations even for quality, right? And the third, you need reasonable earnings visibility on quality companies, right? So whether it is IT or FMCG or pharma, you need reasonable earnings visibility. I think those three potentially are coming together, right? The fear factor, as we are discussing, is literally coming back in front of us. Valuations have become sensible in some pockets of the quality ecosystem, and earnings visibility on sectors like pharma, like IT, and to some extent FMCG is far better than it is for many other parts of the market. So after 5 years of hammering, I'm hoping and praying quality is set for a return in India.
Saurabh, takes a lot of heart to make a joke on oneself, but yeah, good one. And by the way, I want a signed copy of that book when we meet. Now, I'll buy the book. I just want you to sign it when we meet next.
Yeah,
so,
me too.
Yeah.
While you're at it.
And a cup of filter coffee is what you'll have to give me in return for the book.
Saurabh, I already got you one.
Yeah, you got me.
That was in Coimbatore. I'm sure we're talking about the BKC one.
Original filter coffee. All right.
Yeah, we'll give him the good coffee that he likes of our studio.
Yes.
Perfect, but great. Thanks so much, Saurabh. Really appreciate your time.
Thanks, guys. Thank you.
All right, that's Saurabh Mukherjee. And interesting conversation. Diversify is actually a great idea per se, right? I mean, the late Siddharth Bhaiya used to say that as well, quite vociferously. And a lot of businesses globally available at dirt cheap valuations. Not a bad idea in some fashion. A small portion, not materially. If you're not unsure of it, please do it via mutual funds. There are some very smart money managers out there who are running some of these global funds in some small fashion. That might not be a bad idea. Okay, but talking of global businesses getting impacted because of supply chains, but at the same time winning orders as well. And you can think of Thermax being right in that league as well, right? Its subsidiary secured a large boiler package order for a thermal power project in Madhya Pradesh. It possibly strengthens the execution visibility as well. But I'm sure input costs are getting heightened because of the global commodity pressures. Before we get the management in, let's get in Varsha with some details. Varsha.
Well, talking about the order details, recently they won 1600 crore order for boiler package contract, and the domestic order is valued at around 1600 crore, which is awarded by Anupur Power Projects Private Limited. Now, onto the war impact and commodity pressure when it comes to Thermax, the ongoing conflicts are inflating raw material cost of copper, aluminium, silver. We have seen a surge in those prices, and electrical and other components have also seen surge in prices. Now, talking about chemical segment for this company, they suffered a severe margin and earnings downgrade last year, lowered EBITDA target to 13 to 14% from 17%, but management is expecting strong volume recovery starting Q4. Talking about on the international orders also, they are bullish when it comes to winning new international orders, and domestic softness is due to ethanol sector slowdown, while data centers are emerging as a new sector when it comes to Thermax. Lastly, on to the order book. The order book as of today stands at around 9,380 crore, which is the execution timelines is almost 12 to 18 months.
Okay, Varsha, thanks for that. Ashish Bhandari, MD and CEO of Thermax, with us on the show. Ashish, thanks so much for taking the time out, and congratulations on an order. It seems that these days order flows, good news are few and far in between considering all that the world is going through. But tell us a bit about, one, this order, and two, also just the ordering activity or the lack of it that you might be seeing in business around you.
Good morning, and a pleasure to be here. Let me start with the order that we publicly announced, which, as you correctly mentioned, is for a supercritical 800 megawatt thermal power plant. And it's a big one for Thermax because it's a breakthrough in a segment for which we were primed for quite some time. This particular project was one after we were engaged with the customer for more than a year. Yeah. And as a company, we wanted to focus on things that we were good at, which is manufacturing the equipment, delivering it under very very fast timelines to be able to deliver a quality product, but not get into the site, civil, construction, and the related work that happens. So we were able to structure a contract in a way that it was supply driven for Thermax. The contract is fair for both sides. It has price escalations, and it was closed knowing that some of the commodity prices were going up. Yep. So even we closed this in the last few days of March, knowing some of the pressures that were happening and some of what was happening all around us. And that stretched the negotiations. When the war started, it stretched our negotiations. Overall, very happy that while this will be challenging for Thermax to execute on, strategically, it's a big move for us and signals our capability to do more such projects in the future as well. And what we are seeing all around us is a clear signal that energy security will be more and more important, not just for India, for many other countries as well. And wherever energy security gets discussed, Thermax will have a role to play.
So, Mr. Bhandari, good morning, and thanks so much for taking the time. For those that are not as familiar with the technical details of what you have just described, can you tell us why this opens up the doors for more such projects and what the size of the opportunity is for you? If you can put into context your execution capability as well. So there may be several options available to pursue orders globally as well, but then there may only be certain amount of capability that you've currently built out.
Good questions, both of them. First, let me take the strategy part, and then I'll come to the overall kind of capacity question. On the strategic part, ultra supercritical project represents the highest in efficiency for a thermal power plant. Yeah, and these are done with a lot of care. It has some of the highest equipment specifications, and very few companies domestically are qualified and capable of doing this. Thermax, with our partner Babcock & Wilcox, whose technology license we have, has the capability, has the manufacturing capability, has the design capability. We needed a breakthrough order, and this is that breakthrough order. So, which is why this is strategically important. India itself has already talked about adding anywhere from 60 to 90 gigawatts of thermal capacity, and less than a third of that has been now kind of bidded out through various options. So this cycle and this capacity addition will go on for the next few years, supercritical and subcritical both. And in both places now, Thermax would have a role to play. On capacity, not just by this particular order, but in our large boilers and the projects portion of those boilers, for the last 3 quarters, we have been adding good orders domestically and internationally. Even in the last quarter, we are now supplying boilers to the US for going into data centers. So this whole portion of our business is going through a significant growth, to the point that very soon we are going to be increasing capacity to be able to keep up with the volumes that we are encountering.
So just before I hand it over to my colleague Hiral, I just want to complete that question, which is that if you're saying that you will add capacity, Mr. Bhandari, over what time frame would this take place? Would it take place as soon as FY27? And what is the kind of capital allocation that you will have to make in order to do that?
I think the capital allocation will be north of 100 crores, and we would work to put at that capacity within this financial year itself.
Okay. Ashish, good morning. Hiral on this side. My question to you is then, with everything that you're looking at from a capacity addition perspective across segments, I remember the last time I had a conversation with you, you were talking about the pressure that was building up with regards to chemicals as a segment and how You've been candid with regards to what could happen going ahead. And improvement is what we were seeing in the fourth quarter. I don't want to talk to you about numbers, but with the capacity addition, with the pressure that is building on in terms of the input costs across industries right now, how are you looking at Thermax and the industry that you are in deal with all of this?
So I'll break the answer in two parts. Yeah, the first part is Thermax as a whole. Thermax as a whole, we finished the year, and there's nothing that I have to talk about Q4 that would not be easily understood any which way from our numbers, is that we are coming in with an extremely strong backlog, which is significantly higher than the backlog that we have had ever in the past. And that backlog continues to build into Q4 and as we get into next year. We were also seeing an environment where private capex was finally starting to take off, and overall coming in relatively bullish for FY27. Certainly, the war slows many things, and we are just seeing the front end of some of what will happen, but this will play on for several quarters, and depends on when things normalize on the war front, but normalizing at the economy front could take much longer, will take much longer. And that question I would want to wait to answer to see what happens and how things happen. The couple of subplots are that even in this environment, there are many customers who will have to switch fuels, will have to look at alternate ways of managing energy domestically and internationally. And in many of those areas, Thermax has quite a bit of strength, either in terms of services or in terms of new equipment along all of those fronts. The second part is specific to chemicals. For chemicals, I honestly don't have, other than the uncertainty, our commodity cost prices have gone up significantly. Styrene, our single biggest commodity, has gone up by more than 2x in a matter of a couple of months. Yeah, absolutely. And not only that, supply is very scarce. The question, very scarce. Two of the biggest suppliers out of Middle East have shut down their plants, putting global supply at risk.
But Ashish, we also hear, for example, this morning that the government may actually contemplate reducing the duty from Chinese imports to zero in case that helps some of these. So hopefully it does. But sorry, because we're running out of time, I just had one small follow-up to an earlier question, that answer that you gave, Ashish, which is that this energy security piece that every country will resort to. I saw a headline 7 days back that ONGC's floated tenders worth $20 billion over the next whatever number of time frame in order to exploration, etc. Do all of these moves, what the ONGC is doing, what the natural tilt towards energy transition, because you want green energy which is not dependent on imported fuel, etc. Does all of this fit in right with a product offering or two or three that you have, and therefore gives you a chance to actually rack up the order book even in a supply constraint period?
Too early to say. Yeah, we'll have to see how this plays out overall. Across India, there were a lot of good things happening already. Yeah, and so I wouldn't come and say, look, that it's all gloom and doom. It is clearly not. And even now, we are seeing many customers going ahead with projects. A year ago, we were talking ethanol. 3 months ago, ethanol was dead. With everything that is going on, a lot of companies are saying, look, can we find a way to get ethanol capacity to start going up again? So we are in an environment of flux. We really need to wait this out for 3 months and then say, okay, what's real, what's not. A lot of discussions happening right now on multiple fronts. But clearly, it's not all gloom and doom. Yeah, there's a fair amount of business to be had. And for Thermax specifically, coming in with a good backlog and coming in an environment where a lot of our products have got relevance is a good place to be, relatively speaking.
Got it. Okay. Ashish, really appreciate your time. Thank you for joining us this morning. We look forward to talking to you post your earnings just to get a sense of how things are changing. Frankly, between now and then also, a lot of things will change, hopefully for the better.
All of it. All right.
Hopefully
Thank
for
you.
the better. Yeah. Okay. Well, thank you. Thank you for joining in. And, by the way, viewers, hopefully for the better means some geopolitical implications, and that is the conversation that we're having up next with Pathikrit Pine. He is a geopolitical strategist and joins in right now. Pathikrit, thanks so much for taking the time out, and I hope I'm getting your name correct. But, if people were expecting a lot to come in from the Donald Trump press conference, sadly, it was much ado about nothing. If anything, the US markets and other markets were actually building up, and now he'll have to resurrect that problem too. So I don't know if it's worse in the case, but the question is this: because we have no clarity on what will happen tomorrow, day after, or in the next 1 week, how do you form a hypothesis, Pathikrit, about what will happen next? Give me your best case hypothesis right now, and why is it that you have that hypothesis?
So, when you talk about a Donald Trump interview, you can expect everything which is superficial and not something substantive. That's my personal opinion. See, this war as it is happening right now, there is no doubt that the Americans and the Israelis have severely dented the capacity of the Iranian military, but it's still there. It's not entirely decimated. So Iran's capacity to, retaliate and go for a horizontal escalation targeting critical infrastructure of the Arab state is not something that the Americans anticipated. So there is no exit strategy as of yet. If you look at the wars in the last few decades, you don't see any war where you have one side which can definitely claim that we have won it. So you would have status quo wars continuing for years, sometimes decades. Afghanistan, the Americans took 20 years and had to give up. Vietnam, we know what happened. In case of Libya, Syria, in case of Iraq, it has been turmoil for years, sometimes decades. So I do not see in case of Iran, things are going to be any different. Even if the Americans today, because they are not being able to, find a formal conclusion, because their end objectives have never been clear as to whether they want complete devastation of their nuclear arsenal or a regime change or to control their oil, whatever it is, they could not achieve entirely. So even if they exit, I don't think the Israelis are going to exit this conflict. So the conflict will continue, and anytime in between, the Americans will come in, blow hot, blow cold approach. They will keep on attacking, and the Iranians in retaliation will continue to target Arab installations, Arab energy infrastructure, American investments in the Arab states. So you would see the whole of Middle East going to be in a complete state of status quo, which is neither entire war nor entire peace. And these attacks will go to continue. So when you talk about the Arab states and the kind of tranquility they had marketed for decades, that is gone for good. The Americans will be forced by the Iranians, or even the pressure will be from the Arabs. The Arabs will want the Americans to continue the war because they know what's going to happen if the Americans leave. The Iranians in turn are asking for things if they want to stop the war, which the Americans cannot give. The Iranians are asking for a security guarantee. They want reparation. They do not want any more attacks, which the Americans will not agree to. The Americans are asking the Iranians to give up the nuclear arsenal, contain and control their army. You can't expand the army, and no more attacks on Israel, which the Iranians will not do. So you have, number one, two sides never agreeing to each other's conditions. Number two, the end objective of Israel and America are both very different. The Israelis are not going to give up. Third, even we talk about the proxies are very much active, especially the Houthis. So you have, number one, the Strait of Hormuz problem. Number two, you have a problem from the Bab el-Mandeb, which means everything coming from the Suez Canal is also in a problem. Third, even if the Strait of Hormuz opens up, what happens to the critical energy infrastructure of the Arab states which have been destroyed?
Yes.
So that will take years, or probably months, if not years, to get recovered. So you have to completely bypass for the time being, or discount the prospect of depending, on Arab oil and be assured of its supply. Resilient supply chain is a foregone conclusion. No, not going to happen.
Okay. So Pathikrit, you've laid out several scenarios. I want to focus on one in particular, which is from what Donald Trump said this morning. And I take your point on the tone and tenor of President Trump's commentary usually. But having said that, we have to focus on what he is saying. And what he has said is that he's encouraging countries that depend on that channel, on the Hormuz Strait, to take charge and to facilitate. And so the implication is that they will get out and they will leave everybody else to manage that channel. From India's perspective, what does this mean? Because traditionally, you've had trade between Iran and India.
So the irony is this: before the war started, the Strait of Hormuz was open. It was not closed. When the war started, the Americans did not consult NATO or anyone else that we are going to get into the war. So today you have created a mess and you want the rest of the world to take care of it. So far as India is concerned, look, Iranians have made it very clear that when it comes to Indian ships or ships of other countries, especially if those ships are not, of American or Israeli origin, they will let them pass. So when it comes to countries like India, as of yet, right now, we do not have that much of a problem, but the problems remain because you cannot depend upon the liquefaction plants in Qatar from which your LPG was coming. So even if the Strait of Hormuz opens up, your problem does not get solved. So number two, none of the NATO countries of Europe are willing to get into this mess. What was the difference between this war and the previous conflicts that America went into? They got blind blank check from the NATO to back whatever Americans will do. This time there is a difference because Trump had a condescending approach towards the NATO countries, threatened even Greenland. So for a country like India, the approach is very simple. Well, you have to continue, work towards negotiating passage with the Iranians. It's a continuous process, but at the same time, go for long-term LNG, LPG deals with the Russians, go for long-term probably deals with the Brazilians, Canadians, the Norwegians, the African countries. You have to, for the time being, completely discount. It doesn't mean that the oil will not come, but you have to discount the possibility of that being a safe haven for supply of your energy requirement. I mean the Middle Eastern countries. That is not going to happen. Iran is going to be the next Iraq, where the war officially ended in 2003, and then for more than a decade, the conflict continued. Iran has been, dented, but not decimated. And Iran is not Iraq in terms of size. It's a big country. It has a huge distributed architecture of military and leadership. So they will keep on pounding. They believe that the Arabs flourished at the cost of sanctions on Iran. They believe that the Arabs are the proxies and de facto supporter of this war because every American plane and missile comes to the Arab airspace. So they will keep on creating problem for not just Strait of Hormuz, but the whole of Middle East till the time the sanctions get away, till the time the Americans exit that place. So you can, as a country, individually negotiate with the Iranians and some other countries to ensure that your thing is going to get sorted out. Yeah. But you can't here play the role of a leader and say that we will sort it out for the rest of the world also, because this is not a mess you have created.
Yeah, true. Batikre, thanks so much for taking the time and for laying out all of that for us. Pleasure having you. We have to slip into a very quick break, but as we do, the market's trading with cuts of about 2% for the benchmark Nifty 50, and the broader market's also not looking particularly great. Mid-cap index down about 3%, small-cap index also about 2.75% lower, and the Nifty Bank is under tremendous pressure.
Yeah, and with the banks, I think we should just quickly address what's happening with the Pharma pack. But news reports are indicating that Trump administration is planning heavy tariffs on certain imported medicines, and this announcement could come in as early as Thursday, which is today. I think that's one of the reasons why you're seeing this kind of pressure built up on Pharma over the last couple of days. 3.5-4% downtick coming in there. Drug companies who are selling costly branded medicines in the US are the ones who are being targeted, and the focus will remain on firms that refuse to lower their prices going ahead. The non-compliant companies may face 100% tariff is what they're saying, and the cost of importing drugs could actually double overnight. That is what has been indicated so far. Apart from this, in terms of companies, Sun Pharma, Dr. Reddy's, Cipla, these are the ones where we would see minor risk due to some specialty and because of their complex drug portfolios. Sun Pharma, that stock is down nearly over 4%. Dr. Reddy's also trading under pressure as we speak. We will try getting you further developments on the story as things come up, but clearly Pharma as a sector is under pressure. We'll quickly slip into a short break. On the other side, more news and updates lined up.
में देखो मतवारा हमारे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Welcome back to India Market Open. Now, the Trump administration is planning steep tariffs on certain imported medicines, targeting companies selling high-priced branded drugs in the US. Varsha joins us with all the details. Varsha, what are you picking up, because the sector is under pressure?
Yeah, absolutely. And this is, basically related to the branded drugs which is being sold from India. Well, as the news is that the Trump is planning heavy tariffs on certain imported medicines, and announcement can come today. Well, the drug companies who are selling costly branded drugs in US are being targeted, and the focus is, of course, to reduce or to lower the drug prices. Now, non-compliant companies may face 100% tariff, and the cost of importing drugs would double overnight. Now, how drug companies have responded recently, we have seen Trump making agreements with Pfizer and AstraZeneca, which have agreed to pricing rules and joined a new government platform for which they have received tariff exemptions. Eli Lilly, Johnson & Johnson have promised billions in US manufacturing investments, seeking to avoid penalties. Now, the companies which will be at risk, of course, firms not making deals or negotiating with Trump. Policy is still unclear, not yet final, and some drugs or medicines may be exempted. Well, the important point over is overall how Indian companies will be impacted. There's a limited impact on the generics, but some impact may be seen into the branded drugs. For example, Sun Pharma and Dr. Reddy's, which are clearly seeing pressure as of today.
Varsha, thanks so much for getting us those details. All right, let's address very quickly the new listings. If we can pull that up on the screen. And in the meanwhile, let me introduce you to our 10 a.m. guest. And we've got Sandeep Tandon of Quant Mutual Fund. Actually, he does not need an introduction. Sandeep, thanks so much for taking the time and pleasure speaking with you. It is, I think, an unprecedented, in at least this century, geopolitical scenario from our perspective, right? With the kind of impact that it has had on crude oil, and certainly significantly different from the last time that we spoke. So therefore, what are the top 3 or 5 things that you are focused on as a money manager?
See, most important, we have to understand, we always say, we are in the business of risk management, and returns a byproduct. Okay. So you have to evaluate the risk, what is playing out right now. The way we look at the market from the current perspective, obviously, nobody can forecast which date exactly these things will get over or will close to culmination, this sort of thing. What is important to understand how we reconstruct our portfolio. So as this point of time, this is the uncertainty about the raw material, the fuel prices. So we have actually pruned down our exposure on the manufacturing cycle or manufacturing stocks, because we are not very clear how exactly, neither the companies know nor the analysts understand how exactly it will affect. We can talk about broad direction, but nobody is able to quantify because things are relatively fluid. And so is the challenges on the logistic front also. So the way we look at it is that if you remember COVID time, an extraordinary moment was there, or in 2022 also, when Ukraine-related attack happened, and later, few quarters later, you realize that was the biggest buying opportunity. Now, the way I look at India currently, we are seeing a signs of capitulation, and which means we are closer to bottom, and which also means worst is nearby. Either worst is already over or worst is nearby, but best is yet to begin. That's the way I'll define this situation. And hence, this is the time not to get capitulated, the time to capitalize the opportunity. So one has to be clearly looking at some of the sector like telecom, generic pharma. There are many sectors, large infra, energy, which are not impacted, rather beneficiary. Okay. So these are the spaces where you should have a concentrated holding rather than running a very well diversified portfolio, which will not help us at this point in time. So we have to protect our portfolio from the downside. And I think as situation improves, you will see sharp rebound in the market also, and that we have seen historically. Whenever any big crisis is there, it's become a buying opportunity, provided you play it right.
Sandeep, good morning. Hiral, an interesting point here where you're talking about rebalancing. You're talking about, looking at signs of capitulation that you're seeing and exhaustion as well. Yeah. So in terms of strategy, if you're talking about rebalancing, someone who's already holding a couple of sectors where the valuations could be high right now, but stocks are underperforming, would you advise investors to then book profits in those sectors and then move into sectors where you could probably start finding value and growth?
Yeah. So I will say, if you are lucky, you have opportunity to book profit, one should definitely do that. Even I will say, if you have to book losses also, then you should book it and move to the safety areas, okay, which is important from the current context. So for me, rebalancing always has to be slightly more ruthless and brutal in that sense, because you have to keep aside your emotional attachment and what prices you have seen in the past. That does not help, okay. So it's better to shift and rebalance your portfolio towards all the stocks where you see has more potential from the current level, rather than the stock or sector we are holding, which has more downside even from the current levels.
Sandeep, good morning. Neeraj here. And one is what you do within your equity portfolio. 2 is what you do within your overall portfolio, and therefore, does asset allocation, geographical allocation, etc., become a really important parameter right now?
So yes, asset allocation is very important. In fact, if you really look at from the current level, it makes a lot of sense to increase your equity exposure as compared to debt exposure. We were very early to cut down our bullion exposure in our multi-asset fund. I don't think the time is apt to go all out aggressively. rather than aggression has to be shown, then I think is equity is the area where you have to look for some opportunity, because stocks have corrected significantly, right from 20% to 50%, depending on which sector and particular stock we are referring to. So I think there is an opportunity. The way I look at it is that asset allocation is important. I think the stock rotation or sector rotation is also going to be more vital than asset allocation at this point in time, because that is somewhere which requires some amount of courage to do it at this point of time.
Okay, sorry. So Sandeep, sorry, just to get that clarity, I believe you have launched an asset allocator fund as well, but you are telling us right now that it might be, so let's assume even in that fund maybe, what you might do is have a higher proportion to equities, which might to some people seem counterintuitive, but you are kind of looking at it, the current correction as an advantage.
Yeah, Neeraj, absolutely right. We have just launched our, on the QSIP platform, we have just launched our multi-asset allocator fund. I'll give you a small example. If I just touch base on our own mutual fund, multi-asset fund is one of the best performing fund across all categories. Okay. It has beaten small cap index, it has beaten mid cap index, it has beaten Nifty in itself and Nifty 500 in all the scenarios, 1 year, 3 years, 5 years, and 10 years. So obviously, if you are able to time the market in terms of asset allocation, it plays a very important role in terms of generating overall return. Since we as a house are largely a macro house, we give more weightage to the macro than the micro calls. And hence we think we have better ability to manage, and we have demonstrated in our performance, not only for last 10-year perspective, this scheme has one of the best performing fund across various mutual fund schemes in the industry. So it gives me confidence that we have demonstrated in the past. Let's take example gold and silver. We virtually sold at the peak of the cycle, and we are still not willing to increase at this point of time. Maybe at appropriate time when cycle is right, we will load gold and silver both, because from a longer term perspective, we remain very constructive in this space. From a very near term perspective, we have seen challenges. We've seen actually euphoria in the month of January in the precious metal space, and we actually highlighted this is the biggest risk in the market, both from a dollar up move, the precious metal correcting, and particularly some of the equity market. Though I was not expecting India market to correct up to this levels, but it has also corrected sharply. The way situation is building right now, it's up to question of like how smartly you can position your portfolio, and it's a very tough task, because you have a lot of emotion attached with that. We have seen certain levels of stocks, so a lot of psychological barrier you have to cross, and if you can do that, I think you will be winner in this cycle.
Sandeep, just want to ask you about specifically that, right? So you've described some parts of how you would reallocate the equity component, right? I'm asking on, maybe you can just delve a little deeper into why you're saying that, and maybe some clarity will emerge from your own anticipation of FY27 earnings and how that thesis might have changed based on the geopolitical crisis, based on crude oil at 100 plus, and based on the rupee where it is.
So, beginning 2026, we talked about a fragile 2026 and PE contraction year. Okay. And it's playing out reasonably well. The way we describe the current situation, anything which is grossly over-owned, over-researched, and traded in the over-admired territory and an extraordinary valuation, those names has to be pruned down. So we are moving away from all these so-called new age company which has given extraordinary return in last few years. We are seeing a clear signs of peaking out in terms of PE deterioration. And that itself is good reason that these stocks has potential to correct sharply. Whatever correction we have seen, maybe some more can happen even from the current levels. No, the way we look at is the space like energy. Okay, we are grossly overweight. Energy is a basket in our portfolio, both from data sector perspective or renewable perspective in the current crisis. So if somebody look at next 5 years, 7 years horizon, I think this is a great story. Telecom is not affected at all. Financial also looks good. At least on the, if this crisis lasts for long, then financial will be affected. But if it is a quarter or month phenomena, it will not have very meaningful impact. So financials also look slightly good. And again, within financial, you have to look at the under ownership aspect, which is important. Not only the foreign ownership, you have to also look at the domestic over ownership. And we have seen many stocks. NBFC still looks good to me because there's an opportunity. So I think the way you have to play it is smartly. You have to play out India centric. Like today, news in on the pharma is there is more problem for the formulation and the expensive drugs. But India, which is the very dominant player in the generic side, look at the all generic company, they will be beneficiary of that. So I think there is our opportunity, and we also have to try to see all those companies which how they are well placed and from their raw material perspective. Okay, so anything related to that, if you can quantify, I think then you will be slightly ahead of the curve.
Sandeep, when you're talking about pharma as well, right now, a question that I have for you is very current when news reports are indicating that there is a potential of 100% tariff that the Trump administration would be talking about or levying, and an announcement could be on the cards today, which is Thursday. I know it's speculative, but if something like this happens, would you change perspective when it comes to pharma, because that sector itself is trading under pressure right now?
No, the way I look at it, I don't bother too much about what narrative is there. Let's understand the reality. Can any country, can US live without Indian drugs? That's the first question. Answer is clearly no. Can they mess around on the pharma or the food side or the fuel side? Three basic needs, whether you're talking about fuel, whether you're talking about the food related, and even on the medicine front. I don't think they're in the position to get impacted because this is their need. And that's the reason I'm saying instead of getting into high-end formulation company, in fact, Europe will be more affected than Indian companies. This is a bigger impact. And I think the battle which he's playing on the NATO front, this is another technique to put pressure out there. I don't think Indian companies should be bothered too much about it. We have potential to pass that price hike if that happens, and the distributor will absorb it. But our focus is, as a house, we are more bullish on the generic because there's no substitute for Indian generic in the world. And that's the edge we have. So I like to focus on the edge, and plus the rupee depreciation, which people are not factoring right now. That it's an 11% rupee depreciation, what we have seen in last 1 or 12, 13 months. It's a very meaningful number, which will be having a very positive impact on the bottom lines of these companies, particularly on the export side.
Manufactured exports of various kinds, and Sandeep Tandon, of course, speaking about one pocket, but many others, and so many takeaways from this conversation. Sandeep, thank you so much, as always, for taking the time out and talking to us when investors, I think, require some informed opinion the most. Really appreciate your time.
Yeah, thanks, Neeraj.
The pleasure is ours, trust me. And the pleasure will be ours to talk to Pranjul Bhandari, Chief India Economist and Macro Strategist of the ASEAN region at HSBC. She Johnson on the show right now. Pranjul, great having you as always. Thanks for taking the time out. How worried should an economic watcher be, considering all that's happening and considering that the end game is, or the end impact is nowhere in sight right now?
Yeah, absolutely right. We don't know where this is going to end and how much time it will take. But as you know, the weeks pass and we're not coming to a resolution, my sense is that the growth impact is now, I think, looking bigger to me than the inflation impact. I must say, globally, markets have priced in the inflation impact of this energy shock. At some point, they will start pricing in more of the growth impact as well. And I think this is very important for India because so far we have been thinking about this as an oil price shock. You know, oil prices go up. But we know at home domestically that it's more than an oil price shock. There are quantity constraints of many items like gas and LPG, and then all the other sectors that are accustomed to this, like, for example, petrochemicals, polymers, fertilizer, then electricity. So the cascading effect can be quite large if this keeps going through. A lot of the growth forecasts that you're seeing have taken from, you know, some of the old RBI sensitivities that we have, that when oil prices go up by 10%, then growth falls by 20 basis points. But remember, these are only sensitivities when it's just an oil price shock. This time it is a quantity constraint as well. So my sense is the growth will be bigger than, you know, a lot of people are thinking at this point of time, if this continues for the next couple of weeks. I would take a step back and say that a lot of people have compared what's going on right now to the 2022 Russia-Ukraine crisis, the oil price shock coming out of that. But if this continues, I think it might start looking a little bit more like the pandemic. Pandemic was huge. It was all sectors. This is probably not all sectors, but still there would be flavors of pandemic where the growth shock was far more, at least in the beginning. So we, I think, have to start bracing for that. And I think there should be policy implications of that as well.
So, Pranjal, because Donald Trump has come in and effectively said today, though he may change it tomorrow, but he's come in and effectively said today that this lasts for 2-3 weeks. So what you said that you fear might well turn out to be true. So keeping that as a base hypothesis, and that's the best we can do, right? We can make a hypothesis and then see what happens there. So keeping that as the base hypothesis, how much of a growth scare could this be, and how much of a macro shock could it be as well? Because we are dealing with growth at a point of time when oil, in a typical growth scare scenario, would be coming off, is actually perking up and is staying at 100, and which is impacting the macro as well.
Yeah. So look, this is a complicated question. There are many, it's a multinodal shock, as I would say. There's a supply angle to it, there's a demand angle to it. But eventually you have to take a judgment call. Is it more a growth shock or is it more an inflation shock? In 2022, Russia, Ukraine, it was more an inflation shock. During the pandemic, it was more a growth shock. And my sense is that we are moving towards more of a growth shock as the weeks pass and we don't have a resolution. I also want to say that this has implications for policy. What I really want to say is that every time there is a shock like pandemic, there are a lot of things we should do and we should not do. I think what we need to do right now is neither stimulate the economy too much nor tighten the economy too much. I think policy has to become a lot more neutral. What this means for fiscal policy is that you need to run fiscal deficits closer to last year, not make it too high or too low. What does that mean? It means that as soon as your state elections are over, increase pump prices. Good burden sharing of the oil shock between government and the private sector is the healthiest when you're having a big global growth shock. In India's case at this point of time, if we actually let government take all of the pressure, it's actually worse for growth. Because if government takes all the pressure, it cuts expenditure somewhere else. It's a zero-sum help. But if consumers take some of the pressure, yes, they cut consumption, but they also dip into their savings. So they don't cut their consumption 100%. So you want the consumers to share this burden for the growth shock to be more manageable. And I hope we are able to increase pump prices in May. The second thing quickly I want to say is that right now markets are pricing in a lot of RBI rate hikes. OIS curve, which I just don't understand anymore, is pricing in about 6.5 repo rate hikes at this point of time. And people are worried that inflation will rise and RBI will start cutting, also because using interest rates as a FX hedge, FX protector, which it has started, which it had done back in 2013. My own sense is that if this is going to be more of a growth shock, then the bar for RBI rate hikes is high. And RBI should wait and not rush into it. And from that perspective, I'm not expecting a rate hike in the next week's meeting. I also think that if oil averages less than $100 a barrel, even if we have a El Nino coming in, my sense is the RBI can get away without hiking because the growth cost will be quite large. So this is my sort of policy prescription. Fiscal deficit, try to stick to last year's number, increase pump prices, don't let the government take all the pressure. And for monetary policy, don't be in a rush to hike rates because this time it's turning out to be a little more of a growth shock than an inflation shock as time passes.
Pranjal, very well put, and I think you've described so many aspects of this. Good morning to you. This is Alex. I just want to invite you to also comment on the health of the states, because you spoke about the fiscal deficit for the center, and if you put both of those two together, the center and the states, are you a little worried about how a few state finances will move through what I think you're describing as a crisis?
Yeah, I think states, first, we have a lot of divergence across states. But, I'm going to simplify it by adding up all the states together. Once we do that, I think the net state deficit right now is at about 3% of GDP, which is really their max. They can't increase fiscal deficit by more than that because, legally speaking, they can be taken out of the market and not allowed to borrow by the RBI. So they have a hard cap, which, by the way, the center doesn't. So in crisis years, the center ends up splurging, but the states don't because the states don't have an opportunity. So I think that is what will protect state finances. They won't allow them on aggregate to cross the 3% of GDP limit, but we could see some slippage on the central front. Now, I don't think all is bad. I don't think it's going to blow out in a major way because yes, we have pressures. The government cut excise duties. That's bad for revenue. Fertilizer subsidy bill may increase. That's bad for the fiscal deficit too. But on the other hand, we have some extra money coming in as well. We have 1 trillion from the Economic Stabilization Fund. And my sense also is that the RBI will be giving a larger RBI dividend to the government this year, which basically means that on the whole, there could be some fiscal slippage, but I don't think it'll be very large. And fiscal will be working in what I call neutral policy, neither too stimulative and nor too contractionary. So fiscal is not my number one worry. Inflation I'm worried about, but it's not my number one worry because I do think that we have what we call flexible inflation targeting. In years like this, we are actually allowed to run inflation which is up to 6%. We don't have to constricted at 4%. RBI has a band, and I think it's especially for years like this. So I don't think RBI will be in any pressure to keep it at 4. It's okay if it goes to 5.5 or 6. So from that perspective, inflation is not the major worry for me. I think for me, the two main worries are what happens to growth if all of these quantitative restrictions continue, and second, what happens to capital inflows, which have been very weak and have been weighing on the currency.
And in fact, that's exactly what I want to ask you about. Already when the budget was announced, Pranjal, you had a situation where the bond markets reacted perhaps in not as anticipated, right? The number was maybe a little higher than they had anticipated. And already you've seen yields move higher. I'm just wondering what you're thinking about flows into capital markets in general, and particularly into bond markets. Do you think that there will be an absorption of that higher fiscal deficit number?
So I think the bond markets are worrying about two things right now. Number one, that the fiscal deficit will be higher than budgeted. And here my sense is that eventually it might be a little higher, but it won't be too much higher. So I don't think that'll be like a big problem as time passes. And I explained that a moment ago. The second thing the bond market is worrying about is rate hikes from the RBI. And it is worried about that. Particularly if you've noticed in the last couple of days, the RBI has announced lots of regulatory measures to end speculation in the currency. And now that it's going to be making all these big regulatory changes like it did in 2013, what if it also increases rates? For it to become a currency defense. And that is something that the bond market is also fearing at this point of time. And that's why we've seen in the last 10 to 12 days, bond yields have really gone up. And at this point, they've sort of at the 7% range. And my sense is that getting into the policy meeting next week with some fears that there could be a rate hike, I think this market is going to be a little stressed. So look, things are unclear in the bond market right now. And people are really worried about the fiscal and the inflation.
Okay. Pranjal, assuming that the policy prescription that you gave is stuck to, what's the growth impact you reckon? Assuming that this lasts for 2 weeks, the government passes on some of the burden to the consumers, fiscal deficit, let's say I'm forwarding to Feb 2027, and the fiscal deficit targets are maintained. So all of that happens. What's the growth impact? Is it 0.5%? Is it less than that? Is it slightly more than that?
Yeah, so I'm going to simplify it. I'm going to say if oil averages $80 a barrel, which basically means that the worst is behind us, even though the path from here could be a little uncertain. And overall for the whole year, the average is $80 to $85 a barrel. My sense is growth could be about 6.3%, which is 70 basis points lesser than the 7% I had penciled in before the crisis energy shock happened. And I would say that at that point of time, inflation would be slightly higher, not too much, 4.5%. I don't think we'll see repo rate hikes because inflation will not be that much higher. And fiscal deficit slippage will be quite minor. Instead of 4.3, they'll probably end up with 4.5% of GDP fiscal deficit. I would generally call this a manageable sort of scenario. But if oil averages $100 a barrel through 2026, then my sense is growth dips much below 6%, and I would say close to the 5.5% ballpark because of all of the quantitative constraints that make the growth drag a lot more brutal. I would say inflation goes up to about, between 5.5%. And at that point, with oil being, more than $100 for a few months, the RBI may actually give a rate hike, not maybe so much for inflation, but maybe as a currency defense. So these are the two worlds I'm seeing, oil at 80 and oil at 100. Of course, oil at 80, I think will still be manageable.
Fingers for oil at 80 or below, though that seems a different era altogether. But Pranjal Bhandari, thank you so much for taking the time out and being with us today. Really appreciate your time.
Great to be here. Thanks.
And the clarity of thought. We all pray for oil prices to become a lot more reasonable, for the macro to look a lot more benign.
Yeah, and as we end today's program, we're at cuts of 2%, pretty much where we started out, with the drop of 460 points in the Nifty 50.
I mean, below 22,200 is what, and that's going to be the pressure point from here on.
It is. Well, from both Neeraj, Hiral and Third, myself, thanks so much for tuning in. It's been an absolute pleasure, and the team that put this show together. Up next is Ask Profit. You can ask your questions there. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Sharad Dubey today. And for viewers who are tuning in, you can give us a call or send your queries on WhatsApp number that's flashing on your screen up there. But before we do that, let's take a quick look as to how the markets are doing right now. And they're beating after the kind of commentary that's come in the morning today from Trump. I think this reaction on the markets was pretty much expected. Right now, we're seeing a downtick for around 460 odd points on the benchmarks. The Nifty 50 is down by about 2 odd points. Now, trading in that 20 to 200 levels. We're just about 15 points up in that 20 to 200 range. We'll have to see whether that level is breached or not. But with regards to where the heat map also goes, let's try to pull that up. All your counters are in the red as we speak, except for TCS and HCL Tech, slightly in the green. TCS is up by about 0.4 odd percent. Otherwise, there's pressure seen in Eternal, Interglobe Aviation. After a good run up yesterday, Interglobe Aviation today is down by about 4 odd percent. And Pharma, Shriram Finance also seeing a downtick of around 3 odd percent. L&T, SBI, Eicher Motors, Tata Steel, etc. All of these counters, across that board are seeing pressure. The Bank Nifty also is trading with cuts of about 2.6 odd percent and around 1300 points of a downtick is what it's seeing. Let's quickly try to pull up the sectoral heat map to see as to what's happening there. I'm guessing that's right across that map as well, and it is. You have PSU banks tanking the most, down 3.6%, followed by Pharma yet again taking that knockdown by about 3.4 odd percent. Realty, the pressure continues, down 3.2%. Media, Metal, Bank are the other counters which are seeing cuts of about 2% each. But let's try to pull up the advanced declination. I'm sure it's the opposite of what we saw yesterday. Quickly, if we can see that chart to see as to how many counters are advancing versus that of how many are declining, and that's kind of stayed even since the start of the trade. You have around just 300 odd advances versus that of 2,200 odd declines, and that's the flavor of the broader end of spectrum, right, Sharad?
Well, yes, the pain is there. Yesterday we had a hope of a value buying in SMIDs, and today it's just the reversal. Maybe April Fool's Day came one day late.
Exactly.
But interestingly, there's not much to talk about when it comes to the gainers. Of course, Latent View, Ola Electric, Page Industries are trying to hold the fort, but I think interestingly the IT pack, they're trying to show some signs of recovery. We have some larger names also doing well. If you could just pull out the Nifty IT index to show Coforge, TCS, HCL Tech, not much, but nevertheless they're trying to get some recovery in. And interestingly, the Indian rupee is also something which you should be watching out for, because there was an RBI intervention, and because of that, it's like a dichotomy where we are seeing the Indian rupee is actually strengthening. Of course, yesterday there was a trading holiday. But coming back to the markets, concerns are definitely there. And joining us is Avinash Gorashkar and Kush. Both of them are joining. Good afternoon, good morning, gentlemen, to both of you. And Kush, I just want to get you in here. The markets are playing a really nice joke, you could say, but it's coming one day late. But what do you think now for a positional person? Is there some value emerging? Or would you like to stay away from it because it's a long weekend and position should not be taken forward?
So first up, a very good morning. And I think the joke could not have been timed better. Kal April 1st tha, upar aaye market, made a fool of all the bulls, and then bam, right? No, but from a very near-term perspective, do you take a position? I was expecting some sort of a rebound. A little over an hour right now, we've not seen that. Maybe towards the close it might come about because it's a long weekend and people might not want to carry too many short positions also, and hence. But from a positional standpoint, like I've maintained for the last few sessions, maybe if not the entire week, is that things are now starting to look a little attractive. I know the prices are sliding lower, but they're sliding towards the capitulation category, and you could see some sort of a rebound, a meaningful rebound, as Trump says, in 2 to 3 weeks time, or maybe a little longer. But prices are for sure coming at levels where they are signaling capitulation.
Okay, all right. So that's the quick view coming in on markets. But let's start taking your queries. The first one is coming in, and this is on Bank of Baroda. Our viewer, although he or she has not given their name, but is asking whether from a 1 year perspective, are these the right levels to enter into this counter? Kush, I'll come to you on this one. The stock, of course, is tanking today. A lot of PSU banks are, but your view on the charts for Bank of Baroda?
I have a feeling my view on a lot of stocks today is going to be very similar. So let me start with that broad view first.
Yeah.
Like I said, a lot of names are coming close to capitulation, right? So you will find levels attractive.
Right.
These are the trading levels or some positional setups?
Very good question. These are actually positional setups. If you have a 3 to 6 month out kind of a view. See, because from a very near-term perspective, even after being oversold, stocks could go further deep into oversold category and oversold territory, right? So you could find Bank of Baroda at very attractive levels today, but tomorrow you might find it another 3 to 5% lower. But the risk-reward ratio remains very favorable. Now to come to specifically Bank of Baroda, if you will see the long-term support zone for the stock is actually at 230. And hence, let me reiterate that view. The risk-reward ratio from a positional standpoint looks very attractive. Maybe factoring for volatility, you might want to place your stop loss a little lower. So say about 220, 225, that zone. But this is a good area to start accumulating or nibbling into a stock like Bank of Baroda.
All right, but let's move on and go on to our first spokesperson, P. Srikumar from Hyderabad. From WhatsApp, he has asked the question, is this the right time to enter stocks such as Titagarh, Mazgaon Dock, BML, Cochin Shipyard? These are the largely, you could say, the defense-related names. Avinash, I want to get you on this. Good afternoon. Any views for the long term for these stocks right now, or would you like to wait out a little bit more until the valuations become more better?
Sharad, I think, as far as defense companies are concerned, Garden Reach gave a very positive outlook. Bharat Electronics has also given a very strong kind of outlook commentary. My sense is, in these companies, it's always better to buy in bits and pieces. Maybe, you could allocate, say, 10-15% of your capital and not buy everything in one shot, because, these are companies which are sitting on very strong order books for the next 12 to 18 months. BEL specifically sits on an order book of 74,000 crores. Company is virtually, debt-free, has got a good revenue visibility. But even in this kind of market, I would prefer that, say you invest 10-20% of your capital and start an SIP. It's always better to stagger your buying. And I think you can definitely make a decent risk reward once the volatility in the market settles down. So yes, from a longer term point of view, you can buy, but there's no need to buy everything in one shot. And I think look at a time frame of at least 12 to 15 months. In the short term, volatility will be there, but in the medium to long term, one could expect a decent risk reward.
Coming on BEL, the next one is coming in from Madhava, who's asking about Gujarat Gas. He's bought at the levels of 415 and 500 is the quantity that he's bought. Wants to know if he can average or sell this counter from a long-term perspective. Avinash, I'll stick with you for this one. With everything that's happening with regards to West Asia war, what's your take on Gujarat Gas?
So I think, this business is not going to be finished, because of one event. I think in the short term, there could be margin pressure, maybe for the next 1 or 2 quarters. So, the investor needs to take at least 12 to 15 month kind of time frame, and he should average only if he's an investor. If he's a trader, then I think there's no point in adding. But if he's looking at the next 12 to 15 months, definitely one should add this stock. It's a good business, very strong promoters, and most importantly, this is not a business which is going to dry up. So once the volatility gets over, I think things should improve. So I think, definitely one should average, but please give a time frame of at least 12 to 15 months and stay invested.
That's a view coming in, but another query has come in, and of course the spokesperson hasn't given his name, and yes, so this is Satyan here, and he has bought Adani Power at 156 rupees. This is for the medium-term target and stop loss is needed, and this is outlook is coming in from Kush, and he has stated that he loves your humor of sense or sense of humor. Either way, it looks like you have a fan. Adani Power, key levels to watch out for and stop loss.
I like to see them as fellow investors and traders in the market. We're all learning together. But yeah. Satyan, that's what the name, right? Yes. Satyan, thank you so much for making that compliment. I think we could all use a bit of a laugh, in times like these. So once again, thank you so much for that compliment. Now, as far as Adani Power goes, again, one of the few stocks which has actually withstood the kind of fall that the markets have seen. Of course, we all know the reason why the entire power pack is doing well, Coal India, NTPC, some of these names. This one too has actually gone against the trend. Now, from a very near-term perspective, the breakout on this one comes very close to the price at which you've bought, 155, 157. That zone is actually a breakout zone. So I will continue to hold Adani Power. On the downside, I will give you a stop loss close to the 145 mark. Maybe a little lower if you want to factor for volatility. But once it crosses that buy price, which is that resistance zone, I think you could see a further spike up even to the levels of 165 and 172. So continue holding Adani Power, but as things are, put a trade stop loss.
All right. Standard disclaimer, viewers, Adani Power is also a part of the Adani group of companies, and so is NDTV Profit. But moving on to the next question, which is coming in on Exide. Our viewers bought 34 shares, bought levels of 416. Wants to know a long-term view on this one. Avinash, your view on Exide Industries?
So I think again longer term view continues to be positive. I think Exide is a very large vendor to most of the auto OEMs, and I think looking at the kind of trajectory we have seen in the passenger car sales, the commercial vehicle, and the two-wheeler kind of volumes, definitely the next year is going to be pretty solid. Exide will also be making batteries for the electric vehicle segment. So I think longer term prospects are good, but definitely short term volatility could come in. So keeping a time frame of 12 to 18 months, I think one should stay invested here.
And the next one is by Saurabh Mohite. He has asked for Astra Microwave. He hasn't given his levels as yet. He has stated it's hold or sell. He must be buying. The important levels are not out here. Kush, I want to get your views on this Astra Microwave. We spoke about defense also, but is it good time to hold or sell the stock?
Yeah, hold's not a bad strategy, correct, given that the stock is consolidating. My concern is that the entire defense pack, most of them at least, don't have momentum, barring something like a data patterns or an MTAR tech if you see the medium term setup, right? So here too, while the stock is consolidating and not falling per se because of the markets, I would suggest a hold, but I really doubt if it will have a really big up move even when markets stabilize. So again, because you've not given the entry price or the time horizon, very difficult to comment. But like I said, you could continue to hold. The stock has strong supports near the 865, 870 zone. That should act as your stop loss.
All right, okay, so that's the view on Astra Microwave. But viewers who are tuning in, you can also give us a call and maybe go ahead, call us and ask your queries live. Kush Pura is with us in the studio today and Avinash is more than happy to, answer all your queries. So please do that. The next one is coming in from Namit, who's writing us all the way from Munich, asking about RFC. He's bought 600 shares at the levels of 130. He says he's a long-term investor and wants a perspective on this one. Avinash, your view on RFC?
So I think if the investor has a couple of years in mind, he can definitely stay invested. See, IRFC has got Indian Railways as their only client and most of the capex, 40-50% is funded by RFP. So, the business is very stable, but in this kind of market, the stock will take a little bit of time to get re-rated. But overall, I think looking at the long-term structural opportunities in the railway segment, definitely a good value pick at current levels. Time frame should at least be 12 to 18 months. So I think, if you can have that time frame in mind, you can definitely accumulate the stock. It has come down to good attractive levels, but the risk reward will be favorable only if you stay invested for the next 12-18 months.
Right. And now Ambika from Chennai has messaged, she's holding roughly 150 shares of KPIT Tech and the price is at 650 rupees per share. Still at a profit. Yesterday we saw a good up move coming in as well and it's a recovery also. That means there is strength in the stock. Short to medium term perspective, I want to get your Kush on this. Looks like good on the charts because there has been a big correction and analysts are also very bullish on this counter.
I am so glad that her entry point, and I'm assuming this is a recent entry, right? I'm so glad that the entry point is now.
Right.
Because the stock has seen a massive fall, no recovery on the sides from a near a medium term perspective. So I'm glad that, at least you've got the entry point right. So kudos to you on that. Now, is the recovery possible? Multiple reasons why, yes, it is possible. The reason I say that is because now the stock's starting to consolidate. If you see the last 4, perhaps even 4.5, 5 weeks, the stock's now found a bottom. It's not fallen as much with the rest of the market. You're starting to see positive RSI divergences, massively oversold. So I think this is a good entry point, risk reward ratio extremely favorable. I think you should continue holding on to this one. I would suggest a slightly deepish stop loss close to the 600 mark. But once the stock starts to move higher, I think you could very easily see levels of 750 and then even perhaps 825 on the upside. So risk reward ratio very favorable, good entry point, kudos to you on that.
Okay, so that's the view coming on KPIT Tech. We've got our first caller. Danis is calling us from Kerala. Danis, a very good morning to you. What's your query about?
Good morning. I had purchased shares of Tata Motors commercial vehicles at the average price of 465.
Okay.
400 shares for rupees 465. I would like to average it now because now it has come down very much. So I would like to know the fundamentals and whether I can do it right now.
Got it. Okay, got your question, Danis. I'll take this up with Avinash. Sir, Avinash, he wants to average his position on Tata Motors CV. He's sitting on a loss of 34,000 odd rupees. Your view?
No, I think he can definitely average at the current levels, Mahima. I think, the business is definitely going to do much better in FY27. And despite the fact that, the previous month's numbers, March numbers have not been very encouraging for the CV segment, I would say that next year should definitely be good with a strong GDP and with good focus by the government on domestic capex. But I think if he wants to average, I think it's better that he averages in a staggered manner, maybe not put entire money in one shot. So maybe buy around 20-25% of the stock, as of now, and wait for some, the price to further stabilize, because as the market is volatile, he could get entry opportunities maybe at even lower levels, which should, improve his average buying price.
Right. And there is a long-term investor, Anthony. He has messaged us. He has stated he'd like to buy Interact Building Solutions. Would this be a good level to enter? And of course, this is a long-term perspective. So, Avinash, I want to get you on this. Remember, this entire segment was once the darling of the markets in 2024, but a significant correction happening across this space. Avinash, would like to recommend important good levels to enter here, or do you think to stay away from this space?
I think, Sharad, I would prefer to wait for the Q4 numbers. As you rightly mentioned, this was the darling sector of analysts, a few quarters back. But I think Q3 numbers have not been very great. I think, they have been slightly only satisfactory. So Q4 numbers are important. I think one would like to know what's the kind of run rate in Q4. And I think maybe at lower levels, it could be a good entry point, because valuations are not cheap. They are fair to expensive. So despite the fact that this sector is growing very rapidly, I would say the pre-engineering board segment, which is the PB segment, definitely looks attractive, but I think one should wait for lower levels. So I think no need to hurry. Wait for the Q4 numbers and then take a call.
Okay, so that's the view on Interact. But we've got our next caller. Gaurav is calling us from Gujarat. Gaurav, a very good morning to you. What's your query about?
Hello. I have 100 shares of Paradeep Phosphate at 120. So what is the technical outlook for 3 to 6 months?
Okay, got your question. I'll take this up with Kush then. Kush, your view on Paradeep Phosphates, what are the charts indicating?
Rebound likely. At least it seems like from a near-term perspective, it seems like the stock's actually found a bottom around that 105, 103 zone, and it's attempting a rebound. Of course, everything that's happening is keeping the stock from spiking up, but the volume accumulation on select days has been very healthy. If you go mid-March, the stock's seen a fairly healthy delivery markup as well. So yes, I would continue to hold this one, keep a stop loss at 103, and on the upside, I won't be surprised to see the stock head to 118, and once that is taken out, perhaps even 127, 126 kind of zones. So yes, you could continue holding on to Paradeep Phosphates.
Okay, so the whole call is coming in for Paradeep Phosphates. Joining in is Richie Lalu from Kerala. Now, interesting time, and Avinash, is a query for you. And is it a good time to enter Medani? There's a long-term view coming in. Your views on that, Avinash?
Yeah, I think, Sharad, if the investor has a 12 to 18 month time frame, these are defense companies, in specialty metals, alloys, this company works and has been doing reportedly well. But I think if you expect a decent risk reward, then I think you need to stay invested for the next 12 to 18 months. And again, in this kind of market, Sharad, it's always better to buy in a staggered manner. No need to buy everything in one shot.
Okay. All right. The next question is coming in from Puneet, who's writing us from Ghaziabad. I hope it's not the Puneet who's on duty today. Okay, Puneet from Ghaziabad is asking about ICICI Pro. He's basically asking this for you, Kush. He wants a target price for the next 3 to 6 months. He's holding 50 shares at the levels of 2975. What is the target price that you could give him, seeing the charts?
This would be ICICI Pru.
AMC.
Are you sure?
Yes. He's given this. Oh no, so this could not be true. So
this would be the life insurance company.
Life insurance, fair enough.
Mahima, have you realized, incidentally, a couple of times when Puneet is not here, we do get a query from a Puneet. So that's on a lighter note, something that we've observed. No, but so I have a little skeptical kind of a view on the insurance space. I've seen some of these names not do so well, in the recent past, and right now the structure on ICICI Pru Life has also broken. It had a strong support near the 500, 525 zone. Today's move just breaks that. So I will be a little cautious on this, but since you already have a position and you've asked, for levels, on the downside, 470, that's your stop loss. On the way up, I would actually be looking at 525 as the first level to get to. Once that is taken out, I think 560 is on the cards. But like I said, the structure looks a little weak.
All right, the structure does look a little bit weak. But we have a new telephone caller from Hyderabad, Mr. Reddy. He has Hathway. I expect a Hathway cable. There's a stock, the price was buying price at 20 rupees and it's roughly 55,000 share, but a significant loss coming in. And you can say the stock more than 50% losses here. Kush, good time to Hi, Mr. Reddy.
Yeah, sir. Hi.
Yes, what's your query, sir? You'd like to book your profits here or look at important stop losses now?
Sitting on a loss.
No, sir. Last, sir.
Oh, yes.
20 rupees. Lost, sir. 55,000 quantity, 5.5 lakhs. Approximately 6 lakhs lost, sir.
Okay, so it's a massive loss of 6 lakhs. I just wanted to get Kush on this. You need to come out of this counter.
So first thing for Mr. Reddy is that it's a good idea to have a stop loss when you enter a trade, before you enter a trade, so that you don't see such deep gashes. Like I normally say, when you enter a trade, you should know two things very clearly. One is the stop loss and the second is the target, right? So that's just something, from a trading strategy perspective. Now, the stock's actually been a rank underperformer for years now, for many years. And now it's actually very close to its COVID lows. Mild positive divergences suggesting that there could be an uptake. Does it take the stock all the way up until 20, his buying price? I have my doubts on this one. So just from a recovery standpoint, I would suggest he continues to hold this one with a stop loss at the 8.5 mark, right? And any move towards about 11.5 and then 13 should be taken as an opportunity to perhaps offload a little. So you could hold and exit on rise. Your buying price may or may not be achieved, in the recent or in the coming weeks.
Yeah, I think Kush made a very valid point, because at this point of time when markets are falling so much, especially for a stock like this, which is kind of illiquid right now and has turned into almost a penny stock, one should be careful with regards to their stop losses. But moving on to the next question, Shubham is asking this and asking about Jio Finance. He says that he's got 7,500 shares at the levels of 310. Wants to know if this can reach 500 plus levels from a long-term perspective. He's sitting on a loss of over 6 lakh rupees, if I'm not wrong. Avinash, I'll come to you on this one. Your view on Jio Finance?
Yeah, I think, Mahima, a lot of people have got stuck up in Jio Finance. And my sense is that over the next, say, couple of years only, I think you could get a decent risk reward. See, I think Jio Finance is still in the process of putting its business model in shape. The full scalability of the business is yet to get reflected in numbers. And I think the only comfort is that, the parent is very strong. So I think within the financial services space, they should definitely do well. But I think if the investor really needs to create an alpha, he needs to stay invested for the next 2 years. And in fact, he could average also. I think longer term, yes, the business looks positive. But in the short term, you need to have good earnings triggers, to re-rate the stock.
Okay, so that's the view coming in on Jio Finance. It's time for our first rapid fire round of this Ask Profit edition. Avinash and Kush, you both know the drill. I'll start taking the first question, which is from Chandrasekhar, who's writing us from Hyderabad, asking about Zentech. He's bought this at the levels of 660. 300 shares is what he's holding. Wants to know if he can hold or book profit. Kush, your view?
Yeah, continue to hold. Stop loss at the 1180 mark.
Right, there's Naman Jaiswal. He has bought 70 shares of Lodha Developers at 1,063 rupees. What should he do? Buy, sell or hold? Kush?
Hold. Stop loss at about the 600, 625 zone.
Okay, BSE bought at the levels of 2105. Nitin from Andhra Pradesh wants to know if he can continue to hold this from a long-term perspective. Avinash, your view?
Yeah, he can continue to hold.
Right, and now we have Raj. He is asking what are the prospects for Asian Paints, and that's actually been last 5 years. It has been the same here. Now, how much does it change going ahead with Opus entering the picture? Avinash, your views on that?
No, I think market will be competitive. In fact, the rising crude prices are also a big headwind. So I think, if you have, you hold, but no fresh buying suggested.
Okay, LG Electronics is the next one. Akash's buying price is 1140. 13 is the quantity from a medium-term perspective. Kush, enough data on the charts?
Limited, but with the current trend, it's a good idea to exit.
Kumar is having Translay Lighting, almost 420 shares. The average price, Kush, is at 660 rupees per share. Should he average now?
You know the answer to that. Don't average, hold with a stop loss at 445.
Okay, the next one is coming in on Eternal. Sukumar Roy is asking from a 2-year perspective, Eternal or Swiggy, which one is a better best? Can I invest now? Avinash, your view?
Yeah, you can look at investing in Eternal, but again in an SIP approach.
Okay.
Alright, Asta from Delhi has come up with a query and she has asked, is this the right time to enter SBI? Kush, your views on that?
in a staggered manner, yes, you can enter SBI, though I would still suggest a stop loss at the 925 mark, but yes, in a staggered manner, you can.
Okay, the next one is on railway counters, Avinash. Texmaco, Titagarh, Jupiter Wagons. Which one, from a long-term perspective, can Kumar enter into? 2 to 3 years is his time horizon. He's writing in from Frankfurt.
I think Texmaco and Titagarh look attractive from a 2-year time frame.
Okay.
Right, and Sunita from Hyderabad has messaged us. Vari Energy, she has bought it at 3,700 rupees. Of course, she is at losses right now. What should we do, Kush?
You should continue to hold Vari, structure relatively positive, stop loss from a positional standpoint, close to the 2750, 2800 mark.
Welspun Corp is the next one. Vinay Singh is holding 65 shares at an average price of 874. From a 1-year perspective, Kush, slightly long-term view on the charts?
Yes, you should continue to hold, stop loss 775.
Well, this is very interesting. Khurshid Khan from Delhi, he is holding ITC at 350 rupees per share. Is it advisable to add more at current levels, and the horizon in the counter is for long-term? Avinash, want your view on ITC now. 350 was the buying price.
I think he can go, buy fresh if he's got a 12 to 18 month time.
Okay, all right. So that's the view coming in on ITC. But viewers, time to slip into a very, very short break. But don't go anywhere. We'll be answering more queries on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life. Hello and welcome to watching Prime 5 with me, Haisha Sehgal. What's happening? How to do? The show that sets the prime time agenda. We'll be deep diving into this topic to tell you what's at stake. Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
welcome to NDTV Profit. My name is Varsha. Well, Amir Chand Jagdish Kumar is in focus. This is on the back of company getting listed on bourses today. Well, the issue was price between 201 and 212 per share. And if you see, company has growth prospects going ahead. But to speak about what are the growth prospects and what's the vision for the company in the next 2 to 3 years, we are here joined by Mr. Rahul Suri, who's the promoter and director at Amir Chand Jagdish Kumar. Well, Mr. Suri, welcome at NDTV Profit. Always pleasure to have you. You know, Mr. Suri, congratulations first of all on your listing, and now when whole India will participate on your growth story, what are the growth targets set for FY26 and FY27 considering revenue and margins?
Thank you, Varsha. Thank you so much for your wishes. Let me tell you about the company a little bit, and then I'll tell you about the future growth story. So the company today has the largest unit in Amritsar, which is a mega unit by the Government of India, given a status by the Government of India, Government of Punjab. Then we have another unit in Haryana and another unit in Delhi. The Amritsar unit is the carbon green unit, registered under UNFCCC and generates its own electricity and own power. Altogether, these units bring us, give us a 550,000 tons production capacity. We are using 50% of that, so it gives us a big headroom to grow further. So the idea going further is to become, you will see the Amir Chand Jagdish Kumar 2.0 or Aeroplane 2.0. And the idea going forward is to become a full-fledged medium to large FMCG player. And that is what you will see in the next 2 to 3 years.
On that note, sir, majority of your revenue currently comes from rice exports and few FMCG products also. Just wanted to know the current contribution when it comes to other FMCG products, and where do you want to take that target to?
Sure. Currently, because the company for the last 40 years, it's a 40-year-old company, and started with my father. It was basically a rice branded company. We recently footed into FMCG products on the basis of our logistics partner, whatever they were selling earlier. So it is very small revenue as of now, which is 99% rice and about 1% of FMCG products. But the market size for all these products is between 1 lakh crore to 1,50,000 crores. Even smaller products like Besan Maida is about 50,000 crores. So even if we are able to take a small percentage out of that, even single digits, we look forward to a big FMCG products.
Right. And so
big FMCG company.
Got that view. And sir, talking about some financial numbers, if I were to talk about in the last 2 years, the revenue growth, the CAGR growth in terms of revenue has been at around 23%. Just wanted to understand how will FY26 look like, because for first half, the revenue has been around 1,000 crore. If I take the same run rate going ahead, for second half, the revenue will be around 2,000 crore, which is kind of muted over FY25. Just wanted to understand the revenue growth for FY26 and FY27 going forward.
Sure. So basically it is, this industry, if you see all my peers also, you will see that H1 is smaller and H2 is always larger, because this is an industry which has the crop only comes once, which is in September, October, November. So always the second half is bigger than the first half. So you can probably say the first half is about 40% and the second half is about 60%. So I would not comment on the numbers right now, because I think it is that is not, but you'll see it very soon. But definitely you can understand from there that the first half should be about 40% or lower, and the second half would be about 60% of it.
Right, you heard the management of Amir Chand, and this is commonly known, the brand is commonly known as Aeroplane, but of course the listing was disappointing considering the way markets are down 14%. But moving on to our stock related queries, Shankar I think is waiting by from Chennai. Shankar, a very good morning to you. How can we help you?
Very good morning. Actually, I bought 10 shares of Hitachi Energy, that means Power India, at the rate of 19,000 rupees. My average price is 19,000 rupees.
Okay.
Shall I wait for the target of 30,000 in coming months?
Okay. Shankar, I must appreciate that you've, bought it at good levels and have made handsome profits. I think I'll take this up with Kush. Kush, do you think 20,000 is a possibility on the charts for this one?
20,000?
20,000, I think.
30,000 is suppose. 24 is the current price. So
Okay, yeah, sorry, 24. So 30,000. Yeah, I think.
Yeah, no, I think this is a good stock. He's identified it, the right stock, entered at the right price, and most importantly, held on to it, despite all things that have happened. So yes, a stock consolidating in a market like this, you take that as a massive positive. Continue to hold. I would suggest, a stop loss nonetheless, and that should come close to the 23,000, 23,300 mark factoring for volatility. But other than that, you should continue to hold Hitachi Energy.
Okay, so that's the view coming in on Hitachi Energy. Yogesh is another caller who's calling us from Jaipur. Yogesh, a very good morning to you. What's your query about?
Good morning, Mahima. Good morning. Thanks. My query is on the Kush.
Okay.
I have Ultratech. This is 26% down for last month.
Yeah.
So I want to jobbing for it, and I ask you, 10,500 I purchased for 50 shares. और मैं actually I'm Rajasthani, so last time वो says that you can tap in Rajasthan also. So may I buy for that or not?
Okay, got it. ठीक है. I'll take this up with Kush then. Kush, Ultratech Cement, what's the view on the charts?
So I know what Yogesh ji is
saying.
I could not I'll tell you what I did. So last time I think it was him, he called, and he was from Jaipur. Happens to be my native state, Rajasthan at least, right? So I said we could have perhaps had that discussion in Marwari. So I think that's what you're referring to, if I'm not mistaken.
Got it.
But yes, no, nevertheless, thank you for that query. I think you should continue to hold Ultratech because the buy price that you have is not too far from the current levels, and the stocks come off significantly. Not very constructive on the cement space as a whole. If you heard me in the morning show, I think we had a discussion where I said Dalmia Bharat and Ramco are the two that I prefer. But given the fact that the stock is close to support levels and your entry price is fairly attractive, it's a good idea that you could continue to hold this. Deepish stop loss close to the 10,000, 10,100 mark. लेकिन अभी आप इसको hold करके चल सकते हैं.
Okay, so that's the view on Ultratech coming in from Kush. The next one is from Ankit, who's writing us from Mumbai, asking about Enviro Infra. He says that he is a long-term investor and he wants to make an entry into this counter from a 5-year perspective. Avinash, would you recommend that right now?
Yeah, I think if he has an 18 to 24 month time frame, this is a company which is an EPC player, operates in the water kind of segment, and I think the investor needs to be patient. The stock has underperformed significantly ever since it went public, but numbers have been good. There are many marquee investors who have already invested in the company. So taking a next 12 to 18 months, he can definitely look at buying now, but obviously, buy in a staggered way.
All right, we've got our next caller. I think Rajesh is calling us from Noida. Rajesh, I believe you have a question on Hyundai.
Yeah.
Go ahead.
Is it good time to buy Hyundai?
And what is the time period that you're looking at, Rajesh?
Time is not problem. Maybe 6 months, 1 year,
Okay.
1.5 years.
Okay, got it. All right.
And first query is for Avinash.
Okay, if you're looking at short term, I'm not sure if Avinash will be able to give you a perspective from a 6 months perspective. But Avinash, considering that year to date the stock is down 25%, and this is the second consecutive year where sales have been disappointed for this particular counter, what's your view?
No, I think you rightly mentioned, Mahima, even for the month of March, if you compare Maruti numbers and you compare Hyundai numbers, Hyundai has been a disappointing kind of, performance. So I think, despite the fact that the stock is corrected by 20-25%, my sense is that unless the investor has a very long-term kind of time frame of at least the next 2 years, market would definitely like to see a very strong volume growth and obviously better margins. So till that time, the stock is going to remain in a very small range. Long-term prospects appear to be good, but in the short term, markets would await strong earnings triggers, in terms of volumes, in terms of margins. So till that time, stay invested, but no major fireworks expected in the short term.
Kush, your view on the charts from a 6 months perspective?
Yeah, completely agree. देखो इतना ज़्यादा oversold हो गया कि rebound आ सकता है, and that might just make the trade attractive. But if you ask me, the medium term trend for Hyundai is not positive. I prefer M&M over Hyundai, from a medium to a short term perspective also. So if I were given a choice, I would actually go with M&M.
Okay, so that's the view coming in on Hyundai. The next one is from Kishore, who's writing us from Hyderabad, asking about Bajaj Finserv. He's got 26 odd shares at the levels of 1735. He wants to know if he can go ahead and buy more from a long-term perspective. Avinash, would you recommend that for Bajaj Finserv?
Yeah, I think unless the investor can stay invested for the next couple of years, and again these kind of companies, it's always better to deploy your capital in a staggered manner. I would say that yes, he can definitely buy now, but buy say 20-25% of your capital, and obviously based on the markets you can buy on every decline.
Okay, we've got Ravi calling us from Hyderabad. Ravi, a very good morning to you. What's your query about?
Yeah, hi, good morning. I'm holding Canara Bank shares. 473 shares bought at 115.
Okay.
Just want to know short term, I mean, could this stock touch in to 160 in next 6 to 8 months or?
160, is that correct?
Yeah.
Okay, all right.
Or shall I book profits as of now?
Okay, I'll take this up with Kush then. Kush, do you think 160 is possible on the charts?
I would give it a fair degree of probability because the stock's actually been there, held out, around those levels for some time before, starting to see some sort of profit booking. So it's had a good run. I think once the rebound starts, banking names will participate yet again. So 160 could be a bit of a stretch, but then yes, I would assign some probability, to that event happening in the next 6, maybe 9 months if I'm pushing it a little, right? But the good thing is that your entry price is very attractive. The stock also has support around those 115, 116 zones. So you should continue to hold because despite the kind of fall, the stock is still in profit. So I would suggest a hold on this one. Maybe a slightly deepish stop loss close to the 110 mark. But from a 6 to 9 month perspective, it's a good idea to continue holding on to Canara Bank.
Okay, right. So that's the view on Canara Bank. The next one is coming in on Indigo Paints. Nand Gopal is asking this question. He says that he's holding 100 shares of this since IPO, and he wants to know that considering the stock has continuously been in red, how does this look from a long-term perspective? And Avinash, I know that the holistic view right now on paints is that because of rising crude oil prices, I think it's better to stay away from the sector. But for somebody who's been holding this since the IPO price, what would you recommend?
No, I think my sense is, valuations appear to be fair to expensive now. And I think unless the investor has got a couple of years in mind, I don't think, you're going to make a significant alpha here. The main headwind now is the rising crude prices. So I think there is going to be a lot of competition. So I think probably, he could look at holding on for the next 2 years, or he could possibly buy into some good public sector or maybe private sector bank, which I think could offer him a better alpha, something like Canara Bank or maybe a Bank of Baroda. These are very good, dependable names, and once the bounce comes, that bounce will be significant once the market stabilizes.
Okay, the next one is on Tata Capital. Shankar from Bengaluru wants to know if he can go ahead and buy this counter at the current levels. He's already owning 620 shares at the levels of 332. He's planning to buy 100 more shares, and he's directed this query to you, Kush. Enough data on the charts to give a perspective?
Rather limited. So it'll be best if Avinash could give a view.
Sure.
But just from a very near-term perspective, I think the stock is respecting some of the key support zones. So you could continue holding on. But as I said, it's better if you get a view from Avinash.
Yeah, because it's a fairly recent listing. Avinash, Tata Capital, what's the view? Averaging out makes sense?
Yeah, it makes sense if the investor is a fairly medium to long-term investor. But the stock is below the IPO price, and I think the Q4 numbers, once they come out, I think that would be a proper indicator to understand what kind of performance the company has delivered. Asset quality has been good, and the company raised a lot of money. So obviously that deployment is important. So obviously taking a two-year kind of time frame, he can definitely look at average.
Okay, the next one is coming in, and this is an interesting one. Jaya Chandran from Kerala is writing in, asking about SW Solar. He is holding 2,000 shares at an average price of 433. Says he's sitting on a total loss of 63%, which according to him is almost a 5 lakh rupees loss. Wants to know to hold, to sell, maybe average at the current levels. From a long-term perspective, what should he do? Avinash, your view on Sterling and Wilson, it's down 4.5%, but also to keep in mind that he's sitting on a significant amount of loss.
Well, I think it looks difficult, to expect the same price in the very near term. But I think probably, I think if he's got a 2-year time frame, he could still stay invested. But otherwise, I think a better switch would be Federal Bank. I think, there the prospects are far better than SW Solar. And where I think, you could expect a decent risk reward and get some part of his capital, compensated going ahead.
Okay. All right. The next one is coming in on Newgen Software. Chandra from Bengaluru wants to know if this is the right time to enter from a slightly long-term perspective. Kush, your view on the charts?
Yeah, no, I'd wait up a bit. I'd wait up because even before, the debacle and the war and all the falls started, the stock's been a rank underperformer. It's seen massive corrections from those 1700 odd levels. So like a lot of other names, you could see a rebound from oversold territories. But until the primary trend changes or you see meaningful, resistance levels, in this case happens to be about 480 or so. Unless you see those levels taken out, I think the, underperformance or at least the negative biased consolidation could continue. So I would wait and watch on Newgen right now.
Okay. All right. The next one is coming in on BPCL. Akshay has bought at the levels of 257 and 1168 shares is what he's holding. Wants to know if this is a good time to maybe add more of BPCL from a long-term perspective. Avinash, your view?
No, I think, Mahima, I think it's better to hold on because, with rising crude prices, April to June quarter is expected to be more volatile and margins could come under pressure. So wait for some time. My sense is, if crude prices rise, then it's better to exit OMCs and maybe look at, the upstream companies rather than the oil marketing companies.
Okay. The next one is coming in on Shriram Finance. Deepak is asking this question and wants to know, considering from a short-term perspective, does it make sense to make an entry into Shriram Finance? Kush and I were just talking about as to how volatile this counter has gotten, right? In the past 5 days, I think from 960, if I'm not wrong, it's come to 871 or 940, if I'm not wrong. Your view on the charts from a short-term perspective?
966.90 to be precise. So yeah, you got it pretty much bang on. But you're right. I mean, the volatility in the stock is massive. I mean, I think Neeraj has been pointing out the days when the market goes up, the stock is up massively.
Yeah, exactly.
When it's down, it's amongst the worst performers. So fair degree of volatility. But from a technical standpoint, it is starting to come to very interesting support zones. If you follow the Fibonacci series, then the 50% retracement of the current rally comes in at 844, 845. So while there is pressure, I would suggest maybe some entry now, but maybe you could consider it a little lower, close to the 845, 850 zone. That's when you could consider accumulating Shriram Finance. In that case, from a positional standpoint, your stop loss will be at the 820 mark.
Okay, all right. The next one is coming in on 3M India. Not a lot of time we get a query on this one. Sunny from Karnataka is holding 18 shares that he bought in August 2025. He wants to know whether he can continue to hold this one or not. Avinash has not mentioned the time frame, but your view on 3M India, if any?
No, I think here, the business is very solid. I think it's a MNC company, but, the liquidity in this counter is very limited. So my sense is unless the investor has a 2 to 3 year kind of time frame, he should not exit. I think he should hold on. And I think even if he wants to buy, I think it's better to buy on some declines, not at the current level.
Okay, the next one then is coming on Cyient Limited. Ravi Shankar is sitting on a loss of 42,000 rupees. I think he's holding 87 odd shares. He's not mentioned the buying price, but he wants to know if he can hold or sell this counter. Kush, your view on the charts?
You said the buying price wasn't mentioned, right?
Yeah, it's not mentioned.
Fair enough. So I think you can continue to hold while the primary trend is negative because the buying price is not mentioned. The only reason I'm suggesting a hold is for a bit of a rebound, and if if you're in a loss, then that loss could perhaps be a little lesser on the way up. So from an immediate standpoint, stop loss at the 730 mark. On the way up, the stock could very well first hit that 20-day moving average around the 825, 830 zone. But that's when you start offloading because, like I said, the primary trend is negative, but any rebound will reduce the losses.
Okay, all right. The next one, Subramaniam, I think is calling us from Chennai. A very good morning to you. What's your query about?
Hey, very good morning. My question is, I'm holding Bharti Airtel 15 shares at the rate of 1870.
Okay.
Is it the right time to buy more, accumulate more?
What is the time
for
horizon?
long term?
Okay, from long-term perspective. All right. Okay, then Avinash, I'll come to you on this one. Bharti Airtel, what's your view?
So Bharti Airtel definitely is a strong contender in the telecom space. I think if the investor can wait for the next couple of years, this should be a good portfolio kind of choice. I think, but he needs to stagger his buying, maybe buy in in small pieces and stay invested for the next 2 years.
Okay, all right. The next one is on Cupid. This is from Madhusudan, who's writing us from Hyderabad. Says if this is the right time to invest into this counter or not. Kush, even this particular counter has been pretty volatile. Your view on the charts?
Massive upswing, massive. Just to put that in numbers, April 25, right? Just a year ago, this stock used to trade at 12 rupees.
I know.
Get that? 12 rupees. And right now, despite the cool off, it's at 85. So it's a multi-bagger in a year's time already. So massive, a jump in this one. Very interesting that the stock has not corrected meaningfully and has multiple times touched that 75 level and respected that. I would suggest you continue to hold this one. This support zone of 75 acts as your stop loss.
Okay, so that's view on Cupid. The next one is coming in on Tenneco Clean Air. This is an interesting one, Avinash, because in the last 2 days, we have two initiating buys on this one, with one with a target price of 650, one with a target price of 700 on this one. Our viewer wants to enter into this particular counter, wants to invest 100 shares. Do you think that's the right thing to do? Your views on this one?
Yeah, definitely. See, I think this is an MNC company which operates in a very niche area. And I think in terms of profitability, in terms of cash flows, in terms of the customer base, the company is very well positioned. It has got a tailwind in the form that a large part of its business comes from the automotive sector. So yes, I think if the investor can hang on for the next 12 to 18 months, one could definitely look at buying this stock. I think it's a recent listing, but definitely considering the promoter pedigree and the product kind of focus, definitely it deserves to be added, but only with a long-term view.
Okay, all right. The next one is coming in on MTAR Tech. This is from Mr. Rao, who's writing us from Hyderabad. He wants to know if this is the right level to make an entry into this counter. Coach, would you recommend that?
I wonder if he's been listening to me for a while. Among the defense names, this is just one of the couple of stocks that I like. The correction in this, or rather, let's just call it profit booking. It's not really seen a deep correction. The profit booking on this one has been healthy. 50-day moving average respected. Yes, you can enter MTAR Tech at current levels. It's consolidating. Stop loss on this one would be at 33.75. That's the 20-day moving average thereabouts. And on the upside, I think the stock has room to go to about 36.50. And once that is taken out, 3800 levels also. So one of the more positive ones in the defense space, MTAR Tech can be bought.
Okay, all right. The next caller, Samir, I think is calling us from Kashmir. Samir, a very good morning to you. What's your query about?
Morning, ma'am. I have bought Asahi India Glass at the rate of 1,000 rupees.
Okay.
500 shares I have got. I need to know short-term target for this stock.
You said Asahi India Glass, right?
Yeah.
Okay. And you want a short-term view or a long-term view?
Yeah. I'm short-term positional trader.
Okay, got it, Samir. I'll take this up with Kush then. Kush, do you think it makes sense to have a position in this one?
Yeah, it's not a bad idea to hold Asahi India Glass, by the way. Stocks had a good run. The retracement that it is at currently, the 61.8% retracement comes in close to the 765 mark. It's not been tested per se. The stocks come close to those levels, but not really hit that. So in some ways, it is respecting those support zones. So I would suggest a hold. Stop loss at the 765 mark or just below, but you could continue to hold.
Okay, all right. Now it's time for our second rapid fire round. Avinash and Kush, as always, you know the drill. Try to keep your answers as short as possible. The first one is coming on TVS Motors. Our viewer Karthikeyan wants to know if it's bottomed out and whether it's time to accumulate from a long-term perspective. Avinash, your view?
Yeah, I think one can accumulate, but maybe try an SIP approach.
Okay, ICICI Bank is the next one. Vijay Kirti from Chennai wants to know whether to hold or exit this counter. The buying price is 1,222. Kush, your view?
Yeah, I would suggest a hold on ICICI. Stop loss at the 1055 mark.
Okay, Premier Energies, Kush, this one's also for you. Whether from a short-term perspective, this point, does it make sense to make an entry?
Just a quick update on ICICI. The stop loss level is 1155 and not 1055. Just an update on that. Premier Energies, yes. In fact, it's it's a call that we released on our advisory. So maintain a positive stance. You should you could consider adding or initiating a long call. Stop loss at the 860 level.
Okay, Suzlon, Rajiv from Kerala is holding at the levels of 45. Good time to average. Avinash?
Yeah, you can average at the current time.
Okay, the next one is on Anantraj. Vijay from Visakhapatnam is holding 235 shares at an average price of 566. Sell, add more from long-term perspective. Avinash?
Yeah, I think you can add more.
Okay, the next one is coming from, the name is not mentioned. I think Aniket is writing in, wants to know from a really long-term perspective, any realty stock that you're liking, Avinash?
No, I think reality is better to look at, companies like Loda. I think has come down quite significantly. Operates in the Bombay market, so could be a good addition.
Okay, the next one is coming on Hudco. From a short-term perspective, Kush, does it make sense to make an entry right now?
No, not yet. I'd suggest wait.
Okay, Colgate Palmolive is the next one. 5 shares. Lalita has bought at the levels of 2235. Continue to hold, sell, push.
You could continue to hold. Stop loss at the 1760 mark.
Okay, the next one is on ITC Hotels. Jayesh Parekh wants to know whether this entry point makes sense from a long-term perspective. Avinash, your view?
Yeah, definitely long-term looks positive, so we can add at the current level.
Okay, Jyoti Labs is the next one. Sabo from Kerala is sitting on a 56% loss. Do you think it's time to average? I know Kush, you would not recommend that, but your view on the charts for Jyoti Lab?
Same. No, don't average.
Okay. Zydus Life Sciences. Is this a good time to make an entry into this one from a 2 to 3 year perspective? Avinash?
Yeah, I think one can look at it from a SIP perspective, but can definitely be added.
Okay, SBI is the next one. Want to buy at the current levels? Are these the right levels? Kush, your view?
Yes, you can accumulate 945, 950 thereabouts could be a stop loss.
Okay, Ashok Leyland from a long-term perspective. Abin from Kerala wants to know if this is the right time to make an entry. Avinash, your view?
Yeah, he can average, but keep a time frame of at least 12 to 18 months.
Okay, the next one is on Bosch. Suman from Kolkata wants to know from a long-term perspective if this is the right time to enter. Avinash, your view?
No, I think avoidable to buy at the current level.
All right, that brings us to the end of this rapid fire round. Avinash as well as Kush, thank you so much for taking out the time and helping us answer all those stock related queries. But viewers, if you've missed out your queries on this show, then do stay tuned and of course tune in at 2 p.m. to ask more queries. But completely out of time on this edition of Ask Profit, do stay tuned. KYC up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand?
Hello and welcome to KYC. I am Sharad Dubey and let's start the show. It's a very interesting company today I have got. Yes, it's a small cap and it was recently listed as well, we could say, but some hints about it and I'll give you a little bit of twist to it. It's a Kolkata FMCG company. Yes, it's Kolkata based FMCG company. Second reason is it deals with Atta, Maida, Sattu. That means if you are from Bengal, you must be guessing it by now which company I'm talking about. But let me give you more hints. The company listed on September 29th, 2025. But after that, how the stock has reacted, that's very much important, and the stock is down 47% from its IPO price as well. Interesting. I've given you enough hints, and if you're from Eastern India, you must have guessed it by now. The company's name is Ganesh Consumer Product. This is the company which we talk about, which would be in a focus in KYC. But the question remains is, why are we getting this company right now? What's the reason for it? It's a small cap company. Is there any interest? Stock has taken already a big beating. The promoter have started buying shares in the company, and that's where the interest came for me. But there are other reasons also why we are calling this company in KYC right now. The margin outlook for FY28 and the growth levers. Remember, there's a backward integration at play and company slowly trying to shed off its B2B image as well. The raw material sourcing cost, that's very much important in this industry. Has that gone up in Q4? Why? Because in Q3 they had a good gross margin up move. So what is there which can offset this problem? That's the question to be asked. Another one is any impact on the gross margins which we can see from this. And all of these details we'll be asking this management. Apart from this, another key question would be the overall competitive intensity, especially in the emerging value-added segments. Company's emerging value-added segment is in the spices, blended spices, and we have seen startups are coming, larger FMCG players are coming, and the distribution plans, especially in the non-West Bengal markets, because the non-West Bengal market is very little. So the company needs to come out to become at least a regional player rather than just a state level player. The capex and expansion plans, it's very much interesting. And the reason why I'm talking about is because of their capital allocation policies. It might be a little bit of conservative for a listed company, but let's have a look at other reasons why there would be a focus on this. And of course, the focus would be there because it's a debt-free company. And why is the company not taking leverage or any fundraise to expand? And this is a high working capital business as well. And to decode this, we'll have Manish Mimani. He's the managing director at Ganesh Consumer, where Manish will take us through the journey of the company and what lies ahead when it comes to the strategic outlook. But company करती क्या है? आटा आप कह सकते हैं, मैदा, flour, these are the most basic things in a household, especially in northern India and eastern India. But see what the company is dealing with. This is of course the whole wheat flour is there, wheat and gram based flours are there. This is largely what I'm talking about, besan also. To put that in perspective, promoter recently acquired 3 lakh shares, and that is where my interest came. Then I picked up this company, though it is smaller in KYC at an average, but nevertheless we get you these companies to find whether it's worthy for an investment or not. The company has 7 manufacturing units with almost 4.2 lakh tons installed capacity, and this is of course spread across the country. That's what I've checked from the data. 55 to 60% capacity utilization is there, so that is the reason why they are not making fresh capex. Debt-free company hai, so the demand as it comes in, they will be able to utilize it more. That's the expansion plan. That's why the company is not very aggressive, and that's a good strategy for the balance sheet. 77% revenue comes from the B2C segment, and that's very much important. Also, apart from this, you should be knowing is that the distribution revenue is from the general trade. General trade is the normal shops, mom and pop shops we talk about, 84% of it. Of course, the question remains is, in the future, the FMCG companies have to have higher share coming in from modern trade. That means दूसरों के दुकान में उनके products रहेंगे, or else e-commerce where you order it from Zepto, Blinkit and other places as well. The B2C revenue breakup, and that is where there is a good concentration, definitely, but that concentration needs to come down. Then the street will start valuing you more. Only 7% is coming from the North and West Bengal portions as well. West Bengal is having 93% of that overall B2C revenue breakup. Apart from this, the B2B volumes, they lifted the gross margins by 494 basis points to 26%. Now, is this sustainable going ahead, and what happens in the fourth quarter? That remains, but the Q3 commentary was strong. The B2C volumes, they were intact despite the competitive intensity. A lot of new players have come up in this B2C segment. And the spices revenue, that's what I've talked about, the blended spices and the overall spices segment, that went up 31%. And the e-commerce and Q-commerce, that though it's a small base, it went up by 58%. So definitely there is a modernization at play for this company. The key numbers to watch out for, they have a 12.6% market share in wheat-based and gram-based derivatives, sattu, besan, atta. Just to put that in perspective, this is a 43% market share for sattu. And of course, it's a great protein product as well. They have almost suji and dalia, that's around 31% as well. And that's a good market share, to be honest, in an unorganized market. And of course, this is the organized setup. They have 1 crore plus household reach, especially from West Bengal. And also the distribution which we talk about, they have roughly 3.5 lakh general trade outlets in Eastern India. We get in other states also, Jharkhand, Odisha, to name a few. But why is the stock out of favor? Stock chal kyun nahi raha? Bazaar mein interest kyun nahi aa rahi hai? It's a commoditized business. Right now also we see largely it's a commodity. There's a lack of analyst coverage also, and that's why you might see the market cap has come down below the 1,000 crore mark as well. So that remains a big overhang in the stock. The emerging high margin products are definitely there, but the competition is also very high. Startups also want to make masala, so do the large companies which are much larger than Ganesh Consumer as well. It's highly concentrated in West Bengal, and it's against ITC, and ITC is also having a big stronghold in Eastern India. It's a highly unorganized segment as well. So these are the key factors why the stock itself is out of the favor, and the market is not giving in case any positive thing is happening with the stock as well. And perhaps there might be a signal that we are bottoming out, especially with the conviction coming from the promoters buying 3 lakh shares in the open market. But the KYC rating system, how do we rate the company? It's very much important. Income statement, balance sheet, cash flow, these are the most important numbers to watch out for. We look at return ratios also, where we get in ROC and ROE, but most importantly street cred is there, kitna paisa kamaya, मीडियम टर्म हो या लॉन्ग टर्म हो, सारे डिटेल्स हम आपको लेके आएंगे. शेयर होल्डिंग, वैल्यूएशन, वी कंपेयर देम, बट ऑफ कोर्स वील हैव अ बिगर FMCG players because of the smaller size of the company and the outlook, especially for companies' growth outlook, expansion. We'll get you all these details, but one by one. सबसे पहले income statement. Let's focus on that. Remember, the Q3 numbers were on the stronger side, bullish commentary on the margin, so that was definitely a positive. But net, the growth has been decent for the revenue and EBITDA front for the 3-year CAGR numbers. It looks like a stable business, but company is trying to modernize itself across all the sectors, but a concern remains. Remember, I told you the commoditized nature of this business. That is where we see the overall net profit margins, not that much big growth coming, just 9% of 3-year CAGR coming. And of course, there are some aberrations, but our job is to give you the entire picture. So right now it's neutral, it's nothing very great. Q3 numbers were decent, but who knows, Q4 numbers might be impacted. So it's a neutral rating when it comes to the income statement. Let's talk about balance sheet. What happens in balance sheet? And one good portion is, despite of the company, having a lot of capex which was there earlier, modernization is happening. Remember, the utilization is less, the borrowing is zero, and the company size is coming. So if of course company comes at a certain market cap, the business goes, so they'll always have a borrowing capacity to expand or do any acquisition. And I feel, of course, the company itself has some conservative beginnings, but the way company is going ahead, we might see some acquisitions also, and the company's balance sheet is strong and they've managed it nicely. So it's a neutral rating when it comes to the balance sheet as well. But of course, it's a high working capital business, and whenever that happens, there is at times lumpiness in the payment cycle also. In this industry, the payment cycles at times go up and down as well. And because of that, the cash flows also start moving around. FY24 we had a higher cash flow, and again it comes down. So there is a variability, and this is the business model of it. No matter how much you say it's modernized business, it's still mom and pop, and it's a traditional business. That is why the cash flows won't be very linear. There will be non-linearity at play, and because of the model itself, we can't do much more about it. So it's a neutral rating for the cash flow segment. Apart from this, let's talk about the return ratios, and this is where the company is doing well. It's a small company, backward integration is happening. The second and the third generation in the business family is trying to modernize, and we can see that in the numbers. So look at the ROC numbers. You don't get these type of numbers in a company who is selling atta, maida. Look at that, it's a 20% almost ROC numbers coming in from the company's filings itself. Let's look at the ROE numbers also, and this was very much interesting, and this is a 16% ROE business coming in. That means the company is in the right direction when it comes to the high margin products, backward integration, and of course they already have almost, you could say, a 2-decade-old brand also, and of course the family itself, you talk about it, they are very prevalent in Eastern India. So it's a very strong thumbs up when it comes to return ratios. Also, let's talk about the shareholding, and largely promoter stake has been same. FIs have been selling. That's where the sell-off happened post its listing. The anchor lock-in ke baad, there was a good sell-off and there was no proper absorption. Maybe that's why DIs haven't increased their stake. But to put in more perspective, the promoter has bought 3 lakh shares from the open market, and that is where the interest comes, because we might be at the bottom of the stock if you're checking the technicals. So net, it's a neutral rating when it comes to the shareholding segment. But street cred, that is where my concern starts. Remember, initially I had told you that the stock from its IPO price is down 47%, and that's the big concern coming in. There wasn't major holding coming in from the institutions. Year to date also, the stock has taken a tanking. Stock 23% gira hua hai. And if you give it more perspective, stock of the last 1 month also hasn't done much. It's trying to stabilize itself, but look at the markets also. The small caps and mid caps have taken a big beating. So stock is also down 7%. It's just mirroring the market. But nevertheless, the issues were not there for the last 3 months. The issues were there for the last 15 months. That is why street cred, I have given this a strong thumbs down as well. But valuations, let's try to compare and let's try to get in some businesses over here. ITC, of course, majority of the valuation comes from the tobacco business, but they do also have a lot of atta related products, flour related products, and also they are acquiring spices. Same thing goes for Tata Consumer as well. The Tata Consumer has a different valuation, 62 times coming in, and the trailing valuations 19 times for ITC and 18 times for Ganesh Consumer. Remember, this is not an apple to apple comparison, but this is the nearest comparison which an analyst can give you, and that's what we do in KYC. So net, it's a neutral rating because this is also significantly corrected. It's more than halved actually from its peak levels as well. So it's a neutral rating when it comes to the valuations. Outlook is important because the strategic procurement planning, that is what the company is focusing on, and the pruning of low margin B2B volumes, that the company is trying to do this going ahead, and because of that you must have seen the return ratios and even the margins till a certain front doing well. Now this more penetration in the Eastern India is required, and this is ex-West Bengal I'm talking about, because it's a huge market and this is just, they have scratched barely the surface. The quick commerce and the e-commerce, they are aiding growth in the modern trade segment as well, and that is where we see the growth numbers are good. So if these numbers start coming more, and the general trade, modern trade and e-commerce, if they get divided equally, that is where the alpha will start coming in the stock. So it's a neutral rating when it comes to the outlook. But let's give you the entire picture of how the rating pans out, and the company needs to perform more. Then only the market will give it more value to this company, and I feel there is value left in this company. Income statement, balance sheet, cash flow, it's decent and it has been done up well, and there's a conservative thought process to it, but it's doing well going ahead. Return ratios, that is why it's coming good, because they have controlled these 3 parameters. Street cred, the company needs to perform. The street needs to see why it is different. Shareholding, there is a little bit of positivity, especially when the promoters have started acquiring recently stake as well. Valuations, neutral, let's give it more time so that it becomes a proper FMCG player. And last but not the least, the outlook, the way the company is focusing on the backward integration, their expansion strategies, that is something we'll look into it. But net, the rating is almost 4 out of 8, I've given totally. So the company needs to prove more. And for this company to get into the market, we need to have shows like KYC to understand what's happening. Manish Mimani, the managing director at Ganesh Consumer, will be joining us. And an interesting fact about him, he joined this company, the parent company is the Ganesh Flour Mills in 1994, and then of course he professionalized it, incorporated in 2000, and now we are seeing he has listed the company also in 2025. So a family-owned business to a listed player, that's a journey, and it's a story of Bharat. And joining us is Manish Mimani. He's the managing director at Ganesh Consumer Products. Good afternoon, Manish. It's always a pleasure to have you here. And interestingly, we all talk about, what's the growth strategy like for an FMCG player like yours. The first question I just want to ask is, the Q3 numbers are very strong, especially the gross margin front. So now, B2B business and B2C business. Manish, how do you see these businesses? And would you be likely to sell off or, reduce your exposure to this legacy business of the B2B, or will it stay?
Yeah, good afternoon to you. Good afternoon to all viewers also. So in the past also, in last 4-5 years, credentials, our balance sheet credentials and P&L shows from the history, the same is going to go into the future also. We are bullish on B2C segment only. B2B, we are bound to have byproducts. Whatever we make and sell, that is wheat derivatives and gram derivatives, some byproducts are bound to come out of that manufacturing. And that entire segment only is sold as B2B segment. Otherwise, we don't deal into B2B finished products.
Right. So that's a clarity coming in from Manish. But apart from that, the Q4 numbers in your industry also, a lot of expenses also increase. Of course, there's a backward integration play as well where you can offset. But Manish, the fourth quarter, those geopolitical tensions which have come in, and this has impacted a lot of industries. Will your costing or raw material costing get any impact in fourth quarter?
No, so there are two raw materials which is largely consumed. One is the raw material itself, that is wheat and gram, and which is enough is there in the supply because it is a domestic, we consume domestic output. We are not dependent on imports. So I think the major raw material is not a concern for the company. But of course, the packaging side, that is primary laminates and the secondary packaging, that is of course is a bit of concern, but that is only 2.5-3% of our total cost. And then we have hedged a lot in last couple of months. So I don't think moving forward that is also going to make a big impact.
So no major impact coming in from the raw material costing front as well for fourth quarter. But there was a significant improvement, Manish, in the gross margins as well. We had mentioned in third quarter. So will we see that momentum continue in the fourth quarter or maybe in the first quarter as well?
Of course, the trend will continue. We have made our supply chain very tight. Our procurement is optimized. And last mile delivery, we have decreased our last mile delivery costs also with the help of carrying and forwarding agents. So this trend will continue. Rather, it will have an uptick in the another 2 to 3 quarters.
Why would this reason be for an uptick? And if yes, can you just give us the range of the uptick for this margin growth levers?
Right. So largely, we believe the raw material prices, if we take the example of wheat, the wheat is 10% depressed from last year prices. The same is for gram. Gram is also largely 4 to 5% depressed from last year prices. And abundance of supply is there. So being a key branded staples player, the advantage in the procurement cost will spill over to our margins.
Okay, so there is an advantage to the procurement cost. And when you talk about gram and wheat, these prices are down 10% compared to last year. So both the ways, the company seems insulated and maybe a margin uptick can come in. But apart from this, there is the emerging value-added segments which we talk about. This is your spice category. There is an ethnic flour category. How do you see this, revenue chunk from these segments increasing in the next 2 to 3 years? Any guidance on that?
So largely there are three levers of growth for the future. Of course, we are very optimistic for spices segment, which is a regional category. And we are banking on our expansion in spices category in West Bengal and in neighboring states. Geographical expansion of our core category, that is wheat derivatives and gram derivatives in Bihar and Northeast. And lastly, we are banking on the QCOM growth, CAGR growth of the industry. And we have grown more than 50% on QCOM itself in last financial year. So I think these three levers of growth, spices, geographical expansion in Bihar and Northeast, and QCOM market share growth. This all three will make our revenue growth in the coming year.
And Manish, if you could just give us any kind of a revenue target, maybe in the next 2 to 3 years or by 2030, what are the targets which you have set for the company? The margins we generally know there will be a up move from the current levels you mentioned, but revenue or the distributors, what's the numbers looking like? Because I think the Eastern India is still under-penetrated and there's a lot to cover other than just West Bengal.
Right. So currently we are having a pool of more near to 1,100 distributors, which we think will go by 10 to 15% more in another coming quarters. This is on the distributor number. And if you speak of revenue growth, so as of now, we are in a silent period. So I will not like to get into specifics around the quarter. But of course, we'll share a complete picture when we report our results. That is, I think that will be the appropriate forum to give our revenue growth of coming quarters as well as PET also.
Right. And your capacity utilization is roughly 66, 70 odd percent, which we had seen, I think it's 55 to 60%. So you have these capacity utilization numbers increased in the fourth quarter, or is there any seasonality at play? Because of there is a seasonal impact also the way you procure your grains. Is there any seasonality to your business, or the whole year round you are active?
So largely whole year round, it's a stable business round the year. It's a stable business from the revenue side. It's a stable business from the EBITDA side also. So no surprises on the revenue side. And there is no seasonality in our business largely. But of course, due to festival time, that is largely in the period of Durga Puja and Diwali in this part of country, of course, the revenue grows. Now, if you, other than this seasonality factor, on the capacity utilization, the company did a capex of nearly 90 to 100 crores in last 3-4 years. So I think that the entire idea was to first put up the capex, do the backward integration for some of the procurement which we were doing directly from the open market sources. Now the company is into a captive production. So I think in the coming another 2 to 3 years, till the revenue of say 1,400 to 1,500 crore, the company need not any capex. And that's why the capacity utilizations look slow at this time of moment.
And I must congratulate you, Manish ji, on the way the balance sheet is managed. And this is, of course, a family business which has been professionalized, and now you're a listed player as well. Debt is zero. Of course, there's always an ask, in case if you want to do any acquisition, because in your space, a lot of acquisition is happening in the emerging markets also, because you already are having a strong market share in core products. In case you're looking for any acquisitions, would there be any debt or a fundraise you can expect in the coming months, say 12 to 18 months? Are you looking at anything inorganic? Because everything looks organic to me.
Yeah, sure. So other than organic growth, which we are bullish on, and that's why the management and the promoter has increased their shareholding, because we have got full conviction in our business. And as of now, the intrinsic value of the business is significantly, according to me, higher as per the market cap and the market price of the share. And that's why we have purchased to show that our skin is still in the game, and we very optimistic for the good future. Now, other than this, if you say of the inorganic growth, of course, we are scouting and searching for key players in our adjacent segments, which can add up to our core category also in the same region, that is in eastern part of country. And if we find a suitable company or a suitable category or suitable brand, which is similar, which can add value to us, to our portfolio, we are open to have acquire an inorganic opportunity with a internal cash flow as well as some sort of debt. Because the advantage of there is no debt as of today in the balance sheet, as you have said. So in the longer term, we would like to have that advantage if we acquire anything.
So that's a very important commentary coming in. Of course, promoters have given the conviction by buying in open market, but inorganic acquisition with debt and internal accruals, you cannot rule out. Company is scouting something in Eastern India. Thanks a lot, Mr. Mimani, to giving your views to NDTV Profit about your company and also giving the views about the industry where things are moving. It's always a pleasure to have you in our show, and best of luck. So this is the company. We talk about Ganesh Consumer Products. Promoters have bought in shares. Stock is at its lower levels and they believe that the intrinsic value of the company is higher than the current market capitalization. Is it true or not? Let the time decide and let the markets decide. They are the most supreme. Stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm
Yesterday's gain turned into losses as Nifty really loses steam. All the sectors trade under pressure, with Nifty hovering near 22,200 levels. Global cues and Sensex expiry weigh on the markets. Rupee strengthens after the Reserve Bank of India issued revised guidelines on risk management and interbank dealings, tightening norms around foreign exchange derivatives amid evolving market conditions. Oil prices surged past $107 per barrel before cooling off slightly. This after Trump's comments threatening attacks on energy infrastructure in Iran. Government grants full customs duty exemption on critical petrochem products. This as the Middle East war continues to roil energy markets across the globe. The Trump administration is planning steep tariffs on certain imported medicines, targeting the companies selling high-priced branded drugs in the US. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take a quick look at the markets. And yes, there is weakness and there are tremors that are being felt in global markets and therefore also in Indian markets after Trump's overnight comments coming in on re-escalation of the war and even threatening to target some of the energy infrastructure in Iran. What also is concerning is the timeline that the war is not getting over anytime soon as has been anticipated, but at least will drag till April end. And that's what is showing on Nifty 50. So at the current moment, 400 points lost on Nifty 50. And remember, from the low point of the trading session, it has only picked up by 70 odd points. So there is no let up or relief in sight or any buying activity ramping up the market. And that's a big worry. If you really take a look at Nifty's 1 week chart in the last 5 trading sessions, you will see there were intermittent gains, there were relief rallies as soon as there was some market momentum on de-escalation of the war. But remember, all those losses have been given up in today's fall as well. Now, when we look at 1 month chart since the time this war really started, even though there have been intermittent relief rallies coming in, the overall trajectory of the chart has been on the downward movement. We are just 500 points away from 52-week lows for Nifty 50. Let's get an expert take on this. Let me welcome on the show Sunil Singhania, the founder of Abacus Asset Manager. Sunil, always a pleasure to get chatting with you and welcome to NDTV Profit. My first question, how do you read into the market where the overall trajectory has been downwards, there have been intermittent relief, but there is extreme volatility all owing to the crude movement and the war situation?
Thank you, Nisha, for having me. Obviously, it's been a very challenging last 1 month, and more so because statements which come from very responsible people keep on changing on a daily basis. And I think markets obviously, any kind of conflict or war-like situation will, create nervousness. And more so, this nervousness keeps on moving yo-yo depending on what the statements are. However, our view is that, yes, it's been a month. The intensity of words has not reduced, but I would say the intensity of actually the conflict seems to have ebbed quite a bit. So we are not hearing too many, missiles or whatever, being fired against each other. I think the intensity is reducing. Hopefully, in the next 1 or 2 weeks, we might have quite a meaningful de-escalation. I think that is what we are working with. But as we speak, the proof of the pudding is, actually seeing the markets, and the markets have been quite challenging. And I think till there is clarity, I think we will see a little bit of nervousness continue in the markets.
So how much of that risk is getting baked in already, Sunil? Because, a lot of experts have been penciling in a 17% fall overall in Nifty 50. We have already crossed around, say, about 11% since the war situation started. Are all the weaknesses that will be caused because of the crude and therefore also impacting the earnings and cost escalation and inflation coming in across the board, how much of that is already baked into the market and how much more risk appetite or risk is already there for a few more days to come?
No, again, very, very difficult question. But I would say that looking at how it is panning out, at least our assessment is, yes, oil has been volatile, but now we are seeing that the impact on crude oil prices on any negative statements is there, but not to the same extent as we saw earlier. Earlier, oil the prices were jumping 10-20%. Now, it's 3-4% up, 3-4% down. So I think the overall markets are also taking these news flows into account. The volatility to that extent is obviously there. One day up 2%, one day down 2%. But I would say that 90% plus of the impact of this conflict seems to have been discounted by the markets as we speak. I think the challenges obviously have been, variability in the news flows. I think there has been no consistent statement. And for India in particular, the barrage of selling by foreigners have also been one reason why what we saw in March is what we saw, record high 1 month selling of upwards of 110,000 crores. I think that has also put additional pressure, particularly on India compared to some of the other markets in the region. But I would stick my neck out and say that more than 90% of the market pain, the equity market pain, seems to have been discounted.
Right. So 90% of the bad news is already baked in, is what you're saying. But when we talk about the levels right now, Sunil, barring the kind of risk that still lies, but for long-term investors, what could be the strategy at this particular moment in terms of cash reserves and in terms of deploying at lower levels? What would be your suggestion on that?
So disclaimer first, Nisha, I've been in this equity markets for a long time, and last 25, 30 years, we've been always positive, always optimistic, despite the challenges which we have seen. And this is not the first time we are seeing these kind of challenges. I think over the last 5-7 years in particular, generally 20-25 years, we have seen bigger challenges. Last year we had the tariff issue. Before that we had, Russia, Ukraine. Before that we had COVID and so on and so forth. So I think we have seen this, and as long as there is confidence that the economy will keep on growing at 6.5-7% plus, there is no reason to believe that India as an economy will not grow, and therefore equity markets will not grow. Obviously, we have also seen a scenario where Indian markets had become quite expensive, in isolation and more so in relative terms compared to some of their Asian peers, and I think that correction has quite a bit corrected the overvaluation which Indian markets used to trade at. In fact, before this conflict, things were falling in place. I think a combination of tax rate cuts, both income tax and GST, RBI reducing interest rates, pumping in liquidity, demand coming back. December 25 quarter numbers for both the GDP as well as for corporate profits were trending up well. I think everything was falling in place. I think this conflict has come with a little bit of a rude shock. And if our view is that if it gets settled in the next couple of weeks, then, we might not even look at earnings to be as impacted as, we are making it out, looking at the prices. So we'll be quite optimistic. And I would say that, as I repeat, 90% of the pain seems to be in the price. For investors who are already invested, I think I'm sure, all of us have seen the pain, and it is not a very happy scenario. But, I think stocks will bounce back once this issue subsides. And for those who have been lucky and smart and who are sitting on cash, I would say, if not now, then when? So I would say that at least 30, 40, 50% of the gunpowder you have in terms of cash, you should be putting to use now.
All right. So a large part of your cash reserves that you have, you can put to use at these levels. But Sunil, any particular pockets of the market which are looking especially mouth-watering for investments? Because see, banks, large banks also give way as a quasi-economy. And whenever there is nervousness, they take the maximum brunt. But they are also the blue chip companies which have shown historical returns. So which are the pockets identified which are good bets at these levels that you would really suggest?
I think pockets are identified when something happens. So we were quite optimistic on Pharma, and Pharma was very resilient till some article which came in today, which talks about Trump looking at putting tariffs, on a fresh perspective on Pharma. But we are not too much worried about it. I think Pharma continues to be in a good shape. Good, I would say, trajectory going forward. Stocks are not very expensive, very good quality companies, and I think the impact of rupee depreciation positively will also be felt in quite a few pharma exporting companies. Banks have borne the brunt. I think a combination of foreign selling and because it's such a large sector, whenever foreigners sell in India, I think a major part of it comes in the bank. And there was a little bit of nervousness, obviously, because of non-fundamental reason, particularly in the largest private sector bank, and that has also caused general nervousness in banks. On top of it, you have yields which have shot up to 7.05%, the 10-year yields, and again, there is a possibility of some mark-to-market losses on the bonds which banks own. So it's been a combination of a lot of things which have caused banks to be at the receiving end as far as the sector is concerned in the month of March. But as you rightly said, it's a reflection of it's a sector which is a reflection of the economy. And if and when, and we hope very soon, when the conflict scenario subsides and things start to look better, I think this is one sector which can bounce the fastest. Apart from them, there are small sectors. I think select chemicals, metals are looking pretty decent. And generally, I think consumption also, a lot of stocks have fallen quite a bit. And surprisingly, the consumption trend, at least for March also, have been quite resilient. So one can even look at consumptions.
All right, so 3 sectors of choice, and of course consumption is more domestic driven, as well as metals have fallen, banks and blue chip banks. All right, Sunil, it's always a pleasure to take your insights, and on a falling market that also comes as a lot of consolation that there is a lot of conviction in the markets at these levels as well. Thank you so much for joining us on NDTV Profit. All right, so that was Sunil Singhania talking about the equity markets, but don't lose sight of the rupee movement, which is now recovering because of RBI's intervention and some of the measures that have been taken by the Reserve Bank of India. So 93.20 is the level at which rupee is trading. Dheeraj Nim, the economist and strategist at for Forex at ANZ Research, joins in. Dheeraj, pleasure speaking to you. You have been really guiding us on the movement of rupee. How do you see the RBI's actions giving sustained recovery to rupee?
Thank you, Nisha. Thank you for inviting me on the show. Look, the Reserve Bank of India's recent 2 circulars effectively curb speculation in the onshore market, basically limiting the impact of speculation in the offshore market that would typically transmit to the onshore markets and guide the exchange rate here as well. What we had seen happen in the last few months is that that channel had become very strong to the extent that even the Reserve Bank of India's aggressive intervention via FX reserves was not proving to be very effective in containing the slide of the currency. So I think the Reserve Bank of India is trying to clean up or curb speculation to that extent and its impact on the onshore exchange rate. And this is what we have seen today, that the rupee has opened gap up stronger and is now currently trading about 93. We think that, some of these arbitrage trades that the RBI is trying to cut will continue to unwind over the next week because of the net open position circular that came out on Friday, which had a deadline of 10th April. And this would mean that in terms of levels, USD INR could start lower. But what it does not do is does not rewrite the fundamental pressures on the currency, which is that if oil prices stay where they are, we're still staring at a considerable current account deficit shock, which would also mean that in the event that capital flows remain scanty, the balance of payment stress will continue and the rupee could fundamentally face pressure to weaken. So directionally, it does not change the direction in terms of our outlook. But of course, the levels from which that depreciation could occur would obviously be very different.
Dheeraj, that was so beautifully explained by you. So, of course, we are not decoupled from the risks of crude movement on a regular basis, which is putting pressure. But at least what is giving it strength is some of these measures that have been really taken by the RBI. What are the figures and levels that you are penciling in the medium term for rupee, considering that the crude levels remain at these particular levels between, say, 105 to 110 type of movement?
In a very recent note, we have highlighted that if crude prices continue to average above $100 a barrel in the near term, which means that the conflict continues to drag on, we could be looking at rupee heading to 95, 96 over the next few months. That is typically a risk view scenario for our year-end numbers. But of course, much depends on the volatility in the Middle East.
Right. And was this note and was this direction and outlook given considering the kind of, support that the RBI's actions are also supposed to give to rupee movement in terms of some basis and some recovery?
Not entirely. But I think this was more to do with the fundamental pressures we have been noting on the rupee. Of course, there is no way to gauge the impact of speculation on the onshore exchange rate. But fundamentally speaking, this is where the rupee could be headed if oil prices stay where they are. Now, like I said, of course, the starting point could be different.
All right, Dheeraj Nim, always a pleasure speaking to you and get your outlook on rupee. So the pressure of crude movement really continues on rupee, but some bit of that is really averted by the RBI's actions. Thank you so much, Dheeraj, for joining us on NDTV Profit. All right, let's also do a status check on energy, because energy is the one which is playing truant and is the single biggest factor impacting our rupee as well as our equities market. Let me welcome on the show Dr. Iman Naseri, who's the Managing Director, Middle East Research. Dr. Iman Naseri, welcome to NDTV Profit. My first question to you, with this geopolitical tension which de-escalates and escalates on a regular basis, the volatility in crude has been immense. But now that there is a little bit more of information in terms of how long this particular Middle East tension is going to continue, are we penciling in any particular levels for crude? What's your outlook on that?
You see, I'm not sure if the market is any more certain about how long this situation will prolong. Remember, there are two things happening at the same time. One is the war between US, Israel, and Iran, which is attacking each other. And then, of course, Iran sending missiles and drones to its neighboring states in the Gulf. But the other thing, which is more important for the market, is the closure of Strait of Hormuz and lack of supply from within the Gulf to the rest of the world. And that could perhaps be an independent phenomenon from the war. Trump has given a deadline, a timeline. That timeline has been actually very fluid and dynamic. He has sometimes indicated that it's going to be to come to an end in days, and then weeks, and then of course from the beginning 4 to 6 weeks. Now after 4 weeks complete, he said 2 to 3 weeks. But that doesn't mean the flows through the Strait of Hormuz will resume together with what he calls end of the war, because it very much depends on how the war ends and how Iran loses its control over the Strait of Hormuz or decides to actually effectively control the flows. And hence, the market as we see that FGE is far from certainty in terms of resumption of the flows of the supply from the Gulf, and hence it has priced in a significant loss of supply for the month to come. And certainly, we're far from a calm crude market in April and May for sure.
Right. Dr. Iman, there is uncertainty and there is flip-flop in the kind of direction that the US is giving. But I want to understand, at Brent at $108 per barrel, roundabout that level, how much of that is because of the sentiment of de-escalation or escalation movements in war? And how much of it is real demand-supply dynamics? How is the demand-supply picture looking at this particular time, in your view?
At this point in time, while we are in the middle of a war which has impacted supply in an unprecedentedly high level, we perhaps never had this level of supply disruption across many commodities. It's not oil only, it's gas, it's fertilizers and many other things. It's hard to basically disintegrate the oil price into fundamentals and sentiment. The fact that I can tell for sure is that the market is struggling with supply of products, which is basically what the consumers, the end consumers use, and hence the product prices, if you look at them, have been for weeks above $200 per barrel of oil equivalent, and even gas prices in certain times have reached those levels, and so that's basically, that indicates that the price of oil is in fact at its right place when you look at fundamentals, or even should be higher, as we find on the physical market, where when someone wants to secure a cargo of Middle Eastern crude, it's often at way higher than what you quoted as the crude price for Brent, which is often at $150, $160 of price for Oman and Dubai and all the other cargoes that are produced in the Middle East. So the market is fundamentally short. That means the price should be higher. The market has been taking Trump tweets basically to calm down and as a sign of de-escalation, but you see the prices jump back up after he's proven not to be so serious or in fact not too positive in terms of timeline, and that is only because the market is short supply.
All right, so short supply for sure. But Dr. Iman, you have much more knowledge sitting right there in the hub of all the tension and all the oil reserves as well. In your view and any research and intel that you have gathered, that are there infrastructure of oil supply or the infrastructure for transportation which have been destroyed, which will not open up once the war really comes to an end? So even if there is peace in Middle East, will it take a lot of time for some of the supplies to be back? How is your assessment, considering hypothetically that in 3-4 weeks, if everything sorts out and negotiations happen and the Middle East tension really comes down, so how much of the supply will be able to be back quickly in your assessment, and how much is destroyed for a longer period of time?
So we have basically three commodities to think about. One is crude oil itself. We have not had really any major impact on the crude oil infrastructure. The upstream production sites, fields have not really been impacted in any meaningful way or at all. Then we have the infrastructure that brings the crude oil to the market, which includes the pipelines as well as refineries and ports. We have had incidents on all of these, mainly refineries and ports and terminals and tanks. These are not at right now. We are basically following every news, and we have created a database internally to track them. And of course, we incorporate those into our forecast in terms of how much capacity we have available. Those are not at the level of creating a distress in the market, so they are easily recoverable by the spare capacity and running harder through the other existing assets, be it the ports and jetties and tanks or refineries. And the third commodity is gas. That is where we have had so far the largest loss of supply, which is basically Qatari LNG trains,
Sure.
two of them in Qatar, which is not going to be back to the market anytime soon. But
so percentage-wise, Dr. Iman, we have 10 seconds left with you. Sorry for that. So percentage-wise, how much is really disrupted?
About 10 to 20% of gas supply has been
10-20% of the gas is disrupted and will not come back even if the war situation ends. That's a good number to really analyze going forward. But Dr. Iman Nasseri, thank you so much for all the insights coming in on the energy front. That's all we have time for in Markets at 12. But do keep it with NDTV Profit. Lots of news, market action on the other side. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New Year. power panel. India Market Opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia and Sharad Dubey, standing at the NDTV Profit market pit with all the action in the markets. You know, it's been an interesting day of trade, Sharad, because before we opened up for trade, we were seeing a gap up of around 65 points in the positive. And post the Trump commentaries, when you've seen that negative reaction that has come in, and clearly the war is far from getting over. We're talking about a 3 to 4 week deadline, and markets are clearly reading it.
Well, yes, good afternoon, Hiral, for that. And maybe April Fool's Day came in the second day. It might be one day late. Gap down opening for Nifty. All throughout is trying to make a recovery attempt, but there's nothing much happening here. Same story goes for Nifty Bank also. And the pain, Hiral, is coming in the small and the mid-cap segment as well. Of course, the rupee has been an outlier. I'll give you the important reason for it. But today only 3 T's matter. There is Trump, there is tension, and today is Thursday, of course. Markets have given up yesterday's gains after Trump's address early in the morning. There we saw reversals happening across the global markets and the futures as well of US, all in the red. Also, the second important portion or the trigger for today's markets would be that SMIDs, small and mid caps, are seeing a good sell-off, and the PSU banking segment, that's down 3.5%. Big sell-off, but most of the sectors we see, they are bleeding in red. You can say that the Sensex expiry is also at play, but will it be that worth it in the last 1 hour? There's a big question mark on that. Global risk of sentiment is totally back, and that is where the concern comes in, especially going ahead into the weekend. Minor jump coming in India VIX. We are expecting this could be a 10-15% jump, but that's nevertheless correct. Sell on rise strategy still remains for the traders going ahead. And apart from this, let's also talk about the other key factor, and that's the rupee recovery. That's to the $93 levels. Remember, yesterday was a closing trading session, and now RBI intervention also came in, and that's why there is a dichotomy when it comes to the rupee. It is showing a good strength even in a very weak market. So that is a respite. And also remember, market holiday tomorrow on account of Good Friday. And largely it's advisable not to have any trading positions going ahead, because you don't know what happens on Friday, and Donald Trump likes that date as well. So yes, Hiral, April also starts with uncertainty, and we can expect that at least in this month as well. And markets will take certainly cues from this.
Okay, thank you so much for that. You know, and that's a very interesting setup that we are seeing. But let's quickly look at the watch list. You have RBL Bank, where the RBI has approved for Emirates NBD deal, so that's a positive. And Vero Infra has got 5 major project wins, and that stock is reacting on the back of the same news. OMCs are in focus, and that's because Brent crude has jumped above the $105 per barrel mark. Reports are indicating US Pharma tariff imposition could be on the cards today. Sun Pharma taking a beating. Powerica has had a weak listing, and along with that, Sai, Parenteral, Amir Chand, Jagdish, all of these have seen a weak listing in trade today. PSU banks are seeing a big sell-off. Volumes, however, are increasing. And custom duty that has been cut for raw materials, SRF and Astro trading under pressure. FY26 auto sales numbers overall pretty strong, apart for a few. That sector is in focus, and you have a Hyundai, which is below the IPO price. Ola Electric has also come in as a surprise because the registrations have increased, and they have gone ahead and cut prices across a lot of products. Bansal Wire and V-Mart have reported a strong business update, and you have CLSA, which has gone ahead and cut the target price on HL. However, they are seeing a 40% upside in spite of the target price cut. Cement sector, price hikes on the cards, and that's becoming a sector attractive for a lot of investors. So this is what we're looking out for in terms of the watch list today. But Sharad, over to you to take the rapid fire with Osho Krishnan of Angel One.
Thanks a lot, Hiral, for that. Good afternoon, Osho. Always a pleasure to have you. We'll start a rapid fire. The first stock is from the cash markets, Bansal Wires. It's literally an outlier in today's trade. Strong Q4 update. Your views on that?
Very good afternoon, Sharad. Firstly, thank you for having me at the show. Well, yes, no doubt today there has been strong traction in Bansal wire, but overall the technical setup is very weak. The counter is hovering below the short-term moving average. So until it recovers lost ground of nearly 275 to 280, till that time better to stay sideways from the counter.
Okay, and another strong update and a strong move on the charts, V-Mart Retail. Your views on that?
For V-Mart, again, from last trading session, there has been a kind of a reversal signal in the counter. And today, on the back of strong volumes, definitely the counter is looking quite attractive at current levels on the technical front. But I'm expecting that from a short-term point of view, there might be a decent movement towards the zone of 580-85. So only for short-term aggressive traders can look for opportunity. The overall sentiments remains on the bearish front.
Right, and the one which is getting the biggest brunt is the Nifty PSU Banking Index. That's down more than 3.5%. Is there any good time to nibble any stock, a minor kind of a medium-term setup for an entry in certain names?
See, overall, no doubt PSU banks have seen a very strong outperformance in the last year. So from there onwards, there has been a decent correction or maybe called as a massive correction in the whole index, near about more than 20% from the high levels. But overall, I'm expecting that these types of correction are decent and healthy also to provide opportunity to reaccumulate on the lower front. So many counters are looking decent, but one should not be very much aggressive in accumulating these counters. Wait for another 1 to 2 weeks and then start accumulating the good fundamental companies like SBI, Bank of Baroda, PNB. These counters are looking good, but wait for stagnation and then can look for accumulation in these counters.
And the next stock is definitely going to be one of the traders' favorite stocks. That's the RBL Bank. For sure, some developments are definitely happening, but what's there on the volumes? What's there on the prices?
See, overall, over the news, the counter has not performed that pretty much or that very positive, although technically it is hovering around the 200 simple moving average. So no doubt from here onwards in the coming period, we might see a kind of a decent movement, but currently it is having a very narrow zone, near to the zone of 285 on the lower end and 305 on the higher end. So one should wait for a decisive breakthrough from this consolidation and then may look for buying opportunity in the counter.
Right, and your views on Enviro Infra Engineers? They have received an important order win as well.
Again, from last 2 trading sessions, the counter has seen a decent traction, nearly 20-21% higher in the week. But overall, the technical setup is still bleak. So only for aggressive traders, one may look for buying opportunity. I expect with the kind of a volume spurt in the counter, this might see a kind of a recent movement in the short-term period. So 185 to 190 should be the short-term target, but one needs to maintain very strict stop loss in this counter.
Right, and what about your views on the OMCs? Things are not looking favorable. Brokerage downgrades are also coming in. Some ATF impact losses are something which concern has been raised by Nomura. Looking for more shorting opportunities here and important stop losses, if any?
See, overall, the whole OMC basket is looking very weak, near to the zone of 30% of correction in the current calendar year. So at current levels, technical zone are extremely into oversold terrain. So from here onwards, being aggressive on the short side is again not recommended at these levels. But again, this is sell on the rise kind of a counters. So for some of the counters like BPCL, 290-95 zone is a very strong resistance level. So if it moves towards the zone of 295, one may look for selling opportunity in the counter, keeping a strict stop loss of 310. But at these levels, no doubt we might see some kind of further correction. But these levels are not very much comfortable even for short selling in these counters.
Right. And Osho, a quick one on Ola Electric. The registrations have come up properly in the month of March. A slight bump up when it comes to the operational numbers. Deeply oversold. Your views on that?
See, in this month, specifically in last 2-3 trading sessions, the counter has already regained nearly 20%. So that's too much in 2-3 trading sessions. But overall, technically, the counter is attempting to have a revival. So this might provide an opportunity for short-term investors. I will advise to accumulate this counter at current levels. On the higher end, 34 to 35 is the first target that one can expect in the counter. While on the lower end, it is having a very strong support around the zone of 23. So one should definitely keep a strict stop loss of 23 and can look for accumulation for target price of 35.
And apart from this, this Page Industries, that stock is actually holding up. One of the few gainers which I saw in the Nifty 500 index holding in this market as well. Is there some value emerging here? How the chart strength looking like?
See, overall, in the last couple of weeks, the counter have regained some of the strength from the lower end. But on the higher end, the breakdown neckline is approximately placed around the zone of 34,500 approx level. So one should wait for those levels to get breached. If it happens, then from there onwards, we can see a decent recovery towards 40,000 kind of a zone. So wait for another 700 to 800 points of rally, and a sustainable move can provide a decent opportunity for short-term buying traders.
All right, and the last one, Osho, short, but we could say an important trade, PG Electroplast. Your views on that?
For PGEL, again, the counter has given a very strong breakdown from the zone of 500, which has been providing a very strong support for the counter. So I will expect that once it reaches the zone of 500, then only one may look for buying opportunity. Till that time, better to stay sidelines from the counter.
Thanks a lot, Osho, for this rapid fire segment. Over to you, Hiral.
Thank you so much for that. Let's also look at what stocks are trending on Google currently, because I'm sure apart from Trump, there might be something else also with all the kind of commentary that we've heard from Donald Trump. SBI, CDSL, BSE, Geo Financial Services. So your capital market stocks which are in focus as well after yesterday, they continue to remain in focus. SBI, we've discussed about the PSU banking space, which is seeing selling pressure in today's session, and Geo Financial Services. These are the ones which are trending on Google. But as geopolitics is taking another turn, markets are recalibrating to a fresh layer of uncertainty. We spoke to some of the biggest market voices and economists throughout the day, including Sandeep Tandon, Saurabh Mukherjee, Pranjul, on understanding the impact on markets and economy. Let's quickly listen into what they had to say.
The way I look at India currently, we are seeing a signs of capitulation, and which means we are closer to bottom, and which also means worst is nearby. Either worst is already over or worst is nearby, but best is yet to begin. That's the way I'll define this situation. And hence, this is the time not to get capitulated, the time to capitalize the opportunity. So one has to be clearly looking at some of the sector like telecom, generic pharma. There are many sectors, large infra, energy, which are not impacted, rather beneficially. Okay. So these are the spaces where you should have a concentrated holding rather than running a very well diversified portfolio, which will not help us at this point in time.
Textile plays, second, auto ancillaries, third, precision engineering, fourth, the pharma supply chain and pharma ancillaries, and fifth is some of the auto OEMs as well. So roughly in each of these sectors, I would say we can find 4 to 5 investable names, and you could thus look at across India between Tamil Nadu, Gujarat, the NCR region. You're looking at around say 20 to 30 high quality industrial manufacturing export plays who will benefit from much of what is playing out in India. And as the valuations get pounded in this correction, I think we are trying our best to buy some more of that.
If oil averages $80 a barrel, which basically means that the worst is behind us, even though the path from here could be a little uncertain, and overall for the whole year, the average is $80 to $85 a barrel. My sense is growth could be about 6.3%, which is 70 basis points lesser than the 7% I had penciled in before the crisis energy shock happened. And I would say that at that point of time, inflation would be slightly higher, not too much, 4.5%. I don't think we'll see repo rate hikes because inflation will not be that much higher. And fiscal deficit slippage will be quite minor. Instead of 4.3, they'll probably end up with 4.5% of GDP fiscal deficit. I would generally call this a manageable sort of scenario.
Okay, so that's the word coming in from market experts and economists when it comes to the impact of the war and the way forward. But let's also get in Raghvendra Kedia, founder of Prosperity Advisors. Raghvendra, welcome to the show. Always a pleasure to speak to you. My question coming to you is, in this kind of a market scenario, a lot of fund managers are of the opinion that the markets have somewhere bottomed out, and from here on, it's going to be an uptrend. Yes, a couple of percentage points pain further could come in, but somewhere there is a bounce which is on the cards. And this is not only a technical view that's coming in, a lot of fundamental analysts are also of the same opinion. If you have to see an opportunity like that, which would your top pocket be?
Good afternoon, Hiral. Broadly, we do agree that there is a recovery on cards, and post-COVID, there was a V-shaped recovery. But rather, we think this could be a U-shaped recovery where slow and steady upmarch would happen. And specific to which pockets we would invest, we are looking at companies which are more immune to the global shocks and less vulnerable to the overall war situation, if at all it gets extended. So companies which are inward looking in terms of their revenue, profitability, sales, order book. So the top of the pick is the asset-like models of capital market specific companies. So we do like Bombay Stock Exchange, CDSL. They are platform-based businesses, asset-like models, cash-rich companies. So any dip can be taken as buying opportunities to deploy funds in these capital market specific companies. We have seen these particular sector doing fantastically well post-COVID, and we believe that history could repeat where such companies would give significant outperformance. Second pocket, we are actually looking at different stocks, specifically the shipping companies, considering their large PSU market caps with high dividend paying companies. So that's another comforting factor. So our top pick from that sector continues to be Muscat Dock and Cochin Shipyard. So these two companies from the defense pack with some overweight on the shipping side of it. So companies which are inward looking, asset light models, CDSL, BSE, Cochin Shipyard, Muscat Dock continues to be our top pick. We have our shopping list ready and we are buyers at every dips.
All right, buyers at every dip, and the shopping list is ready by Raghavendra. But interestingly, another stock is there from the defense pack, HL. Of course, there's a mixed reviews coming in from a broking report. To give in more perspective, we are joined in by Jasmeet. Jasmeet, what's happening with HL? What has CLSA talked about?
Well, sure. Thank you for that. If we look at this particular counter, it's already down 25% over the last 6 months. And today we have brokerage on CLSA speaking on the note. It's a mixed note, to be honest. They have cut the target price to 5,140 from earlier 5,400, but they still see a 60% upside from here on. While what they make a note is they say the order backlog is built and execution is something that will be watched out carefully. Second, they also say the company will be a big beneficiary when it comes to Modi 3.0 and they expect a double-digit growth in the overall order book for next decade. While they also make a note that they cut the target price, EPS target price of next year on the back of that slowed GE order ramp up. That's something which will be watched. While lastly, they also say that the HCL is the cheapest pure play company when it comes to defense pack in the given sector. So all in all, we do see a negative but a positive note as well, where they see a good upside from the stock.
All right, that's an interesting take on that. Thanks a lot, Jasmeet, for that. But Raghavendra, I want to get your views onto it as well. HAL valuations might look a bit attractive, but the stock does have overhang. Your fundamental view on this stock, especially on the medium-term basis?
Good afternoon, Sharad. Broadly, for a medium-term basis, actually, you very specifically, very correctly pinpointed, there is some pain and overhang. And I think the large dependence in terms of the order book for Hindustan Aeronautics was their flagship product of Tejas LCA, the light compact aircraft. And there has been reports from the government domain that Tejas aircraft has hit some snags and it has been grounded for further technical upgrade. So until there is clarity on that Tejas aircraft's flaws getting fixed and it is back up in the air, we would actually have a wait and watch considering HAL's the largest order book contributor has been the Tejas aircraft. Till then, it's a wait and watch. We think that another 2 quarters, it could actually feel some pain or plateau, but we are not buying Hindustan Aeronautics at current level. In spite of the valuations being attractive, the price being beaten down, it's 2 quarters of more patience and technical reports awaited.
That's with regards to HAL and the defense pack as a whole. But moving on, cement prices are set to move higher in early April. That's what we are picking up from our sources. And this is a story that Ridhima has brought to us. Let me head across to her to get more details. Ridhima, what are you picking up in terms of the cement pack and the price hikes that could be on the cards?
So cement prices could rise by rupees 20 to rupees 50 per bag in the first week of April as per the cement distributors. This is mainly due to the rising input prices due to the Middle East war. Now zone wise, if we were to see, North zone could see a price rise of rupees 20 to rupees 30, South by about rupees 30 to rupees 50, East by around rupees 20 to 30 and West by rupees 30. This is as per the distributors. Now stocks in focus include your Ultratech Cement, Ambuja Cement, JK Cement to name a few. The main reason behind this cement price rise is the shortage of propylene, which is used to package your cement. And not just this, freight costs have also risen by 8 to 18% and they form around 20 to 25% of the total cement costs. Not just this, industry sources have also told us that there is a rising demand which could ultimately lead to price hikes as well. And cement is also allied to many industries. Firstly, a real estate sector, around 18 to 22% of cement is used there. Major dependence in the infra sector, around 80 to 90% of usage of the cement is there to build your roads, bridges and dams. Analysts view that this price increase could be enough to offset the rising input prices, but a lot will depend on the market conditions and how long the conflict lasts.
Okay, so that's with regards to cement prices. Raghavendra, how are you looking at the cement space? Price, you're talking about a price hike where valuations are in two. Will the price hikes be enough to fill the gap when it comes to input cost pressures as well?
So, Hiral, I think the price hike would largely cover the input raw material price hike. And as your colleague pointed out, the shortage of packing bags. So there could be substitutes, or it is not a big needle mover in terms of the price being passed upon to the customer. So this April expected price rise actually would augur very well for the entire cement pack. And as earlier said, this entire cement sector is largely dependent on the real estate growth and the projects being awarded by the government, NHAI and other bodies. So we believe that there was a slowdown from the government spend, which actually could pick up in 2026-27. So cement could be the largest beneficiary in terms of order book. We do like Ultratech Cement at current levels, considering it is a slow and steady upmover. Capacity utilization could increase. So Ultratech at current levels of 10,500 could give a 20% upside on a very conservative basis, and we are looking at a price target of around 12,700 for a 1-year investment horizon. From the smaller cap space in the cement sector, JSW Cement remains our top pick. We expect 5 rupee EPS would be earned on a full year basis, giving a 30 times P multiple, gives us a price target of 150, which is around another 35%.
So there is two picks coming in. Right, so JSW Cement and Ultratech Cement. But moving on from a discussion from cement to the auto space, auto numbers, the entire review is here. Which segments have done well, which have not done well, where there might be expectations. To get in all this perspective, we are joined in by Mahima. What's the total roundup?
Right, so overall, Sharad, there is sustenance in terms of where demand goes, and overall, it's been a good performance when it comes to the March sales number as well. Now, if we talk about two-wheeler, there's strong retail momentum that we've seen with TVS leading the most, seeing a 25% growth. E-two-wheelers have picked up and penetration has spiked. And overall, if we take a look at the passenger vehicles, Tata Motors and M&M have kind of led the growth this March. Maruti is recovering, and overall Hyundai is still muted, second year in a row. For commercial vehicles, retail, MHCV industry volume momentum has sustained, but Tata Motor has fared better in terms of March. Lastly, in terms of tractor, M&M outperforms peers overall, and Escort's performance is overall steady, but exports is still a concern right now, considering the entire situation, war situation as well. So this is the overall view as to how auto sales numbers have fared in March.
Thanks a lot, Mahima, for that. So it's basically a bit mixed trends coming in for the month of March. But Raghavendra, I want to get you on this. Would you look at something in a two-wheeler or something in the EV space right now? Because there are mixed trends coming up in this entire auto sales pack, for the month of March, which Mahima discussed. Any good picks in the auto for us?
So we are biased towards two-wheelers and negatively biased on electric EV space, considering the high valuations for the EV. Moving to two-wheeler, TVS Motors continues to be our top pick. The stock was trading at levels of around 4,000 pre-beginning of the war and has beaten down to levels of 3,350. So with a steady monthly sales numbers being on the impressive side, GST cut, income tax rate cut, and overall the interest rate cuts from the RBI, which had happened in the last 3-4 quarters. So the benefits can be very prolonged, and TVS Motors could have a very sustained good monthly sales numbers going ahead. If monsoon reports come better, then the rural story could also pick up, and their exports to Africa could also pick up. So TVS Motors, we expect a 20% upside for a price target of 4,000, which is something very close to what TVS Motors was trading before the beginning of the US-Iran war. So that continues to be a top pick from the entire auto space, considering EV, two-wheelers and four-wheelers.
That's the view coming in with regards to auto as a space as well. But thank you, Raghvendra, so much for joining in. Always a pleasure to speak to you. One stock I just want to mark as a latent view with the kind of jump that we've seen after opening. That stock is at the day's highest levels. 15% up move coming in there. And this is after its US-based arm has invested $3 million in an AI startup. That is one of the reasons why we're seeing this. And the deal is carried out in the form of safe notes, actionable in a future funding round. An interesting setup there. And this is going to be one of the stocks that we'll focus on during the day as well. But completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to Watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Rupee strengthens after the Reserve Bank of India issues revised guidelines on risk management and interbank dealings, tightening norms around foreign exchange derivatives amid evolving market conditions. Oil prices, meanwhile, surged past $107 a barrel amid worries around supply. This after Trump's comments threatening attacks on energy infrastructure in Tehran. Government grants full customs duty exemption on critical petrochem products. This as the Middle East war continues to roil energy markets across the globe. And the Trump administration is planning steep tariffs on certain imported medicines, targeting companies selling high-priced branded drugs in the US. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets. When you talk about Nifty, it's taking a cut of about 300 odd points thereabout. And when you talk about Sensex as well, that cut is in fact deeper. It's a gash that you're looking at, with 1,000-point knock also coming in on the Sensex. When you talk about the entire sectoral picture as well, very sharply tilted in the favor of red right now, and that's something that we're seeing a continuation of right now. You do have PSU banks that are dragging right now, leading losses with that 2.5% cut coming in. Bank, oil and gas, auto, energy, pharma, all of those sectors holding on firmly to that tinge of red. The one sector that's holding up quite well right now is IT. Just the little bit of positivity that you're seeing on the sectoral front there as far as IT is concerned. When you talk about the list of losers as well, something like a Karur Vyasya Bank is also taking a knock of about 6.5%, Capri Global, PG Electroplast and Garden Reach. Some of those stocks are also under pressure, but when you talk about the entire Nifty 50 pack, something like an Eternal Asian Paints, Geo Financial Services and Eicher Motors makes it to that list. Even SBI is also trading with a cut of about 2.5%. When you talk about the list of gainers, something like HCL Tech, Hindalco, Wipro, Tata Consumer and Dr. Reddy's are holding on to a little bit of gains as well. But when you talk about the entire picture, as far as oil, you're looking at quite the interesting picture right now. In fact, let's also take a look at oil prices as they stand right now, because you do have that $107 a barrel level that was breached very clearly as far as Brent is concerned, and that's clearly the picture that you can see on your screens as well. WTI as well, you're seeing strength coming in. And when you talk about the spread as well between the two benchmarks, you're looking that range really narrow, and at one point during the war as well, you did have that range trading close to $13 in terms of that deviation between the two benchmarks. Right now, it's just about $1. Right now, we do have Ajay Kedia who's joining us right now for some more insights. Ajay Kedia, Director, Kedia Advisory, is going to be joining us right now. Mr. Kedia, thank you so much for taking time out and joining us. It's a very interesting setup that you're seeing when it comes to Brent. And, you know, I remember the last time that we spoke, we talked about that entire $13 range between WTI and Brent. That has now narrowed to just about $1. And prices seem to be headed towards $110 a barrel.
Very good afternoon. Yeah, you have said last time when we were speaking, the difference was around $16, and right now it's at trimmed down. But still, the concerns are still going on, because the statement from Donald Trump that they will require another 2 to 3 weeks. That means the Strait of Hormuz is right now open, but the insurance and freight rates are quite high, and that can continue for the next couple of weeks. That will definitely create a
havoc-like situation in Brent. So we expect prices will continue to hold above $100 mark unless and until US take a proper exit from Iran. And maybe on higher side, we can see a temporary jump to the level of 125 to 128 because see, right now supply has been quite available in market against the demand. But because of the route that has been chalked and even the Red Sea area, is Houthis are also creating a same scenario. So I think a very high possibility that we can see prices moving beyond 120 level mark.
No, absolutely, and that's very important commentary that you're looking at in terms of where prices are headed. Let's also explore that a little deeper and look into that question as well. We have Peter McGuire, CEO Trading.com Australia, joining us right now. Peter, thank you so much for taking time out and joining us. And it seems that every single time that we really speak, you do have prices really edging closer to that $110 a barrel level. What do you have in mind when it comes to the trajectory? What are you mapping out when it comes to the particular trajectory when it comes to oil?
Well, good afternoon, Shreyanshi. I tell you what, I think we're very much listening to the fundamentals. We're listening to as far as President Trump and, of course, political commentators or I think all of the noise, and you've got to take that all on board. And the market has certainly edged up, and it's been very aggressive over the last couple of days, back at that 107 sort of number. We had a high earlier in the week, gave off some of that hot steam, and now it's back up to 107-ish. We had a bit of a sell-off across Asia, and it's going to be interesting to see how this. I think the point in time, is it going to be 3 weeks, what President Trump's saying, or are we going to see further conflicts and further attacks on installations across Iran?
And Peter, I'll come right back to you. But before I do that, I quickly wanted to take a look at what gold prices are doing as of now, because you do see that weakness also emerging as far as gold is concerned. And Mr. Kedia, I wanted to get a sense of what you think about the trajectory going forward as well, moving into next week. Of course, this is a truncated week, at least for the markets right now. But when you talk about gold prices heading into the next week, what are you anticipating right now?
Yeah, I'm looking that prices have been under sell-off situation because we have seen cryptos are going down, equity markets are under pressure, currencies are under pressure. Even we have seen Dubai realistic index has been down by 37%. All that creating a sell-off-like situation in gold. Even up till now, we have seen central banks were buying gold, but there is a news going on. Russia and some other central banks have started pausing or at least started liquidating their gold. So I think whatever the jump we have seen from 4100 level mark to 4800, that was a technical retracement only. Unless until things have been not sorted out down, we expect prices might get retest the level of 4100 and maybe we can see level moving towards 3650 because physical demand is been also hampered. Today, as a consumer, India and China, they are basically a bigger consumer, and already we have seen festive seasons have been on set in India. But because of higher prices, volatility and gas concerns and other thing, the buying is been slightly paused as of now. So I think this sell-off would continue. One more thing is gold-silver ratio, which is currently around 64-65. We expect this ratio is going to be around 70-72. That means silver will be more underperforming than gold. Right now, its prices very near to $70 mark. A sell-off will continue and we may see prices moving to the base of 54-55 level also. So as of now, gold and silver both are under pressure.
As of now, they're trading in tandem with each other, but that could really change is the sense that I'm gathering here. Peter, I'll come right back to you. This is something that we've been talking about since the beginning of the war. In terms of how these strikes on energy infrastructure, it could take a lot of time to really get the situation under control. And you do have commentary coming in from Qatar and elsewhere as well, in terms of what this could possibly translate into in terms of the energy strikes. So when you do have this particular threat coming in from Trump right now in terms of energy infrastructure, how are you really looking at it? And what kind of bullishness are you then penciling in when it comes to oil prices?
Well, I think, Shreyanshi, that's all depends on what what the strategy is going to be from across not only Israel, but of course the United States. Is this going to be protracted? Is it going to be direct? Are they going to look at the likes of water, electricity and other infrastructures? Now, if that was to happen and that was to really ramp up, and we saw that over the next week, I'm sure that that would add serious horsepower to the price of crude oil. I'm talking $10 to $25, $30 a barrel very, very quickly, because that draws conflict into this whole argument, and it could spike significantly higher from there. So this is early days. It's got the capacity to be a 130 sort of handle, 135, if things were to ramp up as far as the severity. But we've just got to wait and see how this plays out over the next week or so.
No, absolutely. And that's something that you're looking at in terms of what this could translate into, Peter, as well. But, when you talk about oil prices right now, there's that entire risk on the back of Hormuz. And that's also something that, you should be sharpening your focus on. So when it comes to that, do you then expect prices, if there's, let's assume that there is a longer escalation of this and there's a prolonged conflict. In that case, are you penciling in $110? Or are you looking at even more than that in terms of prices?
I think much more, because this is the issue. We've got to look at supply, and we've got to look at what happens as far as the Strait of Hormuz. That's got to be our feature point of the whole argument, Shriyansi. Can vessels sail through the Strait of Hormuz and they're going to be safe passage? If that's not the case, then that really impacts the likes of Asia, and certainly where I sit in Australia, and to some extent, I'm sure, India. So to a major extent. So how this is going to be addressed, and the fall off as far as economic growth, inflation, all of these impacts are going to be severe. So it's a very tender spot at the moment. We're really on a knife's edge, and it's just how it plays out over that next week. And things could escalate very, very quickly, or things could settle down. And that's why we've got to listen to the likes of President Trump when he talks, and of course what happens out of Iran, and take all of those messages on board.
No, absolutely. And Peter, there's been a lot of commentary coming in from President Trump as well of late, and that's something that we've really been keenly listening to, as well as prices reflecting the extent of the damage that really does in terms of prices as well. But, Mr. Kedia, when you talk about this particular Hormuz supply disruption as well, are you also estimating higher levels or higher for longer oil prices going forward? Are you also penciling in upwards of $110 a barrel?
I think the upward would be a very limited period. We may see prices coming back once the things have been settled down. We are expecting in quarter 3, quarter 4, prices might get back to the level of 70, 75 also, because our supply has been quite good since last couple of years. Only concern is the logistic part right now, which is been facing. And important would be the, like Peter has correctly marked it, that infrastructure damage that has been done, which will definitely impact. So maybe for next couple of months, we will be continue to hold above $100 mark. On higher side, we are expecting around 125 to 130, but that won't be holding, because as compared to supply and demand, this time we have a good ample supply. So I think might be a bounce, but quarter 3, quarter 4, we can see prices moving back to the level of 70, 75 level.
No, absolutely. And that's something that you're looking at in terms of supply, and that entire bit is very much in the spotlight when it comes to oil prices. Peter, I'll take it across to you when it comes to gold as well. I wanted to try and understand what you think in terms of what's going to happen going forward when it comes to gold prices as well, because you do have a stronger dollar thereabout right now, a little bit of strength that you're seeing emerging back in the dollar right now. That's also something that you're looking at as a piece of the puzzle, but there's actually a lot of pieces to this puzzle, and who better than you to help us understand that?
Well, I think a couple of things, Shriyansi. First off, US dollar index sitting just on 100. I feel as though that will probably rise over the next week or so due to this conflict and the ongoing situation. So I'm expecting US dollar probably take a 101 handle out. As far as gold, we're off 3.5% today. It was dynamic, and it's been an incredible market over the last 36 hours to trade. We've had a big run up, and then all of a sudden it ran out of steam and then capitulated 3.5%. The best part of $150 odd just stripped straight out. So there's that. Next part, I'm feeling as though that bullion is going to probably have a little bit further softness over the next couple of days. We've got Easter. We've got to understand that. And let's just see, again, the temperament as far as the Middle East, what happens there, and probably it'll be back down to that 44 handle. So it's very volatile for traders, great opportunities, but one needs to be very, very well mannered and very respectful for the volatility.
And Peter, that's something that we're looking at when it comes to prices. Quickly, just wanted to get your closing comments in and try and understand which commodity you're most bullish on right now in a setup as volatile as this one.
Tell you what, I think I'm still more bullish on oil for the short term over the rest of this month. I feel as though that it's probably going to be volatile. It's going to have the potential for upside, and the uncertainty from a geopolitical standpoint, Shriyansi. There are so many unknowns in this argument. We've got no definitive as far as timeline, aggression, retaliation from Iran, wild card events, anything like that can really, drone attacks. All of these unknowns can really change the harmony and temperament of the Strait of Hormuz within a matter of hours.
No, absolutely, and we've been seeing that really also coming in as well when it comes to prices as well. And Mr. Kedia, very quickly, just a one-word answer, if you will, which is the commodity that you're most bullish on before we wrap?
Copper, because still we expect the demand and supply situation would be good. Copper would be the best commodity time being.
All right, then. So there you go. That's the word coming in from Mr. Kedia as well as Peter in terms of what the roundup from here on is going to look like when it comes to prices and what the trajectory then is going to look like for gold, silver, oil, as well as copper in terms of that bullishness also searing through as far as copper is concerned. But let's also move on with that in mind. Take a look at something like RBL Bank that is sharply in focus on the back of regulators clearing a key hurdle tied to a major strategic transaction. Sources, in fact, are suggesting that this could mark a turning point for the bank with overseas interest and regulatory approvals lining up. In fact, Piyush is joining in with some more details.
Yeah, that is correct. In a positive development for RBL Bank, the lender has received the RBI's approval for Emirat NBD Bank deal, acquiring a majority stake in the bank around late last night. Sources tell us that the board of RBL Bank will meet later today, following which a formal disclosure is expected. Under the terms of the deal, Emirat's NBD will acquire 60% stake in RBL Bank for around 26,850 crore rupees. The deal was signed in October last year and till now has received approvals from SEBI. No, it is pending SEBI approval, but it has received approval from RBI and the CCI. Emirat NBD Bank's local regulator has also approved the deal. India's banking sector has actually gained a lot of deals over the last 1 year. The deals include Emirat's RBL, Shriram Finance MUFG deal, Yes Bank SMBC deal, Blackstone investing in Federal Bank and Samman Capital and IHC deal, and also Warburg Pincus picked up material stake in IDFC Bank last year. Back to you.
No, absolutely, and thank you so much for joining us with that update coming in as far as something like an RBL Bank is then concerned. But moving on then, while visiting the Ram Temple in Ayodhya on the occasion of Hanuman Jayanti, Adani Group Chairman Gautam Adani said that he aims to extend all cooperation to preserve Gurukul culture in the era of AI. Let's go across and listen in.
मैं प्रार्थना करता हूँ कि प्रभु श्री राम का आशीर्वाद हम सब पर बना रहे और हमारा देश निरंतर प्रगति के पंथ पे आगे बढ़े। आज और यहाँ गुरुकुल में आने का भी मौका मिला। बच्चों के साथ थोड़ा समय बिताया। गुरुकुल आज के युग में ये संस्कृति को जागरूक रखने का बहुत महत्वपूर्ण काम कर रही है। अदानी फाउंडेशन की ओर से एक गुरुकुल संस्कृति को संभालने के लिए और आज के एआई ज़माने के टाइम पे अपनी संस्कृति को और वेग कैसे मिले और उसके लिए जो सहयोगिता की आवश्यकता होगी हम उसको पूरी करेंगे.
All right, then there you go. So that's key commentary coming in terms of Gurukul culture in the era of AI. But let's also move on and get you another important update here. The government is signaling a possible rethink of the FY27 revenue projections, even as indirect tax collections remain largely on track for the current year. In fact, sources are saying that GST and non-GST revenues have met or exceeded FY26 targets. But the centre is now assessing how the recent duty concessions linked to global disruptions could impact the next financial year as well. In fact, Shrimi is standing by with all of those details there.
Yeah, that's right. Government definitely, flagged concern. The official sources indicating that they had to reassess the budgetary target for custom, excise, as well as overall revenue receipts, given the kind of concession we are seeing on the custom duty, on the excise duty, on several, items, given the kind of conflict situation we are in, and to kind of boost the domestic manufacture and the domestic import as well as export. So the kind of concession they are giving, the government is going to reassess. However, they reiterated the fact that FY26 looks robust as far as indirect taxation is concerned. In fact, GST, CGST, which is the center account, has exceeded the revised estimate for FY26, and in fact they have shared a lot of numbers in the percentage term, not in absolute term, because we have yet to see the March numbers in the absolute term. So as far as GST plus non-GST is concerned, 101% have exceeded the target. Custom revenue at 102% of the budget target. Central excise plus custom as well exceeded 101 and 102 respectively, and they are saying that it's doing reasonably well. Second important point which was highlighted by official on the fact that the kind of exemption coming in from the CBIC department on the chemical industries as well as plastic announced in the morning today is going to have a revenue hit of 1800 crore in next 3 months is the important revenue impact is coming, is the indication coming on that front. And in fact, they're assessing the situation. Maybe they have to extend this exemption given to these items as well. On the SEZ also quickly, which they talked about, that domestic industry can now sell up to 30%. The CBIC official clarifies that it's not like that they are negating the importance and the focus on the export from the SEZ context, but the point being that they're trying to sort of boost the domestic in the given conflict, because a lot of domestic manufacturing is facing disruption, the supply disruption, and this is a kind of measure they're trying to give. However, there is no revenue impact as such assessed so far by the department, but this is more of a measure to sort of combat the situation and the challenges the industry is facing. On the trade deal as well, CBIC official highlighted that since trade deal is also ongoing with the US, etc., so all these concessions will be taken into account while deciding on the final deal, which we are, which we are in talks with couple of developing nations, including US. So these are the three components which was highlighted by CBI official on three different fronts.
No, absolutely. Thank you so much, Shrimi, for getting us all of those details. So there you go. On a bunch of those fronts, you do have that update coming in as of now. But let's also shift focus and talk about cement prices. Now, they're set to move higher in early April, and distributors are indicating a zone-wise hike across markets. The increase is being driven by higher input and freight costs, even as demand remains firm. What does this mean when it comes to cement stocks, and how much of the cost pressures can companies really pass on? In fact, Ridhima is joining in with just that update.
Cement companies could see a price rise by Rs 20 to Rs 50 in the first week of April as per the cement distributors. Now, this is mainly due to the rising input prices due to the Middle East war. Now, if we talk about zone-wise, the North zone could see a price hike of Rs 20 to Rs 30, and South zone could see a price rise of 30 to Rs 50. East similarly could see 20 to 30 rupees increase, and West could see a rise by about Rs 30. Now, stocks in focus include Ultratech Cement, Ambuja Cement, JK Cement, to name a few. The main reason why the prices of cement are rising is due to the insufficient supply of propylene, which is used to package your cements. Now, apart from this, freight costs have also risen by 8 to 15%, and freight cost sum about 20 to 25% of the total cement costs. Not just this, industry sources have also told us that there's a rising demand for cement, which could ultimately lead to the price rise. Now, if we talk about the allied industries of cement, this includes real estate sector, which uses around 18 to 22% of cement, and similarly your infrastructure sector uses 80 to 90% of cement for the construction of dams and bridges, etc. Analysts view that this price increase could be enough to offset the input rise, but a lot will depend on the market forces and how long the conflict lasts.
No, absolutely. And thank you so much, Ridhima, for getting us all of those details. On that note, let's also wrap the show. But before we do that, a very quick look at the markets right now. When you talk about Nifty, about 250-point cut is what you're seeing as far as Nifty is concerned. When you talk about Sensex, though, that cut is much deeper right now. So when you talk about Sensex, you're looking at somewhere close to 770 points in terms of that downtick also coming in. When you talk about the sectoral picture, yet again, it's tilted sharply in the favor of red. So PSU banks leading losses. And there's also banks, pharma, auto, energy, as well as consumption that are on the back foot. The only pocket of green right now in terms of a sectoral basis is something like IT that is standing out right now. When you talk about the list of losers as well, within the Nifty 50 pack, you're looking at Eternal, Asian Paints, Eicher Motors, and Geo Financial Services making it to that list. Sun Pharma also about a 2.5% knock coming in on that particular counter. But when you talk about something like an HCL Tech remaining resilient, in fact, IT, yet again, the entire pocket that's holding up quite well right now. Tech Mahindra, TCS, Wipro, all of those counters holding on to a bunch of green right now. And on the flip side, something like Eternal and Asian Paints leading losses. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy gonna be crazy and madness. Book your tickets now on District.
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5. Into this topic to tell you what's at stake. Join me, Raisha Sehgal, on Prime 5, only on NDTV 24.
You're watching Small Cap Buzzers here at NDTV Profit. I am Mahima Vachhajani and with me is Varsha. Let's take a quick look, before we take a look at the markets as to what are we going to discuss on the show today. We have Sectoral Glass lined up first. We're going to speak to the management where they're making a strategic shift to the specialty glass segment where the product mix shift that's, on the way will lead to, which is, more towards the value added products, and as to how this will overall see an impact on their margins, something that we're going to discuss with the management. The next counter that we're going to talk about is V-Mart. It came out with its business update, strong business update coming in yet again for this tier 2 player. Total revenue for Q4 has seen an uptick of 24%. Of course, this is on account of festive season as well. And same-store sales growth saw a jump of 12%. And this is something that has probably led to an uptick in the counter that we're seeing in trade today. The next one that we're going to talk about is Bansal Wire. Now, this one is also buzzing on the back of its Q4 business update where sales volume saw an uptick of 20%. We'll take a look at as to how the business update has fared overall, but that's one of the counters that we're going to talk about in today's Small Cap Buzzers. The next one is Bombay Super Hybrid. Now, this one has been buzzing on the back of volumes. It's trading almost 37 times its 30-day average, and that's why we're going to talk about as to what this company does and why is the volume buzzing for this one. The last one on the list is Sapphire Foods. Now, this one has been falling constantly since the merger announcement with Devyani International. The stock is down almost 27% in the last month. Of course, markets also putting pressure on the counter separately. But since the announcement of merger, the stock has fallen. We're going to put spotlight on Sapphire Foods as well. So this is the overall view of the small cap buzzers that we're going to talk about in the show today. But before that, let's also take a quick look at on the markets as well. The Nifty 50 has recovered quite a bit from its day's low point. We are now just down by about 200 odd points, seeing a downtick of just 0.95% versus that of almost 2% at the start of the trade. The Bank Nifty has also seen a good recovery, of course, above the 22,400 levels as well. The Bank Nifty has also seen a good recovery, now down by just about 1.4 odd percent. In terms of where sectors go, we, at the start of the hour, we saw that all the sectors were in the red. Right now, the Nifty IT is the only one gaining in the green, but we've seen recovery from the day's low point for all of the sectors that have seen a significant pressure, including PSU banks, oil and gas, as well as Nifty defense as well. So this is with regards to where the sectors stand. The broader end of spectrum has also seen a significant recovery. The mid cap 150 and the small cap 250. The mid cap 150 is now down by about 1.4 odd percent, and the small cap 250 is now down by about 1%, just a downtick of 163 odd points. But Varsha, with regards to where the small cap index goes, the broader end of spectrum, what are the specific names that are buzzing in trade today?
Well, a lot of stocks are actually buzzing, and we have seen a good recovery when it comes to small cap sector as well. Let's talk about the stocks which are buzzing on the back of volumes and some of the news flows. Well, you have Ruchi Infra, you have Confidence Petro, buzzing. Ruchi Infra is up almost 16%, buzzing on the back of volumes. Confidence Petro is up almost 14%, buzzing again on the back of volumes. You have V-Mart also, which is in focus, of course, on the back of strong Q4 business update that the company has given. Even Ganesh Eco is also one such counter which is actually buzzing. We have seen we have seen this counter buzzing from the last 3 trading sessions. And Bansal Wire is also buzzing on the back of strong Q4 update though. There you go, the stock is up almost 7% in trade today. But some of the stocks are also, are seeing some kind of pressure. You have Sapphire Food, which is under pressure. Also, there you go, the stock is down almost 2%. though it has recovered. Responsive Industry is one such stock which is under pressure. You have Cross and Enviro Infra seeing cuts ranging from around 2 to 4%, though they've recovered from their lows. But overall, a strong recovery that we are seeing. But one such company which is in focus on the back of shift to the higher value glass products, I would say, is Sectoral Glass, wherein the company is strategically increasing the revenue contribution from higher value products. But to speak more about that and what lies ahead in the next 2 to 3 years, we are here joined by Mr. Amrut Gada, who is founder and promoter at Sectoral Glass. Mr. Gada, welcome at NDTV Profit and always pleasure to have you. Let me start my question when it comes to the financials. You were expecting 400 crores of revenue and 16 to 16.5% of EBITDA margin for FY26. That means almost 120 crores of revenue in Q4, considering Q4 the strongest quarter for you. Are you on track when it comes to the Q4 numbers and overall FY26 numbers?
Yeah, mostly we are in line with the projections. There is not much more difference, and also our major unit in Russell Khema has not been disturbed much more in this March. So we are in line with the projections what we have given in our investor call.
Okay, Mr. Gada, hi.
We are also maintaining the EBITDA.
Okay, Mr. Gada, hi. Mahima also joining in. So, if I'm not wrong, in your con call, you had mentioned that it is possible that you could do that 400 crore plus mark as well, considering that Q4 is a stronger quarter for you. I think 110 odd crores is what you need, 118 odd crores is what you need to cross that 400 crore mark. Do you think you'll be able to cross that 400 crore mark, or it will be just that 400 crore mark?
Touching the 400 crore because there was around 5-7% difference because of these geopolitical situations and the disturbance on the supply chain.
Well, can you help us understand as to how much of an impact the West Asia war has caused because of overall in terms of supply chain as well as your raw material pricing?
There is not much difference on the raw material pricing, but the supply has been disturbed, I can say around 5% to us, not much more. So we are maintaining 5% reductions in our UAE operations and around 2 to 3% down here in India operation.
Okay, you're talking about this quarter specifically 5%, Mr. Gada?
Q4. I am talking about Q4, yeah. And we are maintaining around 400 crores nearby, overall consolidated turnover for the FY26.
Got it. And if the war continues, how much of a pain can you expect going forward as well? 5% every quarter, is that reading correct?
I think, this is a very, tough situation today to predict how much there will be impact. But we are working on a 3 scenario. If there's, long-term war situation, then what will be the perceptions and what is the impact on EBITDA and the turnover? If it's moderate, then what will be? And if the situations, control within a week's time or next 15 days, then there will be no impact, I think, on our, futuristic projections for the next finance year.
Right. And sir, I understand about you maintaining the EBITDA guidance of around 16 to 16.5%. But considering the higher depreciation cost that you have, in December 2025, you had almost 5% of PAT margin. What's the PAT margin expected for FY26 overall and also for Q4?
Q4 mostly we will maintain the same or maybe 1% extra because this Taloja unit, which is now Taloja and Erode, is now performing better. The last this finance year we have acquired, and this is the Q3 for that unit. So we are working, and mostly we will PAT will be around 7.25% this quarter.
Okay, and sir, for overall FY26, if you could help us with the PAT margin number, please.
FY26 will be around, PAT margin will be around 30 crores, near to 30 crores.
Okay, cool.
Maybe, yeah.
Right. And so for FY27, you have mentioned in your con call, you're expecting 25% of growth when it comes to revenue. Are you still on track considering the Middle East situation that we are currently going?
Yeah, we are on track that 25% growth on FY27 we are considering on the moderate, and if the geopolitical situation will be under control, then I think we will surpass 40% of the growth coming year.
So minimum 25%, maximum 40% of growth that you're expecting when it comes to revenue growth. What about PAT margin, sir, for FY27?
PAT margin in line with these things, but I think we are working on the certain fundamentals of improving the efficiency, which will enhance our EBITDA to 1 to 1.5% in the next year. And this will be supported by certain our value-added product like fire product, bulletproof product, and the decorative product.
Okay, Mr. Gada, you were talking about your value-added products. Can you help us understand as to what percentage of your revenue right now comes from your value-added products? And 2 to 3 years down the line, where will that contribution be? And then, in what range are you expecting the margin expansion to be like?
See, in going forward for the next 3 years, our revenue will be around 25% from the value-added value-added product, and which the marketing team is doing grassroots, promoting that product. And I think if everything moves perfectly with in line with the India's GDP growth and real estate sector and other sector is growing, we will crossing the about 22% EBITDA level in next 3 years.
Okay. And sir, also, how do you see India versus international revenue mix, panning out for you for next 2 years? And what's the current, revenue contribution from international business as well?
See, the current year, the revenue is more than 75% from the international market. But the next finance year, FY27, mostly we are 60-40. And by FY28, maybe India will, grow further. And also we are looking, both international and national market, certain, both side growth opportunity by way of, acquisitions.
Okay, so give us more perspective on that, Mr. Gada. When you say acquisitions, what kind of fields are you exactly looking at? Is it going to be in value-added products? And if yes, how are you planning to fund these acquisitions? Is there a fundraising on the cards?
No, right now there is no fundraising on the card.
Okay.
But self cash generations from the next year's revenue. We are looking for the acquisitions, and in line with the Viksit Bharat's line, India is growing, and the product which we are in the segment for the this architectural glass, the real estate is growing, commercial space, residential space, hospitality industry. So to serve, we are planning ourselves to have a pan-India network. Right now we are in the South and West India, more our market share. But going forward down the line 2 years, we are planning for the pan-India network. And by capacity, we will be the largest in India by next 2 years. That's what is our vision for 2028 or 2030.
Got it. Mr. Gada, can you give us a perspective on your capacity utilizations right now? And where do you expect them to be next year by the end of FY27?
See, as far as UAE operation is concerned, we are above 80% utilizations, where we have taken certain expansion, which will start in the Q first if there is a not more disturbance in geopolitical situations. Secondly, last year in this current year FY26, we have acquired 2 units from the glass tech. So the first year the capacity utilization is below 40%, but next year all India our capacity utilization is above 80%.
Right, and sir, you have been also talking about entering into railway grade through Vande Bharat. What's the update there?
See, in railway, particularly AC coach and the luxury Vande Bharat, we are approved vendor, and now we are started filling the tender. So certain order already started, and gradually that business will also grow. So we are targeting around 10 to 15% market share in railway segment going down.
All right, Mr. Gada, thank you so much for being so candid with the answers that you gave us, and of course taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, so that was the management, of course, of Sectoral Glass. But let me also welcome in our guest of the day, Ganesh Sodani, co-founder at Ensure Capital, joining us now. Mr. Sodani, thank you so much for taking out the time. Any quick view on Sectoral Glass? I mean, you heard the management.
So the profitability was strong. As we talk about the margin prospectivity, obviously we are looking out some little bit pressure from the international market, because like almost 70-75% our revenue come from the international market itself. So I think the margin should be there, but obviously for the next 2 to 3 year time down the lines, we are looking out the capacity would be expandable. Apart from that, their new product lines also give boost. For the revenue generations, that is the new product line, which is the fire tinted glasses, which are commenced on the almost 27th quarter one, quarter two. So this also gave a little bit jumps in the revenue part. But yes, the as per the management, 400 crore marks in the next quarters, like for the financial year, and looking out that they can easily achieve out it, because there's a heavy demands come from the railways, infrastructures, as well as the export markets, what we are looking out for the next 2 year down the line.
Right. Well, moving on, time to dive into the F&O market setup and the cues shaping in trade today. Let's bring in Sharad for more details.
Thanks a lot for that. Today, of course, Sensex expiry is at play, but the markets are showing a good recovery, and of course, a very strong rupee is also there, and a good technical reversal at play. The recovery, which is aided by the IT stocks, HCL Tech, Tech Mahindra, TCS, and Infosys, they are all showing strength in the markets. But nevertheless, the sell-off was so severe that it will take some more time if the market fully recovers, because we see the Asian Paints, Eternal, the consumption names are seeing a little bit of pressure as well. BankX also, the story remains the same. Some kind of recovery is being attempted. HDFC Bank almost turned positive as well. So yes, a recovery is at play and the markets are showing good strength as well. Even the volatility was not that much as compared to what Trump's address was earlier. But let's see stock-specific moves where the action is. Long build-up coming in for Coforge, the mid-cap IT space I spoke about, and Bosch also we see a good volume pickup as their stock is up 5%. Short covering candidates, this of course includes Tech Mahindra and Wipro. Mostly IT names are in focus holding the fort. Long unwinding, let's see which are the stocks which should be in your radar. It's RVNL and IDFC First Bank. And shorts, of course, is there in the system right now also. PG Electroplast and Amber Enterprises, the EMS names, both of the stocks have taken a beating, falling between 4 to 6%. So this is the entire picture of the F&O market. But yes, we are looking at a good recovery.
All right, good recovery on the cards for sure. We discussed that on the start of the show as well. Thank you so much, Sharad, of course, for getting us all those details with regards to where the F&O space goes. But moving on to our next small cap buzzer, we're going to talk about V-Mart. The company, of course, did come out with its business update. Strong revenue growth coming in, and I think the stock is buzzing on the back of the same-store sales growth uptick that it's seen. We have Jasmeet joining us to give us more detail on the Q4 business update. Jasmeet, over to you.
Well, Mahima, thank you for that. As rightly said, the stock is buzzing in trade today on the back of that stuff that we saw coming in for the particular company. Now, if we look at the overall what the company does, well, company operates in the retail store segment where they have various stores across India, roughly 544 so far, in tier 2, tier 3 and tier 4 cities as well, while they supply footwear, clothes and other things. Now, in terms of the overall stock performance, we do see that over last 1 month, the stock has stagnated nearly 5% and over 6 months, the stock is down 38%. And similarly in the span of 1 year as well. And the current level of stocks are at 50% below the 52-week high, where that's the way problem comes in, and the stock is clearly seen underperforming in terms of what the business update shows. Now, if we look at the overall key business update, we do see that the Q4 revenue saw a jump of 24% YOY basis in this particular quarter, reaching that 971 crore mark. Now, in terms of the same-store sales growth, rightly said, reaches at 12% from the same-store sales growth at 12% of current levels. Now, in terms of the other store expansion, company did add 29 stores in this particular quarter, while it did see a closure of 6 stores. So net addition stands at 23 odd stores. So far, the company has 577 stores in the overall span of India. In terms of the overall FY26, the company marks the highest year where they have done major additions of stores. The company nearly added 92 stores, while the 12 saw closure of the stores as well. So roughly 90 or 80 or addition of stores in this particular year. In terms of the outlook, the management remains constructive over the Q4 demand outlook, given that they see the overall demand is easing for the management, and also the overall input cost is something that's reducing and which will help the margin expand going ahead. Lastly, in terms of the Q4, they say that Q4 will support with festival demand. So as the Q3, that's why they see a good momentum coming ahead.
Okay, Jasmeet, thank you so much for getting us those details. The stock is up 8% as we speak. Girish, I'll come to you on this one. Overall, if you take a look at FY25, it was the year for these, tier 2, tier 3 retail players, right? And there has been a bounce back on the back of festive season as well in terms of same-store sales growth. Your overall view on V-Mart?
So the overall view is a little bit positive, but obviously for the longer period of time, because the tier 2 and tier 3 cities margins are going to be improvised in the next 2 to 3 years time frame. They are just planning for the expanding of around 8 to 85 new stores, and the maximum go with the tier 2 and the tier 3 cities. So obviously the reductions should be there, As well as they are working on the debt reductions also, like almost 94% right now they are reducing from 131%. So little bit improvise in their margin also. So for the longer period time, yes, the VMart is a very good bet.
Right. Moving on, the next stock which is in focus is Bansal Wire. Let's pull up that stock. Let's see what that stock is doing. The stock is up almost 7.4% in trade today. This is on the back of strong Q4 business update that the company has given. But let's bring Path for more details on the Q4 volume for Bansal Wires. Path, over to you.
Thanks a lot, Varsha. So yes, you rightly mentioned that Bansal Wire is in focus today, and this is because the company reported really strong quarterly volumes. They reported that their sales volume in Q4 stood at 1.17 lakh metric tons. This implies a growth of almost 20% year on year, and this is a decent growth figure despite temporary industry-wide supply challenges that we have seen. Their sales volume for the entire FY26 stood at a record number of 4.58 lakh metric tons, which means that they registered a growth of around 32% year on year. Now this reflects a really strong growth momentum and the operational strength which the company has been seeing. For the next phase of growth, they are targeting induction hardened and tempered wire. They are also targeting the steel tire cords, and they will be also doing capex across other segments. Regarding their future outlook, the company expects around 30 to 40% volume growth in FY26, and they've mentioned they have maintained their long-term guidance of 20 to 25% growth in their EBITDA and revenues both. Their EBITDA per ton is expected to reach double digits in the next 3 to 4 years, and for FY27 they are targeting around 600 crores of free cash flow and an ROC of more than 25%. So a lot of really good guidance. Let's see if they are able to walk the talk.
Right. Thank you so much, Path, for all the details. Well, Girish, coming to you on this, what's your view when it comes to Bansal Wire, considering strong volume in Q4 that the company has seen? Also wanted your view when it comes to the margin perspective for these kind of companies, considering the higher raw material price that these companies have seen. So also your view on same.
So yes, the performance was very strong. So if we talk about the overall capacity, that is almost 7.7 ton per annum capacities. They are just go ahead with the 2027 targets lines. So in the term in 6.2 metric tons from 7.7 ton, it's a huge difference out there. Apart from that, there are new Gujarat Greenfield projects also going to be commenced in December 2027 to Jan 2028. So I think this will also give a strong propositions in the terms of overall turnovers as well as the capacity builders. Now come to the margin perspectives. Obviously, these type of companies go into the heavy margin contests, especially into the overall geopolitical tensions what we are facing right now in the last 3 to 4 months itself. So if we talk about for the longer period of time, yes, the margins are going to be improvised, but currently I'm not very much looking out for the next 3 to 4 months time frame. It will be the long-term horizon itself.
Moving on, Bombay Super Hybrid is one such stock which is in focus. Again, the stock is up almost 16%. Now, this is on the back of, strong volumes that the company has seen. But, let's see the key strengths and weakness when it comes to this counter. This is promoted by industry veterans, have over 20 years of sector experience, and they have a good comfortable capital structure, moderate leverage with healthy debt coverage that the company has seen. They do have pan-India distribution network with direct reach to farmers. But, there are some of the key weakness that one should also look out considering the investment into this company. They have elongated operating cycle and higher working capital cycle due to seasonal inventory. Also, if you see, they have revenue concentration to select states, and they have heavy dependence on one of the seeds, that is groundnut seeds, and also a high exposure to monsoon variability and intense competition in seed industry are some of the weakness that this company has. But Girish, what's your view when it comes to Bombay Super Seeds, and what should investors do, considering the huge run-up that the stock has seen today?
So Bombay Super Seeds, obviously the profit margins was extremely good. They are just expanding their margin for approximately 15 to 16% overall, despite quarter 2 financial year 26. And but the revenue should be in the pressures because obviously the overall scenario is a bit affected. Now come to the high cost capital efficiencies because they are going to the heavy cash intervals as well as the strong market positions. So now the positions overall that they are the second largest player obviously in India. So the overall growth projections was very much high. But if the investors hold this particular stocks, then they should hold out for the next 1.5 years. But the fresh allocations is not very much advisable. Let's see how the next 2 quarters number should be there. For the strong margins, what we are looking out, because the currently margins, the companies are expecting the margin should be grow by 20 to 22% year-on-year basis.
Okay, all right, Girish, thank you so much for helping us with insights on all the small cap buzzers that we discussed on the show today, and of course taking out the time. But viewers completely out of time on this edition of small cap buzzers. But if you have any stock related queries, then do stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power जैसा spice और पुणे वाली energy gonna be crazy and madness. Book your tickets now on District.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Ganesh Consumer. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, Join me in the midst of our politics and people. Vanakkam, Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New Year.
You're watching Ask Profit here at NDTV Profit. I am Mahima Vachharjani. Before we start taking all your stock-related queries, which, by the way, you can go ahead and ask your queries on the WhatsApp number that's flashing on your screen up there, or even call us and ask your queries. But before we do that, let's take a quick look as to how the markets are doing right now. With regards to where the Nifty 50 goes, strong recovery in the last half an hour is also what we've seen. We've seen staggered manner recovery when it comes to the Nifty 50, and that chart indicates that. Now we're just about 150 odd points below, trading with cuts about 150 odd points, well below the 22,500 levels on the Nifty 50, just down by about 0.6 odd percent. The Bank Nifty, however, is trading at that 50,900 odd mark, seeing cuts of about 1%. Now seeing a downtick of about 500 points, which was 700 points just half an hour ago. Let's try to pull up the Nifty 50 heat map and see as to what has kind of led to that recovery, right? We're seeing strong traction in IT names, of course, but it's important to see. There you go. There's a lot of names which have now turned into green as compared to where they were just half an hour ago. HCL Tech, strong uptick coming in at 3%. Tech Mahindra, 2% as well. Hindalco, TCS, Wipro, Nestle, Infosys are some of the names which are trading in green currently. But on the flip side, you still have Eternal, which continues to be under pressure, down 3.5%. Asian Paints, Eicher Motors, Sun Pharma, Geofinance, and Power Grid all seeing downtick of anywhere between 2 to 3 odd percent. Let's quickly pull up the sectoral heat map, because that is going to be an interesting one to watch out for. Of course, there is recovery in the Nifty IT. Metal also slightly in the green, but in terms of all of these sectors, there's recovery from the day's low point, even for Nifty Pharma, oil and gas, as well as your Nifty Healthcare and Nifty Defense as well. Let's quickly try to pull up the advanced decline ratio to see whether there is recovery in the broad end of spectrum as well or not. And yes, there is. The advanced decline ratio chart is now almost at its intersection, and we are even Stevens when it comes to the advance versus decline ratio. Let's quickly pull up the mid cap 150 and the small cap 250. The mid cap 150 is also trading with cuts of over 200 odd points, but at its day's high point. The mid cap, the small cap 250 as well is just now down by about 0.8 odd points at its day's high point. So that's with regards to where the overall markets stand. But let's start taking your stock related queries, and to answer them, we are now joined by Chandan Taparia, Head Technical and Derivative Research at Motilal Oswal, and G. Choklingam, Founder and MD at Economics Research, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to both of you. I'll start taking the first question, which is coming in from Ravindra, who's writing us from Bengaluru, asking about Dixon Tech. He's holding 210 in quantity from the levels of 14,900. He wants to know if he can go ahead and average at the current market price. He says he's a long-term investor. He can continue to hold this for the next 2 years. Mr. Choklingam, I'll come to you on this one. 10 lakhs of a loss is what he's sitting at. Wanted to understand as to what should be the next course of action for him.
Short-term one can definitely hold. First of all, the war has brought down a lot of stocks. And second, this stock also, even before war, has corrected quite a lot. And right now in the short term, it is doing very well, no doubt. But in the long term, I have my own apprehension because the government has approved more than 40 new proposals to get into ECMS business, electronic component manufacturing. So the competition is going to get very intensified. And therefore, I am positive. I would say buy for short to medium term, but be very cautious in the long term.
Right. For viewers tuning in, you can of course WhatsApp us on the query, WhatsApp us the query on the number that's flashing on your screen up there, or even give us a call and ask your stock related queries on the call as well. The next one is coming in from Kesha, who's writing us from Chennai, asking about Biocon. He's got 100 odd shares at the levels of 345. Wants to know from a slightly long term perspective as to what the charts are indicating. Chandan, I'll come to you on this one. Biocon, what's the view like?
Yes, good afternoon. So as of now, we have seen a corrective move in last 4 weeks, along with the decline in the broader market. Biocon corrected from 400 to almost 342 marks. It has been consolidated in a range, and now it has come to the lower band of the trading range. So I believe as of now, support-based buying could be seen. 325 is major support. If it declines further, I think one can buy with support of 325 with the view that it can again head towards 380 to 390 kind of level. So looking for buy on decline and positive to range bound kind of setup in Biocon.
All right. The next one, Chandan, is also a question that's poised for you. Shankar is asking this question. He says that he wants to know if he can go ahead and buy TVS Supply Chain Solutions at the current levels. He's already holding 1100 shares at the levels of 102. He wants to know if he can add more 400 shares at the current levels or wait for some time. What's the view like?
So in last 4 years, this counter has corrected from 258 to almost now below 90 marks and now quoting at 99 after the intraday recovery. So structure is negative if I look at the daily, if I look at the monthly, weekly and quarterly chart. But the good part is that last time also it took support near 90-92 and recovered to almost 135. This time also it made the bottom near 90. So 90 is a key level which provides the multiple buying opportunity in the counter. So we can look for some recovery. However, not expecting bigger move, but yes, with the support of 90-92, it can once head towards 110 to 125.
Okay, all right. So that's the view on TVS Supply Chain. We've got our first caller, Bharat, I think is calling us from Andhra Pradesh. A very good afternoon to you. How can we help you?
Good afternoon, madam. I am holding the Happiest Minds 500 shares at the price of 445. And what is the stop loss and the target of this stock?
Okay, so I believe that you're looking at the technical view on this one. So, Chandan, I'll stick with you as again for this one. Happiest Minds, what are charts indicating?
So this counter really rallied well in 2021, but after that continuously falling down, it has come to the lowest part of the 2021 where the rally began. So in 2021, it rallied well from 333 to 1580, but in last 5 years again, it has come to those level, and just couple of weeks back it made low near 330. So the previous level retested again. So on immediate point of view, as per the technical setup, counter is going into the deep oversold, and the major support are again being respected, or some sort of recovery could be seen. However, I don't see major recovery, but yes, minor recovery can be seen with the support of 360. I believe it can head towards 440 to 465.
Okay, all right. So that's the view on Happiest Minds. The next one is coming in on DAM Capital. Raj from Jaipur is holding 452 shares at the levels of 190. He says he's currently still sitting on a loss of around 28% and wants to know from a long-term perspective, can he continue to hold this one or not? Mr. Oklingam, your view?
Certainly, it's a very good stock to hold for long term for three reasons. One, stock has corrected a lot. Valuation has become quite appealing. And second, the professionals behind this company are, the stalwarts in the industry and the proven track record. Third, it's a capital market related business, and I'm extremely optimistic for long term. All such capital market intermediaries will do very well as investor base keep rising. So therefore, I would even give a buy call for long term.
Okay, all right. The next one, I think Mohan is calling us from Bengaluru. Mohan, a very good afternoon to you. What's your query about?
Good. I just want to buy Vatek buyback for long-term perspective. Can I buy the shares at this time?
Okay, Mohan, got your question. I'll take this up with Mr. Oklingam. Mr. Oklingam, your view on Vatek, Vabag, and whether these are the right levels to make an entry?
I am not comfortable with the valuation. The stock also already ran up, not corrected substantially despite the war. So I would not give buy call. I would rather give sell call on every rise.
Okay, sell call on every rise is the view coming in on Vatek Vibhag. The next question that we have is on Bank of Maharashtra. Ramana from Bengaluru is holding 1500 shares at the levels of 64. Wants to know whether to average or hold now. Chandan, your view on the charts?
Yeah, so I think one can hold. I won't be in a hurry to talk about average as of now. Let the counter settle, let the market get a stability. If I look at the price behavior of last 5-6 weeks, it has seen a corrective move from 77 to 61 and now trying to bottom out from last 10 days with multiple support at 61, 62. So I believe some recovery could be seen, but wait and watch. Major support will be around 58 for a bounce towards 70, 72 levels.
Yeah. All right. The next one is coming in from Lokesh, who's writing us from Bengaluru, asking about standard glass lining tech. He wants to know whether it's the right time to enter into this one, considering the unique business that he has. Mr. Oaklingam, I'll come to you on this one. Standard glass lining, what's the view?
I'm sorry, I never studied this stock, so I'm not able to give you.
No worries. Chandan, enough data on the charts to give a perspective?
Yeah, so I think some recovery was seen in this count. Some corrective move was seen in this counter. Let it settle at lower levels. 122 is major support. With the support, recovery could be seen. And I believe on the recovery, it can head towards 160. One good part is that in last 2 days, we have seen a massive the recovery, and the counter has turned from the key support zone after negating lower top, lower bottom. Because earlier, the lower top, lower bottom has taken the counter from 200 to 105. So recovery can be seen with support of 122. Look for a target towards 142.
Okay, of course, stock trading at its day's high point, up 6%. The next one, of course, is coming in from, this is from Ismail, who's writing in, asking about Bank of Baroda. He's holding 154 shares at the levels of 277. Wants to know whether to hold, sell or buy this one from a long-term perspective. Mr. Oaklingam, your view on Bank of Baroda, and also, there's one more question that I was just reading in the chats asking about PSU Bank as a pack as a whole. Give us a perspective on that and your pick in the space.
PSU Bank will come back in a robust manner once war ends. The war is a big problem for banking industry in terms of rising the inflation rate and also bond yield, and therefore possible loss in the bonds they are holding. But let me tell you, this is only a short-term concern. If war is going to be there forever, and then not only the PSU banks, you need to forget the whole stock market. That's my premises. Now, except this war, everything else is positive for the PSU banks. The branch network is helping them in maintaining a very high CASA ratio. And in the last 10 years, they have reduced the net NPA to record low level. Quality of the asset is the best in the last 10 years. And the credit growth in the industry is still, even now, around 14% year on year, latest, despite the short-term disruptions. So, therefore, a bank like Bank of Baroda, which is available at quite a substantial discount to book value, is a very attractive stock for medium to long term. You may not make money when the war is going on, but I believe this is a great opportunity for buying a lot of quality PSU banks for medium to long term.
So that's the perspective on PSU banks, and let's hope that the war ends soon. Otherwise, Mr. Oaklingam, Chandan and I are going to, go out of jobs. Like Mr. Oaklingam said that, if the war continues, we should forget about markets. But of course, on a lighter note, moving on to the next question, Anuj from Noida is writing in asking about Titagarh. He's bought 1,000 odd shares at the rate of 1,200 last year. He wants to know the 3 months target price for this one. Chandan, your view on Titagarh?
Yeah, so if I look at the TWL, Titagarh Vegan, I think some sort of recovery could be seen in the counter. However, we need to keep in mind that these are the high beta name which witnessed corrective move at the time of market decline. In last almost 3 years, it has seen a corrective move from 1,900 to 600. So recovery could be seen, but it would be tough to get much more recovery. So some small recovery or some short covering trigger in the market can give the bargain buying to these names. So with the support of 580, I believe it can once bounce towards 650 to 675.
Okay, all right. So that's the view coming in on Titagarh. We've got our next caller. I think Syed is calling us from Dubai. I hope I'm pronouncing your name correctly, and I hope everything's well at your end. Go ahead and ask your question.
Yeah, all good here. I just have a quick query on Asian Paints. Is it the time for a fresh entry for a long-term investment?
Okay, got your question. Mr. Oaklingam, I believe that, and this is a consensus view right now for paint industry as a whole because of rising crude prices, it's advisable to stay away. But what's your view on Asian Paints?
See, in the short term, if war ends, oil is going to crash. Even last 12-15 hours, oil fell down by $10, but then after Mr. Trump's speech, again bounced back. So oil will crash the moment war ends, and that will give a short-term trigger for paint companies. So there is a possibility of 5-10%. And such thing happens, it should be used to sell paint company stocks. That is my strong view because, the input will not create a problem, but the major structural change happening in the industry is a big negative for paint companies. The new capacity being built by two large industrial houses is going to be nearly 50% of the existing capacity. That's going to impact the paint companies in the short to medium term. It's going to take at least 1 or 2 years for these companies to come back to strong growth path. So hold it. As and when oil price crashes and stock shows some upside trigger, one can use it to sell the stock.
Okay, all right. So that's the view coming in holistically on the paint space. The next question that we have is on ITC hotels. Our viewer wants to know if this is the right time to make an entry into this counter. Chandan, your view on the charts?
Yeah, so I think now it provides a good opportunity. However, we need to keep in mind that don't buy entire quantity at one go. In last almost 8 months, ITC hotel corrected from 253 to almost 137. Now it looks good in terms of risk reward ratio, but at the same time, counter has gone into the lowest or lifetime low level. But yes, overall, if I look at the business and company point of view, some recovery could be seen the way price is reacting from last 7-8 days. So multiple supports are visible near 140. With the support of 150, one can accumulate for an upside target towards 160. And I believe some sort of recovery could be there in this industry as well.
Okay, all right. So that's the view coming in on ITC hotels. The next one is coming in on IDFC. Our viewer wants to know at the current levels, is this the right time to buy this counter from 2 to 3 years perspective? Mr. Oaklingam, would you advise that?
Certainly, yes. It is now close to one-time book value. It has got a credible track record. One is not going to create an enormous wealth because the equity base is so huge. And competition is very strong in the banking space, but it's a quality company, bank available at 1.1 time adjusted book value, which is very, very attractive considering the track record. And as I already mentioned, the industry tailwinds are also very positive. It's a very good stock for buying for medium to long term.
Okay, all right. We've got our next caller. Mansingh is calling us from Andhra Pradesh. Mansingh, a very good afternoon to you. I believe you have a question on Transrail lighting.
Madam, I want to change that query to KP Energy Limited, madam.
Sure, go ahead, ask your query.
I'm holding 200 shares, madam, at the average price 380 rupees, madam.
Okay.
Should I stay invested or should I average at the current price or any downfall? I want to know from Chokri, sir, madam.
You said KPIT Tech, right?
No, madam. KP Energy Limited.
KP Energy Limited. Okay, Mansingh, got your question. KP Energy Limited is what he's asking about. Mr. Oaklingam, any view on this one?
One can hold it after the correction, and valuation also shrunk largely. But I would hold it for a short to long, medium term only.
Okay, all right. The next one is coming in on BSC, and this is directed to you, Chandan, specifically. Shikha Kapoor from Bareilly wants to know if this is the right time to make an entry into this one, right levels. Chandan, would you recommend that?
Yeah, so I'm quite positive on this counter, and the good part is that even after the market correction, this stock has not corrected. In fact, the resilience and clearly the support-based buying is intact in the counter. However, it didn't witness the momentum because of the market weakness, but I believe if someone is holding this counter, it has potential to give further 10 to 15% rally. So my suggestion is accumulate this counter at any small decline, keep the major support at 2550, and slow and steady this counter has potential to rally towards 3200 to 3550 kind of levels.
Okay, all right. The next one is on Anantraj. Our viewer wants to know if this is the right time to maybe make a fresh buy on this one. Chandan, I'll stick with you again for this one, trading at its day's high point almost. But do you think this is the right time to make an entry?
So the good part is that in last almost 23 months, multiple time it took support near 375 to 400 zone. This time also it took the same. And after the massive correction in last almost 7 months, the counter has seen a corrective move from 740 to now almost below 400 marks. So risk reward ratio seems to be positive. And if data center story works, then this counter can do well. One can accumulate multiple tranches with major support at 420 for an upside target was 480 to 520.
Okay, all right. So that's the view coming in on Anant Raj. Chandan as well as Mr. Choklingam, it's time for our rapid fire round. You both know the drill. Try to keep your answers as short as possible. The first one is coming on Kane's Tech. Mr. Rao from Hyderabad wants to know whether he can continue to hold the 39 shares that he has, but he's sitting on a 26% loss for the next 3 years. Mr. Choklingam, your view?
Yeah, one can hold, considering the recent commissioning of semiconductor plant.
Okay. Sagility India is the next one. Sunita from Hyderabad is holding at the levels of 37 apiece, if I'm not wrong. Wants to know if she can continue to hold this from a short-term perspective. Chandan, your view?
Yeah, can hold, and those who are looking to buy this counter can also buy for 15-20% movement.
Okay, Reddington is the next one. Bought at the levels of 280. Right time to average it down? If yes, and what should be the target price? Chandan, your view on this one?
I think let's wait for more decline. Let it correct towards 180 to buy.
Okay, Patel Engineering is the next one. Our viewer has bought it at the levels of 42 rupees and 45,000 shares is what he's bought. Should he continue to hold, Mr. Choklingam?
Yeah, one can hold. The valuation is attractive after steep correction in the stock price.
Okay, HAL is the next one. HAL, bought at the levels of 3,800. Whether to hold or sell from a short-term perspective. Chandan, your view?
Hold, it can head towards 3850 to 4,000.
Okay, Genus Power and Infra is the next one. From a 6 months perspective, Pawan from Delhi wants to know if you can continue to hold this one. Chandan, your view on the charts?
Already seen a massive correction, so now can hold for recovery.
Okay, the next one is on Inox Wind. Srinivas wants to know a fundamental view on this one, whether he can buy, sell or hold. Mr. Choklingam, your view?
One can hold it.
Okay, Bajaj Finance, 6 months view on the chart is what Narayana from Andhra Pradesh wants to know. Chandan, your view on the charts?
Yeah, for 6 months can hold.
Okay, the next one is coming in and this is from Sridev, who's writing in and wants to know whether to invest into Swiggy or Eternal at this given point of time. Mr. Choklingam, any view?
Eternal is better than Swiggy in my view.
Okay, the next one is on Trend. Our viewer Vishal from Dubai is writing in, wants to know if he can continue to hold the 20 shares that is bought at the levels of 6,550 or switch to HCL Tech or TCS. Tricky one, Mr. Choklingam. Switch of sectors is what he's making. Would you recommend that?
I am not optimistic about technology sector. It's better to hold a trend than buying technology stocks now.
Okay, Divis Lab is the next one. Sunita wants to know if she can average. She's bought it at the levels of 6820. Chandan, your view on the charts?
Wait for some more consolidation.
Okay, the next one is from Srishti, who's writing us from Bengaluru. Wants to know which hospital stock is right now attractive enough to make an entry right now from a long-term perspective. Mr. Choklingam, your view?
For conservative investor, Apollo Hospital. For little risk taking, small cap stock, Actimis, Medicare.
Okay, Biocon is the next one. Is this a good time to enter? I think Chandan already answered this. Mr. Choklingam, your view?
Hold it for short term. For 5-10%, one should exit it.
Okay, all right. That brings us to the end of this round of rapid fire. Chandan as well as Mr. Choklingam, thank you so much for helping us answer all those stock-related queries. Viewers, thank you so much, of course, for taking out the time. We're completely out of time on this edition of Ask Profit. But do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
What's up, Pune? आ रहा हूँ मैं with a night never ever experienced before. My story told song by song, performance by performance, missile power jaisa spice और पुणे वाली energy gonna be crazy and madness. Book your tickets now on District.
Straight from the Garden City, the final leg of the NDTV DP World PGTI Golf Pro-Am lands at the lush Clover Greens Golf Course and Resort in Bengaluru. India's elite golf professionals team up with the region's top corporate titans, from explosive drives off the tee to nerve-wracking pressure putts on the green. Witness the perfect blend of sporting excellence and executive networking.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life. Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How? The show that sets the prime time agenda. We'll be deep diving into this topic to tell you what's at stake. Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New Year.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Hiral Dadia. Hiral, if you thought that you should switch off the television at market open because things were not looking good, you didn't do the right thing, right?
Absolutely, because I don't think so anyone anticipated this kind of a recovery that's coming in. But I think it's mainly the shorts which are getting covered ahead of the 3 days of holiday, right?
Yeah.
I mean, 22,684, you're at the day's highest levels, just on the cusp of getting into the positive terrain right now. The question is, who is leading this recovery, Alex?
Absolutely. And let's look at the components of the Nifty 50, because remember, when we started the day today, it was a sea of red. There was only red on the screen. There was not even a smidge of green. It is the IT companies that are leading the gains. There you have it. HCL Tech with 3.5% gains, but all 5 of the top gainers are in fact IT companies.
Yeah, and if you see in terms of, Pharma, which was also under pressure, mild recovery coming in on that front, because I'm seeing a Dr. Reddy's, which is seeing some mild gains there. Cipla also, from the kind of cuts it saw, it's now down only 0.4%. Sun Pharma, which was down 4 to 5%, is now seeing cuts of 2.5%. So it's a recovery across where you've seen. Let's look at the banking counters as well, because that's what is in focus. From an Axis Bank, ICICI, all of them are in the negative. HDFC Bank has turned into the positive with gains of 0.8 to 0.9%. So that is contributing in today's session. And Reliance Industries,
down,
which is
1%.
still down 1% right now. But good recovery in banks, good recovery in terms of IT is what I'm seeing right now, along with little bit in terms of the consumption side, where you have a Trent, you have a Nestle, which are seeing some good moves in today's session.
Yeah, let's pull up the contributions chart and just showcase this, because you're going to see Reliance Industries over there. ICICI Bank also making it into the list, but Sun Pharma in it, Eternal. It's been a while since HDFC Bank featured in the green territory. It is in fact the top gainer today.
It's even Stevens for a Reliance and HDFC. They're
cancelling
doing the balance,
each other out.
they're balancing out what's happening. So basically, then your focus now should be on Sun Pharma, Eternal, ICICI versus the IT pack, which is one way to this, Yeah,
let's pull up
broader markets.
Let's pull up the sectoral indices as well. And right on the top, on the left, you will see the IT index doing particularly well. It is in fact up as much as 2.7% and largely leading the charge for those stocks that are currently in the green. It is a large amount of red, but we're significantly off the low point of the day for the Nifty Bank in particular, and Hiral will indicate that on the screen right next to her. It was down about 2.5% at the start of trade today, and it has come off over 2% from that low point of the day, now trading with cuts of just about 0.4%.
Yeah, and the recovery that's coming in terms of real estate, metals, is also, it's noticeable right now because it's back into the green. Let's look at the broader markets, and then we can just look at NSE 500 components as well. If you see in terms of broader markets, clearly the recovery seems to be pretty okay, but we're still down around 0.7% on the mid cap 150, and if you have to look at the small cap 250 as well, similar kind of cuts coming in there. Let's look at the advanced decline ratio, and then we'll look at NSE 500, because the advanced decline ratio as well, you're seeing that kind of convergence that's coming in, and the recovery from 202 stocks that were only trading in the positive terrain when we opened up, that's moved up quite a bit right now, and your declines have come down. So this is the important factor that you need to watch out for, which is clearly telling you that shorts are getting covered at this hour, and that's the reason why you've seen that kind of a recovery that's come in terms of markets. But let's quickly look at the factors, Alex, in terms of markets, unless you want to just look at a few of these stocks.
No, absolutely. Some of these names from LTI Mindtree, you have Coforge, you have a few other Latent Views doing particularly well.
I think it's an order win or an investment in one of the AI companies.
But equally, your chip manufacturers are not doing particularly well, because one assumes that this has to do with helium shortages and various other factors in the supply chains that are getting affected. But Dixon as well as Amber not doing particularly well in trade.
Companies, SRF, you have, a Naveen Fluorine trading under pressure.
We were talking about why this morning about the
custom duty which has been removed in terms of imports.
Absolutely, and so the China factor comes into play today. But what are the factors that you would talk about?
Do you know what's interesting right now is it's mainly a technical reversal which is happening in terms of where markets are concerned. It's IT which is leading the pack, as we mentioned. Moving from there on, if you see the stronger rupee that has come in after the RBI intervention, how sustainable it is going to be seen, because 220 paise is the kind of recovery that we've seen in terms of where the Indian rupee goes. And the value buying in terms of the SMIDs continue, and that's what everyone is talking about, because your fund managers have been of the opinion that the bottom has been formed, and from here on the buying that could be start. Short positions are unwinding ahead of the long weekend is what we're indicating, and that minor jump in VIX after Trump's address is what we've seen, but that is also slightly cooling off in today's session. So clearly, the markets have actually been acting in tandem with Trump's speech, because we started off the day where we were seeing a pre-open gap up of around 65 points, and after the speech it was a gap down of almost 450 points. But from there on, the recovery is something which is the key, Alex.
Absolutely. In fact, let's go across to our first guest of the day, and we've got Rajesh Palvia as well as Vineet Bolinskar joining us today. Rajesh, I'll come to you first, and good afternoon to both of you gentlemen. I'll come to you first, Rajesh, on the recovery that you're seeing. How much of it is, as Hiral is pointing out, the covering of shorts ahead of a long weekend where traders at this juncture don't want to be taking any chances at this moment because anything can happen over the weekend?
Good afternoon, everyone. So looking at the recovery, it clearly giving us confidence as Nifty able to protect 22,200 support area, and very strong short covering is played out in this recovery. So most of the call writers have covered their position. Those who have sold calls at 22,500, 400 strike in after this gap down opening. So that covering is clearly giving us sign that and the broader market is also recovering. Beaten down sectors are also giving a sign of pullback from their recent swing low. IT is also contributing in this upward momentum. So I think this recovery can extend till we are trading about 22,560. Our view is that this recovery may extend further, though there is an uncertainty towards the news flow which is coming every day. But looking at the recovery, which is the commitment to the market from the traders that they have covered their position, short positions has been trimmed down. So I think 22,560 needs to keep as a stop loss for Nifty spot. If we close above these level, I think there is a possibility again to revisit 23,000 level in the coming days. So we are holding long position with stop loss of 22,560 at this juncture for Nifty. Bank Nifty is showing sign of recovery, but 51,600 where we are keeping eye for Bank Nifty spot level. If we able to take out this 51,600, then here we may see some short covering action to play out, and furthermore recovery towards 52,000, 52,200 we could see for Bank Nifty. At this juncture, those who are already on the long side of trade should trail stop loss at 50,900 to hold the position, as still some of the banking stocks are showing sign of recovery, but some large cap banks are still struggling to negotiate with their near-term resistance area. So I think another couple of 300 point in Bank Nifty can give the breakout of most of the large cap stocks also on the near-term chart, where we can see further more contribution for the Bank Nifty also.
Okay, so those are interesting points that Rajesh is making right now as well, because the recovery that's coming in, if that is going to sustain, it is going to be key to see what can you actually look at buying. Rajesh, a quick view in terms of your top picks.
So some of the stocks where we are focusing is first one is Titan. Titan is looking attractive. The way stock is now trading near to day high, stock managed to give breakout of falling trend line on the daily chart, and now negotiating with its 20-day moving average. Looking at the structure, we believe that here we could see momentum to extend further. 4,200 where we are projecting target for the stock. On the downside, 4,040 needs to keep as a stop loss for Titan. Another basket where we feel that continuity of uptrend would be there is from the metal space, and I think in the metal space one can focus on Hindalco. We are projecting target of 940, 950 for Hindalco. On the downside, 900 needs to keep as a stop loss.
Got it. Okay. Let's go across to Vineet Bolinskar very quickly. Vineet, before we get into individual stocks, your initial thoughts on the recovery that we're seeing right now and the takeaways from this morning, which I think a lot of people have called a non-event for good reason. I'm talking about Donald Trump's broadcast in the morning, talking about the action that has been taken and the fact that the operations are likely to continue in that region for the next 3 weeks or odd, and exhorting various other countries to come and control the Strait of Hormuz. What do you make of that from the perspective of the Indian markets?
There are two things that are takeaway for us. Is one is that the war scenario is intensity is done with, is number one. And will the war end immediately? Not at all. It's going to play out in the way that Ukraine and Russia has played out. So there's going to be long drawn out skirmishes happening. There are other fringe elements, players getting into play. But the bulk of the damage which is there has been done. Second thing, what we have to understand is elevated prices are going to be continue to sustain because the supply chains are broken. So as long as things do not get completely out of hand in terms of oil price spikes, I think for the time being the bottom is done. And generally, we've seen April emerge as a very strong month where buying happens. So if you look at the historical basis, I think we will see a recovery play out in the short to medium term.
That's an interesting view coming in there. In fact, yes, April seasonality always tells you that you've closed in the green 8 times in the last 10 years in the month of April with average returns of 3%. So let's see if that actually holds water in 2026 as well. But moving on, as the stock of the day, Latent View, that stock is in focus on the back of the deal that they have done with Healthion AI. Now, Jasmeet is here to tell us more. Jasmeet, what is it in this deal that is making the stock react so strongly, because it's at the day's highest levels, 15 to 16%. What is it that they gain?
Well, Hiral, thank you for that. If you look at this particular counter, the stock is gaining on the back of the development it has been doing in the AI side. If you look at the recent development, the company has done an investment of $3 million for 27 odd crore into the Health on AI. So Health on AI is a healthcare tool that helps company manage the overall revenue cycle management. Now, if you look at the other deal partnership and how this deal will strengthen the company altogether, is it will help the company to gain more orders on the healthcare side of the business and help them overall analyze and make the healthcare side more AI proof. While further, the partnership targets to automate the healthcare revenue cycle management side of the business, and company will be a preferred partner when it comes to development of overall Health on AI, given that company is now a part of that. So any revenue that company earns, the company will be earning a part of it, given the Health on AI is company is now the investor of Health on AI. Now, in terms of the other categories, with this investment, company aligns itself to become AI first organization going ahead. A bit about Health on AI, what exactly the company does? Well, the company is specialized in agentic AI framework for RCM. Now, what that means is this particular tool helps the companies cut the cost and also reduce the denial leakages that generally healthcare providers face due to the insurance policies. Now we have a slight deep down about Latent View as a company and how it has performed in the past. If you look at the overall figure, Latent View operates into the AI analytical space. And so far it was the only company, but we also have Fractal, which recently got listed. So here's a slight comparison. If you look at the overall margin side of the business, Latent View stands stronger in terms of FY25 margin, where Latent View has a margin of 23% versus Fractal at 30%. If you look at the overall other aspects, Fractal's operating exceeds Latent View, given that Fractal is a high cost model and the costing is roughly 1000 BPS more than Latent View. Lastly, in terms of the employee cost of Fractal is high compared to Latent View, up almost 17%. Given Fractal gives employees a lot of the stock options, that's why the Latent View has this lean model. That's why they're able to hold up higher margins, and compared to Fractal, a more profitable business, you can say, for Latent View. Now, in terms of the other key valuation aspect, the current P valuation for Latent View stands at 40.5 times its overall 12-month average, and the forward 12-month PE is 25 times. In terms of Fractal, slightly expensive, stands 58 odd times, and the 12-month PE stands at 40 odd times. Lastly, in terms of the ANR and what the street's expecting on this particular stock, the stock is roughly around 35 odd % over the last 6 months, and the return potential for next 12 months stands at 63 odd %. And currently, we have 3 buyers in this particular counter. So all in all, fundamentals remain strong for the company, but the stock has tanked nearly 35% over the last 6 months. With this new deal in AI, something that's pulling the stock up today in trade.
What is that thing you're saying on ANR? What is ANR?
Analyst recommendations.
Ah, okay. So by the way, that's a function on Bloomberg,
Yes.
in case you're wondering.
So that's with regards to, what brokerages actually make out of this deal as well. But Vineet, your quick view, if you have to look at a Fractal versus a Latent View right now, How would you look at both these counters? And in addition, next week you will have IT companies which will start reporting numbers soon. So your view on the overall aspect?
Firstly, commenting on the, overall IT view is stay away. Agentic is coming in a very, very big way, and it's going to pressure top lines of companies. So I believe that, there is still some lot of selling pressure remaining out there. As far as latent view and fractal are concerned, I think latent view offers better prospects, given the fact that, we've seen them, we've got a little bit of history around them. They've been doing well. And I believe that this is the company to look at, because I think it is still more cheaper than fractal as such.
Okay, so that's the view coming in. Rajesh, your view in terms of IT, because a lot of, fundamental analysts are still calling out IT as probably a sector of 2026 or a pharma that could replace a IT in 2026. On the charts, would you be a buyer of any of the IT majors?
So still, if we look at the long-term structure, most of the structures are already damaged. And looking at the IT stocks, especially in the large cap IT stocks, some of the stocks are, trying to defend their, previous swing low. So some pullback action cannot be ruled out in IT stocks from current level, as the process of near-term, bottoming out is taking place. Stock like Infosys, TCS are, showing some bit of, buying interest at lower level. But for a longer view, still we are holding the negative view for IT, as long-term charts are still not showing any sign of recovery or damage recovery. For Infosys, yes, one can play for pullback trade. 1400 could be the next target for the stock in next couple of weeks if stock able to defend on the downside towards 1220. That's the stop loss one needs to keep for Infosys. Some of the mid-cap IT stocks have shown good buying momentum, especially in today's session. And from that space, I think Coforge is another stock where we are focusing. Here also, there is a sign of near-term bottoming out is taking place. And looking at the breakout on the near-term chart, we believe that, if stocks continues to hold above 1160, 1170 zone,
Yeah.
I think there is a possibility of 1350 kind of target for Coforge.
Got it. All right, gentlemen, on that note, thank you so much for taking the time. Vineet, as well as Rajesh, pleasure having you.
Thank you.
All right, let's speak now to Andrew Ferris, who's Chief Executive Officer at Ecognis's Advisory. Andrew, thanks so much for taking the time, and pleasure speaking with you. First, let me ask you what your view of the current conflict is. And a lot of people had thought about a month back that this would be done in a week. That was challenged by everything that Iran subsequently did and the way that they're currently holding the Strait of Hormuz. This morning, you had President Donald Trump that exhorted a lot of the countries that depend on the Strait of Hormuz to step in and take control of the strait. How likely is that scenario in your opinion?
Three things. First, I tell my clients when they are looking both at their portfolio and investment decisions that this is going to be a war which is going to last, read my lips, years. Not in the same way it is going on now. I'm not suggesting for one moment that for year after year the United States will be bombing, as will Israel, Iran in the same way. But the war will not finish, will not be won by United States or Israel, okay, and it will be a long, drawn-out process. Second point, that is incredibly bullish for defense stocks. I have been saying so since February 22, when the war with Ukraine started, and I will scream it now from the window. Not every defense stock, but Asian and United States defense stocks have massively outperformed the S&P with significant numbers. I mean, on average, they have done it more than double over this particular time period. So I'm afraid buy the instruments of war. I'm sorry, it sounds very cynical. It sounds even possibly immoral, but in a sense, it is good value for money. And the third point is can we please stop incessing about Hormuz? we are being told that 25% of all global oil comes through Hormuz. Well, how about the other 75%? Why can it not then be diverted to the countries that rely on Hormuz? Can it? Of course it can. Not overnight, not cheaply, but if we look at the example of Russia and Ukraine and the European Union, when the war broke out, the European Union was about 40% dependent on Russian gas. A couple of years later, and right now, 20%. They simply removed Russia from their main spectrum and managed to get gas from other places and also transport it from other places, as they could not use, of course, the Russian gas pipe. So Hormuz is not really a huge issue. And in particular, when one begins to break it apart, as I have done it for my clients, we are going all to starve because fertilizer can go through. Now, people really don't know that fertilizer and crops are interchangeable units. Wheat is very fertilizer dependent. Okay, soybeans is not. So you can switch from wheat to soybean and soybean back and save a great degree of fertilizer. So the idea is that fertilizer is a single item, a single good. It's simply nonsense. Incidentally, the price of rice in the global market is its lowest it has been for a very long time. It hasn't gone up. The price of wheat and maize went up and then has come down again, approaching average or let's say relatively recent levels. So the idea that closing Hormuz is going to starve us and is also will let us freeze to death because we don't have natural gas. China has shifted massively its sources of energy from carbon fuels to...
Dr. Fredis,
okay,
the point that
I'm sorry.
No. And you make good points. But the long and short of it essentially is what you're saying is once this shock is done, the world will find ways in which to find alternatives. Let me ask you a different question though, which is that in the interim, prices have gone up. Crude oil continues to trade above $100 and the real price of crude is well above that. If we're looking at the price of Brent crude, it's at 105 or thereabouts, but the actual physical cost of crude is significantly higher. So the question therefore is on the macroeconomic front, if inflation is going to flood the world and if monetary authorities are going to have to raise interest rates in a scenario where economic growth is likely going to be slower than previously anticipated, is it going to cause problems for countries, for their finances, and for economic growth in the near to medium term?
Let me start straight away by being almost rude by saying the idea that we're going to be flooded by inflation is nonsense, complete nonsense, because it assumes that the only thing that puts prices up is oil. It also assumes that the secondary impact of increases in oil are the same amongst all economies, and it is massively different. I have seen and I have done numbers of the impact on the Asian CPIs of either a 10%, or for that matter, you can multiply it anything you want, of an increase in crude oil, and the impact could be anything from 10 basis points to 100 basis points. So it's not true that all countries are going to see inflation accelerating. China, for example, the second most important economy in the world, will not. It has a CPI which is crawling around to less than 1%. I suspect the Chinese will be delighted to see that their deflationary economy is going to be given an inflationary push. The second point is the dependence on oil. 60% of oil is used to drive cars. Okay, I'll repeat that, is used to drive cars. It is and of course fly planes. It is a process of moving things around. So in other words, there are substitutes, enormous amount of substitutes for the things that move things around. And I'm not suggesting we're all going to be driving electrical cars in the next month, but China is already doing that and other countries will. The most pleasant thing about this is that this shock of the increase in oil prices is going to lead a very large, fast and consistent move away from oil as the use for the source of energy. It's going to be absolutely great.
Good point that you make. The question is, how long does that transition take? And for looking what has happened to Europe,
Okay, when they also had to move very quickly from their central heating systems from gas from Russia to somebody else, it took about a year.
Oh.
And they suffered with high prices. Yes, it will. I know it sounds very nice for me sitting comfortably here in my chair and say to people, prices are going to increase.
Yeah.
I'm sorry, my business is to look at the instant impact and also, is it true that we are all going to die? The answer is
Yes.
no, it isn't. And
In the long run. But I take your point, Dr. Ferris. Absolute pleasure speaking with you. Thanks so much for taking the time. Okay, I was talking about John Maynard Keynes.
Yeah.
Are we going to die in the long run? Yes, indeed we are. But the point that he was making was a good one. That in the next 1 year or so, alternatives will be sought if the conflict does not get over.
I mean, see, that's the eventual solution, right, to anything. But the question is, how much can someone wait? And are we going to really wait for that 1 year to get an alternative? That's
his point is that the alternatives are starting now. It'll take 1 year to
fructify.
pan out.
Agreed. But I think that's too long a time. But okay, that's where we should leave that conversation so far. But, to take this discussion forward, we have Ajay Sharma, President at Edelweiss, who's joining in at NDTV in our studios. Welcome to the show, Ajay. Always a pleasure to speak to you as well. My question coming to you here is, you've been analyzing the situation pretty well, and you've been speaking about the shift from this traditional kinetic warfare coming to a asymmetric and systemic conflict, right? Based on the report that you've released so far, what is your initial assessment of what's happening and the eventual, outcome that we could see?
Okay, pictorially, if I have to explain it to you, think of a typical Brahma, Vishnu, Mahesh curve, the S curve in MBA, right? The traditional war is at Mahesh phase. The big weapons, Loha, Loha, Loha. And everything asymmetric is at the early, I'd say, Vishnu or, that phase. And what I mean by that is just think of an aeroplane. I'll explain it very simply to you.
Yeah.
America is saying Iran doesn't have aeroplanes. They don't have an air force, they don't have a navy. Do you need an aeroplane? What was aeroplane's job? It was an eye in the sky with a bomb. If you have a satellite over it and you have missiles to target which are precise, do you need an aeroplane? You don't.
Or if you have Shahid drones.
And then if you have Shahid drones. And the other thing is, think of it this way. Everything is a weapon now. It's not the stuff that you make from steel and forging. For America, if you have sanctions, SWIFT is a weapon. Their payment systems is a weapon. Geography is a weapon, right? GPS is a weapon. You not get access to navigation. So what did China do? They created their own payment systems, their own BIDAO satellites, which they've given to Iran. So if everything becomes a weapon, your dependence on a type of weapon, which is the old type of weapons, is much lower. And finally, if you weaponize geography and you weaponize time, right? So if I have to summarize the war the way I think about what's happening in a single sentence for you, I'd say America and Iran have bombs. The world, including us, has watches.
Yeah.
But only Iran has time.
Right.
We are all looking at watches. Kab khatam hoga, when's this going to end? But only Iran can decide when this ends. And the more it delays, the worse is it for all of us, especially India. Right? So that's why sorry, go on.
So the gambit, therefore, and what you're suggesting is ultimately it depends on weaponization of geography and weaponization of the control of that strait. The assumption here, though, is that a major military action cannot be taken with feet on the ground that will disrupt that. Is that something that you factored?
Okay, so let's run scenarios. Okay, I'm a student of history.
Yes.
Okay, all of us are. The only strait that was ever controlled for centuries was by Romans in the Mediterranean Sea, when the whole sea was under their control. The British had Suez Canal for what, 74 years?
Yeah.
With Egyptian insurgency and the help of Russia, they had to give it up.
Yeah.
So no strait you can control unless you control both sides forever.
Right.
Let's assume you control 300 kilometers. I'm just thinking, see, I'm not a defense expert,
sure,
but just from history.
Sure.
You will control 300